up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no. Just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Tuesday to you both.
Hello.
What's so happy about this Tuesday, son?
Well, today I woke up and all three of my fantasy football teams are in first place.
Congratulations. That's impressive.
I'm still in first place in my confidence pick'em. Thank you. In my confidence pick'em, despite this being a rough week, this was my first week below 50% of the points.
Okay.
Available. I only got 8 of 21, which is tough.
But everyone else was much worse then.
Yes.
Yes.
He had a little bit of a lead.
Yeah.
Oh, I see.
had
A cushion.
I still have a cushion. I have
Okay.
a 17-point lead, which is a week is 21 points.
Oh.
Took all the points.
Is that where it ends?
No, I got some best balls that are.
Oh, wait, but you don't make... Can I ask a stupid question? You don't make money every week. Like, you don't make money in fantasy till the end, or do you
No,
do
but
make
this is a
money?
big pot.
You make money,
70% go to the first place.
but you don't make money every week though.
No.
Oh, okay.
No, it's over.
Okay.
It's a cumulative total points by the end of the year.
Okay. Right.
But I had one. This has been like my worst week.
Okay.
So
He's reeling a little
coming
bit.
back to earth, you know.
It's always the way it is. You know, whether it be trading, whether it be anything else, you always get hot and you get a little cold. And you hope that your colds aren't as bad as your hot, and then you just keep warming up after that.
Sure.
You gotta look for it.
Sure.
It's not how you stay up, son. It's how you get up after you've been knocked down. That's
I
how.
thought you were gonna say it's not how you start, it's how you finish.
That's my
the
next
easy
one. That's how
you went a little bit.
We're a little too deep into the
you
woods.
you
Right.
made your own
It's
out
not
of
how
it.
you start the race. It's how you finish.
Yeah.
Did your insure just kick in? What's going on?
I don't think I've had a Sure. Is that like a drink?
Yeah.
I think my mom used to take it
Sure.
back in the day. Yeah. Like a bone building thing or something like that.
Yeah, just like a protein shake or whatever that you can drink to. Yeah.
For elder millennials?
For whoever.
For whoever? Okay.
Forever.
All right, cool. I'll put it on my list. For sure. I could do that.
So what'd you get up to last night?
It was Monday, half a martini night.
So a teeny?
Like a teeny martini. Yeah. My wife and I split one because it was Monday.
Oh.
We got discipline.
Cute.
Yeah, we got discipline. You know how it is. But it felt like that kind of night. It was that kind of day in trading. It's been that kind of, couple of days in trading. So I figured, you know what, just a half. So just get a little
Were
edge.
A
you
little taste.
Yeah, a little taste.
were you drinking in your igloo?
No igloo.
Will she go in there?
No, Chris doesn't go in the igloo.
No, Chris doesn't go in the igloo.
Oh, it's just it's a man igloo.
Yeah, that's why.
Yeah.
That's why it's hidden around the corner from the house now.
Nobody can see it.
You know what? That is a boss ass move on her part. She's like, I don't want to see it.
Yeah.
Put it out of my sight.
Yeah.
That is a baller move.
Every year it moves like a couple feet further.
I'm going to be in the park next year.
Yeah, well, next year it's probably gone.
No, dude, put
No, last year it was gone. I resurrected it this year. Last year I didn't put it
Yeah.
out at all.
some respect on Chrissy's name.
You find it slashed open next year. Oh no, something must have got into it over the winter in the garage or something.
I know.
She's like, everything the sun touches is mine.
Yeah.
You put it over there in the shade.
Yeah, she reminds me of that.
Yeah.
She reminds me of that.
Good.
Yeah.
My dad used to say, "Open the door, look out there. I gave you everything."
Everything. make your
all
world.
of that.
That's right. The whole he left you the whole world. You make your bones. That's
Yeah,
right.
that's a good one.
100%.
So you and the wife, you and the missus split a martini, and then
Yeah,
just
that was
watch
it.
some Netflix, and then that's
We
it.
did. We watched. It's great. Kingstown. Absolutely.
Mayor
is
of
that?
Kingstown.
Mayor of Kingstown.
Oh, the new
Another
season.
Taylor Sheridan.
Yeah, but he gets unlike what was the other one that just came out? Landman.
Yeah.
First episode of Landman, very weak. Even though the Ali
No
Alana was
partial
in it.
nudity.
No, I mean even though she was in it, you know what I mean. But it was a weak episode. But Mayor of Kingstown, They get right into it. It's
Yeah.
gritty. It's dirty.
But this has been
is
a
good.
couple of seasons.
This is the third season.
Okay,
maybe.
that's what I
It's third
thought.
or
It's
fourth
not. It's
season.
not a new.
No, it's not new, but it's
Yeah.
awesome. If you haven't watched it, you have to watch it. Mayor of Kingstown. Good
It's-
acting. Good, gritty, dirty, like street dirty, not like,
Yeah.
Not
Is it
not-
Mayor?
not nipple.
Is it mayor like MAYOR, like leader,
like the
or
mayor, like,
MAR? Is it about a sassy horse?
No, it's about a guy who controls the prisons from the outside, and they call him the mayor of Kingstown because he helps the cops and he helps the bad guys. He goes in that kind of dark
area.
world of both sides. Very good. Very
What,
good.
what year is it?
Present.
Oh, it's in current day. It just
Yeah.
sounds old timey. I know nothing about the.
No,
Okay.
it's very
okay.
cool. It's very cool.
That's cool.
Very gritty, very cool. Everybody will like it. Husbands, wives, good. You'll like it.
Okay.
Yeah, yeah.
Good to know.
Yeah.
What'd you do? He?
Make you not want to go to prison too.
Did you?
No, but sometimes they glorify it. They don't glorify it in here.
Yeah.
It's good. It's good. Check it out.
I don't have anything to come back from that.
If you
So
ever think about going to prison, you won't think about going to prison after you watch this. But go
I
ahead.
don't. One of my favorite hobbies. It's not really a hobby. I just like to watch YouTube or whatever, like YouTube TV, like the videos on YouTube on my TV. And so there's this guy.
Brain rot.
Yeah, yeah.
It's called.
Well, I work in the evening, so I like to just have it on like doing other stuff. But anyway, there's this guy that I like, and every couple of days he goes to Costco, and all of his videos, he's so excited. I don't know his name. I wish I did. I would give him the big shout. But he's like, here are the deals at Costco this week, and I'm like, oh, okay, this is really good. And I'm like writing stuff down because he
You
goes
can never
up and down
find it
aisles.
when you get there, though, right?
No, but I can. So here's what I found, and this is so boring. But he was like,
You brought it with you.
well, I used it. It was in my purse.
Oh.
So it's a Jiffy Lube gift card. Again, I never would have found this. So shout out to this guy's YouTube. So it was
no free
100
ads on this now.
No free. No, but it was $100 of Jiffy Lube, right? But you only pay $75 for it. So I needed a brake flush. And my Toyota dealer was like, we're going to charge you like $179. And I'm like, get the F out of here. I called Jiffy Lube. They're like, oh, it's like $110. So net, it was only $85. And thank you to
50% off. Good job by you.
yeah, because then when I got to the Jiffy Lube, I was like, do you guys even take these? And the guy's like, yeah. And I'm like, you'll take them both? He's like, yeah. And I'm like, yay.
That's awesome.
That's a
So that
good.
was my exciting evening, just hanging
They
out.
do that with a lot of like let us entertain you restaurants.
Yeah, they have
too.
AMC
They'll do-
gift cards. They have like steakhouse ones,
Yeah.
but my two, I'm paying it forward. If you're a parent and you have kids and they need oil changes and they're not just it's a good gift for anyone. The Jiffy Lube gift card. I don't know what.
Yeah, nothing says love like a Jiffy Lube gift card. I mean, yes. Merry Christmas. Merry Christmas.
Yeah, but if your love
You
language.
got 50% off on
If
something.
your
That's
love
awesome.
language, like my dad, his is acts of service. So my dad shows me he loves me by oil changes.
That's fair enough.
So,
Fair enough.
So for some people, that's their love language.
Yeah, whatever works. 100%.
So I'll like wake up and my dad's like, I took your car in. And I'm like, okay, thanks.
Yeah, no, that's a good thing. That's a
Yeah,
good thing.
so-
I remember I should have been a better parent. Sasha didn't put any oil in her car for whatever. She needed a new engine. So I mean,
that'll seize.
You're right.
Yeah.
I could have taken some parenting lessons from your dad. It would have been much better. It would have been much better. So
Anyway,
That's the easy one though. That's the one where you just you do that like every like,
yeah, 6 months, 3 months,
Yeah.
whatever you think about it, whatever you remember.
like like
I mean, the idiot light comes on. I mean, I
Yeah.
wonder what the light does.
I will say
remind
though,
you.
to be fair, because
Like you're-
I own this car, my car that I have now, because normally I lease cars. So normally I
First
don't.
time you've owned instead of leasing?
No, it's the first time in a long time that I've owned.
How'd you like leasing? I've never leased a car.
I love it because you get a new car every 3 years,
Yeah, I just
and I
never
don't
saw the
drive, and I
value.
don't drive that much. Like
That's
so
the
for
point
me,
of owning a car then. But God, yeah.
right? Yeah, like well, yeah, I drive, but I was able to keep under the mileage caps. That's all.
for the
I meant.
lease, yeah,
right?
gotcha.
And so then you don't have to deal with a lot of maintenance because you're not driving that much. And then you're just like, well, done with this one. And then I get a new car. But anyway, but now that my car is getting up in mileage because I own it, and I'm like, oh, I got to do all this stuff.
Yeah, right. You gotta take care of it.
Yeah.
I never, I was always envious of the person who could write off the car. Like, oh, I just write it off. Oh, I just write it off, like, because they travel for a
Yeah.
living or something.
Oh yeah, sure.
I never had that.
Wait till you could write off a plane. Now that's a flex.
That's a flex.
That
That's
is a flex.
for sure.
Nikki, did you watch any basketball last night? I guess the Bulls are good.
I have not watched any basketball. I'm a little behind on that.
I'm not a big basketball
Yeah, I
person,
watched
but
a little bit of football. It was meh.
Who played last night?
Cowboys and Raiders.
Oh, who won?
Cowboys just spanked them.
Oh, good.
Yeah, it was-
How about them Cowboys?
Yeah, it was,
33-16. I mean, it was the Raiders, but yes, no, it was the Cowboys too. So,
yeah. Neither team.
Could have gone either way, right?
Yeah.
Right.
But-
Dino just wrote in. He says the deal guy. I watch him too. Loves.
Oh, yeah, the deal guy. Dino. Yeah, Dino.
Yeah, Dino saved you. The deal guy. Deal
Yeah,
guy.
I don't know his name, but he's like, here's what I found at Costco this week. He's like, in the frozen section, the Dubai chocolate popsicles, little bit of a salty treat. I love them. They're be yours for $8.99.
All right.
He's the best. Well, it's better than watching the depressing news.
Yeah, 100%.
Like, I want to just know what's going on in my local Costco.
Yeah, you don't want to know what's going on in the market. Even the S&P is down 30, even being down 60 at one point last time. Very weak last night over overnight action. So
Looked scary.
Close all watertight doors.
That's what it felt like.
Yeah, absolutely, absolutely. Under the lows of the last week and a half or so. Yeah, it definitely seems like.
Do you trade at night? Like, do you get the urge to like scalp stuff at night, or?
You know what? We opened unchanged a little bit higher, and then we just sat there, and then around 10 o'clock at night, 10 o'clock Central or so, we just sold out of bed down around 40 handles at one point, which ended up being about 60 handles. So I missed it. I didn't see it at all. So
Yeah.
I have traded at
Well,
night.
maybe if
It's
you
a
weren't
hard trade.
drunk.
It was half a martini Monday. It was a Monday, so it was just
Yeah.
half a
But
martini.
he's not. Do you know your dad's not eating breakfast or lunch?
I'm having a shake. I do a shake, 30 grams of protein, 27 something.
Okay, Ariana Grande.
Good.
you need
Can't.
to
She's
eat.
got a sharp tongue. You do not want to.
Well, I'm worried about you. Like,
Worry about me? Oh, that's
you need
very
to
sweet.
eat.
No, that's very sweet of you. No, I go to the doctor. I get all checked up.
I know, but I'm just saying if you're drinking on an empty stomach.
Yeah. I usually do a good lunch and then kind of taper off for the rest of the day. At least
Yeah.
I do.
Do you
Been into pretzels lately.
pretzels?
Yeah. Pretzels. I don't know why. Pretzels have been just hitting it hard.
Have they been like elevated, like flavored pretzels?
No, I like the dark ones.
Yeah,
Like
you
the
do.
burnt- Yeah.
Hey, you guys always have those.
Yeah. I like the burnt pretzels.
Interesting.
Mm-hmm.
The snack that's sweeping TikTok, I haven't had them yet from Trader Joe's, is the cornbread crisps.
Oh, I've had those. They're good.
Are they good?
they're
Does it
good.
live up to the hype?
I use those in one of my soup days.
Oh.
Oh.
You put them on a charcuterie board.
Yeah, they're very good. They're very good. The best ones are the elote ones. They have,
Oh, the elote chips?
scoops.
Ooh.
They're like scoop ones.
Oh.
Get that with like any.
Since we're the deal guy, I'm going to give you a Trader Joe deal. Lamb chops. Check them out.
No.
Didn't you just make fun of me for my compound butter from Trader Joe's?
I did.
That was
did.
like a couple days
It was
ago.
just, I was
We were
just
like,
jealous.
Oh, compound butter.
I was just jealous. I'll admit it now. I was
Yeah,
just
now you're
jealous.
like-
I was just jealous. I was just jealous.
didn't
That
mean it.
lamb chop deal is Costco though. That's
No,
where you
because
get the full
Costco,
rack.
I like the chop, not the chop one. I don't like the
little ones.
I don't like the triangular ones. I like more like a rack of lamb. I like a rack of lamb more than the lamb chops. And
Yeah.
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 But the rack of lamb at Costco is like a huge thing.
No,
This is small, little, like eight of them. Very, very good. Very, very.
Well, that's a man's extra large right there. Hey, I don't know if this is a sign of like a economic indicator, but they just opened a new Aldi in River North, like one of Chicago's most fancy neighborhoods. But there was an Aldi, and the line was wrapped all the way around the block.
Wow.
Yeah. What does that mean?
Well, for my associates, Aldi has some good deals sometimes.
No, they do.
It's the Trader Joe's. Isn't it the brothers? Aren't they brothers?
Oh, I don't. Oh, is this like a Fleet Farm and a Farm and Fleet situation?
Yeah, I think it's like sort of a contentious relationship. Like
Interesting.
it's like one of them did
They are
Trader
Yeah.
Joe's and
Yeah.
the other did Aldi,
Yeah.
and they kept like
I didn't know that. I thought Aldi was based from like a German conglomerate, and then that's how it came over. I don't know. I have no idea. The chat will correct us. The chat will guide us.
They always do.
Let the chat guide us.
Yeah.
Well, anyway, while the chat's getting all fired up about that, we have a really good show for you today. We continue to innovate and bring you new stuff despite those who wish for our demise. But we have a lot of great stuff headed your way on this terrific Tuesday. You know who you are. On Tasty Live at the top of the 8 o'clock hour. We got an options jive. Not all deltas are created equal. What does that mean? Although people who fly Delta think that they are superior. But what
do you notice that too a little bit?
I do.
Yeah.
Aldi owns Trader Joe's.
Okay, that makes sense.
From the 70s, I guess.
Wow.
That seems very far back. I'm going to have to...
You're going to have to dig more?
I'm going to have to fact check that.
We'll dig into that.
Yeah, that one.
But not all deltas are created equal. What do you like? You like a 16 delta? You like a 30 delta? What do you like?
I'm more like a 30 delta.
Like a 30 delta kind of
like
guy?
A little meaty. A little meatier than that one standard deviation. But yeah, this should be a good one. It's talking about how price moves in the underlying relative to delta in the effect it has on your options. Like how reliable is it? So, if you're short a 30 delta option and the stock moves $1, where is there a deviation in how much value changes in that option relative to that 30 deltas? Is it 30 deltas exactly what the option value? Is it 30 cents exactly what the option will change?
Okay.
You'll see there is some deviation based on volatility and based on how much time there is until expiration. It's a cool one.
I like when we break
Great
it down.
visuals as you like. I know you're like a picture book kind of guy.
Hey, we don't judge. Reading is reading.
Yes.
Then we have a brand new segment in partnership with the CME. Going to bring it to you weekly, every Tuesday. Is that the plan?
Every other Tuesday.
Every other Tuesday.
Twice a month or so.
It is called Futures in Focus. Mr. Craig from the CME is going to be here.
He's my travel partner.
And he's going to talk about where we've been and what's next. So, yes, if you've gone to the live show, you've seen our wonderful partners.
He's our expert in the room.
He is.
We have to ask, phone a friend sometimes during the segment. We go to him. It's very, very helpful. He actually corrected Tom on the last.
And he's still alive?
And he's still alive. Yeah, he corrected Tom on the gold-silver ratio because we had done it in a previous show and it didn't work out. And Craig pointed out, well, you're doing the wrong ratio. It's 2-to-1. If you had done it 2-to-1, it would have been favorable and you would not be making fun of me in front of all of these people today. So we did it his way at the last show, and it was our biggest winner.
Well, look at that.
Yeah. So
he's bringing that insight to everybody.
Yep.
You don't even have to leave your house and put on pants.
Yeah.
So you're welcome. So the news segment every other Tuesday, Futures in Focus in partnership with the CME. Definitely want to tune in for that today. And then 9 o'clock we have a market measures. Why vol spikes harder than prices ever could.
Oof. Another good one. A lot of visuals in this one as well. We're going to be talking about VIX and SPX volatility and IVR. So we're going to look at VIX itself and then IVR and SPX and seeing if there's like a spot that kind of tells you this is, the optimal time to sell premium SPX relative to the IVR and then the VIX itself. So it's a cool little piece. It's everything you would expect, volatility spikes and it kind of trickles down. It doesn't come right.
It's everything you would expect when you're expecting.
Yay.
Yes.
And then, just jam-packed today. And then at 9:20, we have live from the trade desk. We have Quentin counting down the top trending tickers over at tastytrade. And Glenn, G-Money in the house, looking into things on the Tasty FX side of the
always
coin.
Call in during that segment.
Yes.
If you come up on there, I will patch you through and interrupt Quentin and
to
Glenn.
The Bat Cave.
Yes. Just sign right in, come right in. Or if you want to write something on the chat,
yes.
Nick will find you on there. So
I have more clarification on the Aldi Trader Joe's situation.
All right, break it down.
Breaking news.
They are brothers. They had differing opinions on how to run
interesting.
the business.
Okay.
So they split off, and they are separate but under the same ownership.
Interesting.
And it wasn't from the 1970s. Somebody corrected that and said, no.
Okay.
No.
They have not given me the actual acquisition date.
Okay,
Oh,
interesting.
this is not the same person that corrected pork shoulder and ham for spam, right? Because that guy was wrong.
The chat's it's got
Pretty solid?
Yeah, no, it's solid. They're great supporters, but
Okay.
there is some fake news thrown in there.
Okay.
There's some fake news.
Okay.
No.
Okay.
You got to weed it out.
Yeah.
And then we have, of course, at 10 a.m., live from the floor of the SIBO, Liz and Jenny, every Tuesday and Wednesday. It's always electric when the ladies are live from the floor of the SIBO, so clock in. Sure, the markets are going to be moving today. Sure, it's going to be very boisterous down on the floor for the ladies. But hey, in the meantime and in between time, you guys want your daily dose?
Sure.
Hit me with my theme music. Let's go.
Our leading story,
today's
breaking
headlines.
news, coming across the wire. Our leading story, top story, just in.
In today's headlines.
Breaking news.
All right, everybody. Today is a terrific Tuesday. It is November the 18th. This is the part of the show that we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
What is reporting earnings after the bell today?
Target.
Ooh, okay.
I know, yeah. Lowe's. Mm-hmm. And then you got like Williams Sonoma, TJX. Not too much. Tomorrow, the 19th, today's the 18th, the 19th after the close, the moment everybody's been waiting for to save the market is Nvidia.
To save the global economy.
Yeah.
Global economy, to save the universe.
Right.
Actually, will be Nvidia.
I don't have it because I reported this morning. What did Home Depot do since Lowe's is going to be?
Home Depot was lower. It was lower by around 13. It's down by around 13, 14 right now. Home Depot has mirrored the market on its slide over the last 5 days, going down about, now about 25 handles.
Okay.
25 points.
Just about at the expected move.
Okay.
About at the expected move.
Good to see. Hey, well, this headline, we can talk about this. Retail investors are showing less conviction in buying U.S. market stock dips. Oh, no. Individual investors have been an important factor behind this year's market rally, helping it to bounce back from sell-offs and powering it to a string of record highs. But it seems like even retail investors are feeling a little fatigue. What are your insights to dip buying?
It's been
When I
painful.
dip, you dip, I dip.
Last week or so, 2 weeks, it's been painful.
Yeah, every time we've tried to lift our head in the market has sold off over the last, you can go back to basically the beginning of November, so the last, 20-ish days or so, we continue to get kind of relief rallies only to be met by stronger moves lower. So we'll see what happens. Volatility is definitely up 2% this morning to 21.5. It is 50 cents off its highs, but SPOOs are also, 25 handles off of their lows. So right now it seems like Bitcoin lower, gold lower. It seems like it's an asset sell-off. A lot of the high flyers lower.
You think people are just going to cash? Like where? Because they're not rotating into other sectors.
First of all, retail investors, and I'm not talking about the people who are watching the show here today. I'm talking about
not the good-looking, sexy people who watch our show.
That's right.
smart, good-looking,
Smart,
sexy.
good-looking, sexy.
Yes.
Yeah.
I'm talking about when they say retail investors in general. They're it's like a Roach Motel for them. They get in and they usually
Well, they look for stuff that's moving. It's short term. It's not like. It's not a 10-year investment. Nobody's, looking at Apple's balance sheets and saying,
And it's the typical thing, when volatility expands and things start, the headlines start saying, hey, this isn't going to 200,000. It's now going to go to 50. Everybody kind of under leverages. They don't kind of put their money where their mouth is, and it's usually a bad thing to do. Usually they get in at the wrong time, they get out at the wrong time. So.
Yeah.
I don't know if today is the day, but you're certainly getting close to it. A lot of products have gotten really decimated.
Sure. Well, we're going to talk about that. But real fast, Morgan Stanley sees the U.S. outperforming global stocks in 2026. They're like, it's just a scratch. But Morgan Stanley expects U.S. stocks to outperform their peers next year, and they prefer global equities over credit and government bonds. I know we do have a little friendly contest here for each quarter for guessing, S&P, numbers, but
Yeah, I have not looked at.
I don't know if anyone has forecasted for 2026 yet.
Brokerage.
No, we haven't done it yet.
No, we'll do it near the end of the year.
Yeah, we'll do it.
I mean, brokerage firms in general, like IBKR, Hood, even IG has had a little bit of a pullback here. I mean, IBKR came down from 72 to almost 62 in the last 3 days. So
Yeah.
$10 move lower there. Hood, I mean, with a lot of crypto exposure there too, it's gone from 150 to 115.
Wow.
So these are getting getting interesting.
Morgan Stanley's number, they say that the forecast for the S&P is 7,800 by the end of 2026. I'm just telling you what they're saying.
I got by the end of 2026.
Yes, sir.
The expected move for the end of 2026 is 300 handles. What'd you say it was?
7,800.
No, you're looking at the end of this year, probably.
2026.
There's got to be more than 3.
Oh, I'm sorry. I'm sorry. I was.
That's by the end of the week.
That's you.
By the end of 2026, yeah, about 1,000 handles. So they're
right there.
They're right there. They're at a complete.
How do
move
I
to
get
the
this
upside.
job?
Yeah.
I will say I'm looking at the SPX guesses. We have a plethora of posts
Ranges?
that are within the range right here.
Oh, cool.
We're at 66.72. We have the bad at 68.05.
Hey.
I was at 65.38, so I need about 100 points to the downside. Actually, I wasn't bullish enough. You have Mikey at 69.
Yeah, he is.
He's at 69.69. Double the fun.
So immature.
Katie is right up there at 68.88.
Wow.
She's right there. Liz and Jenny are a little bit lower from here. Vecchio is at 68.50. Tom is at 53.33, so he's got about
Got some work to do.
1,300 points.
He's got some work to do.
That's so funny.
We're there. We're about there.
Hey, this is crazy. After news broke over the weekend that a former Fed Reserve governor violated the central bank's ethics rules around stock trading, the House Administration Committee has a hearing scheduled for tomorrow to formally debate the overlapping issue of banning lawmaker stock trading. What are your thoughts?
If Nancy Pelosi gets out at the top, there will be hell to pay.
I don't know how he could have violated any rules. They don't have any.
The Fed chair, the Fed governors do have.
He has rules and the rest of them don't?
She said that it was her husband that was making the trades, and I was like,
Yeah.
a man will ruin your credit and your job and your life. No. But what are your thoughts, though, on should we ban congressional stock trading, yay or nay?
I would like to. I mean, Tom has always had a different spin on this than I have. He said, let
Yeah,
them
but
do whatever they want to do.
you're an independent thinker.
Yeah, no, I know. And I've always said the opposite side. I think they should be able to invest wherever they want to invest, but nothing that they're voting on. Like if they're the
Yeah, but
head
how
of,
do you make that distinction?
well, if they're head of the oil committee, they don't get to trade any oil related
Sure.
stocks. I
One
mean,
week
Sure.
before.
Yeah, they can go into technology.
Sure, but some things just trickle down. Some things are just like an overarching policy of, are we in
Well, then they should
danger?
avoid that. They can get in the S&P 500
Right.
or the NASDAQ or
There's a million different
there's a
ways.
million different ways to do it.
Right.
They can avoid it just like
No,
any
I'm just saying it. I think that it's just hard because there's sometimes it's just
not
like,
hard.
are we in danger or are we not in danger? And then that can affect a bunch of sectors.
It's
So whether
not
you're
hard.
the head of the oil committee or not.
If you
See what I'm
think
saying?
you're
No, I'm just
committing
saying-
a crime, don't do it. That's it. So then if you think it's a fringe stock, don't do it. That's it.
Okay.
End of story.
So you're telling Congress to let their conscience guide them? Because that's working out aces. What are your thoughts, Nikki?
Good point.
I mean, yeah, I mean, I don't see why, Nancy Pelosi has a portfolio of derivatives. I think wild, like, you want to buy some stock, that's okay. But you're, buying leap calls as a congresswoman. It's like you're past kind of the easy stuff of, oh, I just got lucky, and you're like, oh, I leveraged long
Sure.
things that I'm presiding over. I think there's probably some sort of conflict of interest.
The Taking Stock of the Stock Act, catchy, is going to consider strengthening current limits on lawmaker trading, which currently allows for trades as long as they comply with insider trading laws and are disclosed within
That's
30
also-
days.
They should, instead, because the disclosures are crap, because they come out late. There's no, if they're going to do something, they should have to announce it.
Yeah.
They should say, okay, like 1 week before, I want to do this and this in Nvidia.
They're like, for no reason at all, I'm investing in this company that makes radioactive
Exactly.
suits.
And then the market,
They're like, everything's cool though, America.
the market can arb out whatever edge that they have.
Yeah.
You know what I'm saying? Like, you ever let the people decide if whoever on that board knows anything or not, and then by the time they get in, the edge is arbed out and it's taken out of the trade.
Sure. Yeah.
And that's fair.
We'll see what happens. Again, I'm just mentioning this because they're meeting on it congressionally starting tomorrow.
Yeah.
Hey, speaking of forecast, Goldman Sachs sees oil prices falling through 2026 on a supply surge. The bank forecasted Brent crude will average $56 a barrel and West Texas Intermediate at $52 in 2026. That's below current forward curves of 63 and 60 respectively. What's happening in crude oil?
Basically unchanged, hanging out at $60. It's probably been one of the more less volatile and more stable products in the market right now, going sideways since October.
Yeah.
Right here at 60. I mean, it's been a high of 61. It's been a low of 59. It's right here at 60. It's at a very tight range.
You've been trading micro oil or?
We have. I mean, it's been, in hindsight, obviously, it's been pinned at 60 for the last, couple weeks here. So it would have been a good trade around that mark. But we traded it when it got into like the 56, 57.
And you were buying it actually
Yeah.
a little early. We were making fun of you, but you were spotted.
Yeah, we took it. We took a little money on the way up here, but it's been it's been choppy. It hasn't gone anywhere, so I haven't taken any really direct.
Hasn't had any extreme price action either side.
And I happen to not be in anything neutral.
Right.
So, it's just been kind of a...
Yeah, Ivy rank
that
at
has
23 is good,
escaped.
not horrible for selling premium.
As the market continues to move lower, there are several stocks that have been hit hard in 2025, but analysts project that some could surge as much as 57%. Some downtrodden names expected to come roaring back are Adobe, Block, Chipotle, and Salesforce. For you, what is your dog stock that you want to maybe share with the class?
Meta is mine, but I will tell you, if this is the basket that they're putting out, you don't go 10 feet.
It's so public.
They need to sell stock. Who put this out? Who put this out? What company?
This is just on Market Watch.
So a friend of Market Watch needs to sell some stock.
Yeah.
That's why they put this out there for sure.
right.
Be careful of this one. I'm on Chipotle at 39. I might have
You should get out now immediately, if not sooner. And Meta's down about $8, by the way. Another sell-off.
Meta is my dog.
What XYZ?
Oracle's my dog.
Oracle's your dog.
Yeah,
Okay.
Oracle's my dog.
Okay.
Yeah, caught a little bit of a bid yesterday. It's going to take it all back today, down around $2.
Okay.
Oracle's my dog. Coin, a little bit too. I did a diagonal trade, a bullish diagonal trade in there. That's been a dog.
Through Friday, 57% of stocks in the S&P 500 were up for 2025. So that's pretty good. But there are some laggards and there are some opportunities. Hey, here's something interesting. The S&P 500's next edition could be this red hot tech stock. One analyst notes that SanDisk's rapid growth this year has made it an elephant in the S&P small cap index. That could drive its promotion to the big leagues. SNDK. What are your thoughts?
SanDisk, what do you think?
Nikki, you've traded it, right?
I remember buying these, like SanDisk was like external hard drives that you would buy, like the ones that you would plug into the computer that were like, at the time, a gigabyte was the biggest one you could get. Was a SanDisk.
They look like a little notebook.
I have a 4 terabyte one that I got from like Amazon Prime, and it was like $90.
Oh yeah, no, these are 20 years ago when they were this big. They were like almost the size of a
like a brick.
Yeah, like a phone now. And it was like 1 or 2 gigabytes, and I would put all my downloaded LimeWire music that destroyed the computer onto the external hard drive.
Good times.
Told you.
Yeah.
Good times. Good times.
So that's what I remember SanDisk from. But yeah, a lot of these memory stocks, SanDisk, Micron obviously has
They're
gone
on a tear. They have
absolutely
not
nuts.
sold off at all.
What's the other one we were talking about the other day? You bought some on the plane from the guy
Oh,
a million years ago.
yes, I know exactly what you're talking
Not
about.
Seagate.
Seagate Technology.
Seagate.
It was
Seagate was it?
Yeah, it was Seagate
Whoa.
Technology.
Seagate
yes.
has gone nuts too.
Yeah, but SanDisk is down around $8-9. That'll be the first sell-off in quite some time.
Gotta buy those dips.
Yeah.
Yep. No.
That's fine. So cryptocurrency stockpiler strategy has obstacles in its path to S&P 500 inclusion, but SanDisk could get the nod. We will see what we will see. Hey, Bank of America plans to spend billions of dollars on technology such as AI to boost bankers' productivity and bring in more revenue. Bank of America plans to allocate $4 billion into the new AI tech capabilities from its $13 billion tech budget. And they say that it boosts bankers' productivity and the bank's bottom line. What are you doing in Boofa?
Yeah, what do you think of Boofa?
Boofa.
What is it? BAC trades at 51. I mean, there's not
It's had a little 3-day sell-off. It's not too interesting of a stock. I mean, when you look at it, the monthly implied volatility is it's like the S&P 500 without any of the bang for your buck.
Boo.
Yeah.
All right.
not something we trade very often.
Keeping it moving. According to the CEO of China's largest contract chip maker, fears of a memory chip shortage have seen customers hold back on orders. Analysts say the supply concerns are valid as memory chip companies focus on memory demand from AI servers rather than consumer products, and that affects everything from electronics to cars to drones and a bunch of other stuff. You talked about Micron earlier, just chip makers in general.
MU, if you're talking going back to Micron here, it
Probably up $5.
No, everything's a little weaker this morning. It's down about $5, but just off of its recent highs. Not intraday highs, but closing highs. Only about $10 off its closing highs. IV rank of 83. Real good in there, December 17th.
Maybe might have did something.
Maybe it's Tuesday
Option
and
trades
Thursday.
today.
Yeah, you might have.
Hey, speaking of chip stocks and the global economy just waiting for Nvidia's earnings, news came out yesterday through an SEC filing that Peter Thiel offloaded his entire Nvidia stake in the third quarter. This comes on the heels of Michael Burry and his hedge fund liquidating their positions. What are you worried when the quote unquote insiders are starting to liquidate these positions?
I don't put too much weight into anything, whether it's good news or bad news in the market when they're saying this. To me, they always have some sort of, some motive behind it, whether it be, an extension to the down move or they're looking to buy stock, which usually the opposite of whatever they say is what usually is happening. Now, you look at this, and he got out of it in the third quarter. The stock has been, I know it had a rally up to 210. That was the high. It was there for about a week and a half. Unless he sold at that point, he sold right around here. It's been around, since July or so. It's been from 170 to 190, throwing out the highs and the lows, and it's right there at 184 this morning. So
the thing with these guys is like their funds are so small relative to their actual net worth. It's like this guy's worth like $25 billion, and he's
with that haircut. Come on.
And he's got like a $1 billion portfolio, or even less. I think
That's
it was like
pretty good.
500 million or something like that. So it's like, who cares? Like if it went to zero, it wouldn't even matter.
Sure.
Like, there's no risk in this.
My next question, though, for you is: has Nvidia gotten ahead of itself in a downward move ahead of its earnings? Like, is this move too fast, too furious ahead of earnings, or does the market know something?
Well, if the market's weak right now, and if the market continues to be weak into today and going into tomorrow with Nvidia earnings will be muted to the upside, meaning that even if they come out with great numbers, great everything, it'll be inside the expected move or more to the downside, no matter what the news is. The market kind of leads what these earnings are. Now, if they have some sort of blowout number, like, well above any sort of expectation, well, that might be the catalyst for the up move. I would bet against that. Oof.
I don't know if I agree. I think like these sort of events, like an Nvidia earnings and FOMC and all the numbers that we're finally going to get later this week, it's something that keeps vol bid. And if they're not to the extreme bad that is currently the market is trading on, or at least feels like it is, that's kind of a snapback.
I'd be ranking 34 in Nvidia, not as lofty as you would expect.
Well, ARM on Monday said that central processing units based on its technology will be able to integrate with AI chips using Nvidia's NVLink fusion technology. The move will make it easier for customers of both companies to pair ARM-based Neoverse CPUs with Nvidia's dominant GPUs. That means something to you. But are you going to play something like an SMH on the NVIDIA move? Because normally where NVIDIA goes, AMD goes, SMH goes, all the other chippies go.
ARM has had a significant sell-off compared to NVIDIA, if you're looking at that. Matter of fact, it's pretty much unchanged for the year at 140, and its IB rank of 33 with no earnings coming. I think ARM is probably a better-ish play. Markets aren't as great. I mean, NVIDIA is very, very liquid. ARM does not have as much liquidity. But maybe ARM is a better play than even NVIDIA for selling premium.
Okay. Something to do. Hey, in other news, Ford announced they will partner with Amazon so dealers can sell used vehicles online. Ford's franchise dealers will be able to sell certified pre-owned vehicles through Amazon. The program will let customers secure financing, start paperwork, and schedule a pickup time for vehicles at participating Ford dealers. What does that do to like a Carvana?
Ooh, I don't.
Good question. Carvana 320. I mean, it's basically, I mean, it's a little bit off the highs, but it's been a double, I think, or more over the last like year and a half, 2 years.
Yeah, I mean, since I quoted the last stock's yearly move, this one started around 193. It's 320, just rounding up. So yeah, Carvana's had a good year.
What about Amazon?
Amazon has had a good year also. Again, if you're just going from the year, it's been under 200 at 230 and change where it closed 227. So it's come back into the middle of its range. And if you're looking at Google, since we're talking about the big ones, Google's up another $4. Buffett still has his magic.
Oh, are you worried about Vinny just ordering himself a car on Amazon?
Oh, that's actually, I didn't even think about that. No. He's not worried about that. Vinny doesn't drive a Ford. Are you kidding? I wouldn't step foot in a Ford.
Oh, man. Like a Ford F-150? That's tough.
Too big for him. Too big for him.
That's tough. All right.
Ford Explorer.
Vinny only drives European.
Oh, okay. My bad.
No. He'll probably get an Audi, but no.
Hey, another
Is
Amazon.
it Audi or Audi? I have to know if I'm going to be an owner.
I don't. I say Audi.
Audi? Okay.
I say Audi, but I don't know.
I have an innie.
But in other Amazon news, Amazon's going to raise $15 billion in its first U.S. bond sale in 3 years to fund its AI push. It's kind of in vogue now for tech companies to start issuing bonds to fund their massive AI bets. Amazon is no different. They announced they're going to raise $15 billion. What do you think of more tech firms leaning into debt? What could go wrong?
I mean, $15 billion to Amazon is scratching the surface.
I know.
This isn't, that big, but yeah, it is a little odd. You'd think of like a.
It was like, you don't have $15 billion, Amazon? Like.
That's like a petty cash.
Sure.
For Amazon. So yeah, it's a little weird.
Networking giant Cisco has acquired a company called EasyDubs, a consumer startup that provides real-time translation services. Cisco announced the acquisition over the weekend, but the company did not disclose the size of the deal. Cisco.
Unchanged for Cisco, and it is at or around all-time highs. So Cisco's been one of those ones that really has hung up there real well.
Yeah.
Good job, Cisco.
I have no positions.
One of the few decent-sized up moves. Everything else has been kind of a buy the rumor, sell the news event on earnings.
Yes.
So this one was up.
Dell and Hewlett-Packard Enterprise shares sunk yesterday after Morgan Stanley downgraded it. Computer hardware stocks were also hit. The bank said the current pricing supercycle poses a significant risk to computer manufacturers' earnings. Oh no.
Oh no!
Yeah, you could add a gateway to this headline. That's the only one missing from this. Dell, HP,
sure.
Gateway.
Yeah, all the old school computers. And Dell has had a sell-off too, from 160 down to 120 and change. It started the year closer to right where it is right now at 120 and change.
Yeah, I just thought it was interesting because we don't talk about Dell a lot. And
No, I mean, it's got a good IV rank of 59. It has earnings coming November 25th. December options are okay, not great, about 30 cents wide, but they're tradable.
Okay. Tesla stock, though, rose yesterday as Stifel got bullish on the company's full self-driving and robo-taxi outlook. The stock had a rough week, but one analyst was bullish, raising Tesla's price target to 508 from 483. What is Tesla doing this morning?
405, down around $3. Tesla started its year, we're going to do this today, somewhere around right where it is now, about 420 or so. It's 408 right now. So it's
Some pain in between.
a lot of pain in between. It got into the 200s, and I mean the low 200s, like 220, 230, something like that, and it got up to around 475. So
Wild.
405 right now.
What's the IV in Tesla?
19.
Oh, okay. Yikes.
Yeah,
so-
probably a directional play here on this, $400 stock.
Bless you. Oh, I saw the spray on that.
That was a good spray.
That was
All right,
juicy.
Sorry, everybody.
Oh, somebody stole my tissues. I would give them to
That's fine. That whole area is a hazmat.
I don't know if I stole them. I think you gifted them.
You just
It
never
threw me
gifted them
the-
back?
Yeah.
I'll bring you some on the next break.
I'll get you another one. Don't.
That's okay. It's
Yeah.
okay.
Hey, Boeing took center stage on day one of the Dubai Air Show yesterday, booking a $38 billion order from the host carrier Emirates and clinching more deals with African carriers. What is Boeing doing?
Boeing is getting that Boeing going 190, basically unchanged. Again, if we're doing this whole thing where you started the year, I'm just trying to point out how hard some of these stocks have gotten hit.
Sure.
It started the year around 180, got up to 240. It's 190 right now, down about $1 this morning, maybe down $2.
Brutal.
Ivy ranked
Open.
13 in there. Go ahead, sorry.
Open was moving around a lot last week. Open Door Technologies climbed by almost 24% on a week-on-week basis last week, despite suffering some losses in the last 2 trading days of last week. But they are doing a dividend, so that's exciting. Yes, under the terms, each investor holding 30 common shares of Open Door is set to receive one each of Series K, A, or Z warrants, exercisable at prices of 9, 13, and 17. Did I say that the wrong way? Sorry.
No.
Right.
They call this a dividend. What this
Right.
is.
You're getting free upside calls at $9 and change or some percentage from your stock. Stock is under.
Yeah, but they're issuing shares.
Issuing shares. It's another.
They're dumping on you.
Sure,
This
sure.
is exactly what AMC did when they had the ape spin-off. Where
That's correct.
Oh yeah, you get this dividend of shares, but all of a sudden you're
It's
the
a
share
$7
outstanding
stock that
are
used to be a $1 stock that's now issuing shares.
Yeah,
Seems
this
like
is-
the first one out the door is usually the smartest one.
it's
So
the
there's
end
going
of
to be
the line.
new symbols: Open W, Open L, and Open Z.
And those go to 0 if you don't get to 9. 9, 13, what was other?
9, 13, and 17.
Yeah, 9, 13, and 17. So if the stock doesn't go up 30%, 50%, or 100% in whatever that duration is, which I imagine is what, a year? A year on the warrants,
Maybe.
those go to 0. So
What could go wrong?
yeah.
Last week, when they had their earnings, the company announced that it had widened their net loss by 15% to $90 million from $78. Hey, in other news, Target set to report earnings, I believe, before the bell tomorrow morning.
Target will be
Before the bell tomorrow
before the
morning.
bell, I believe. Yes, before the bell tomorrow. You got to do something tonight.
Starbucks and Target are both struggling as companies, so they're like, let's join forces and suck together. So they're launching a new holiday drink, a frozen hot chocolate, but you can only get it in Target stores. Starting today, the frozen peppermint hot chocolate will be sold exclusively at Starbucks cafes within Target stores. A twist on a holiday classic, a mocha cream frappuccino layered with peppermint whipped cream to tickle your taste buds.
I've heard that as long as you are still in Target, you're allowed to get free refills of whatever drink you get.
That is true.
That is true.
That is true.
Wow.
So make a day of it.
Yeah.
Make a day of it, girl.
Yeah.
Now, still in Target, Does that mean like right by the door where they usually serve the Starbucks? I mean,
You mean where you're waiting for your wife?
yeah. While I'm in I'm gonna sit right here, hon. You go shopping.
What is Target's expected move?
Oh, good question. $8 for the next 3 days, so you can take about 80 some odd percent of that. So maybe about $6 or so.
Okay.
Less.
Yeah. We're trading the 85 strike puts. I scalped out the 80s and the 85s for a couple bucks there. The stock is now down to 87 and change.
Yeah, I mean 88. It's only down about 50 cents or so.
No, I know, but over the last week, we got up to the mid 90-ish, 90.
Oh yeah, and it started the year at 130, and it's 88.
Yeah,
or 87.
At
What
the
do you want to call
lows.
it?
So
Yep.
maybe that's something we look at.
Yep.
Okay. Jake Paul is now fighting 6'6", 245 pound. Hello, Anthony Joshua in December. It's going to be streamed live on Netflix Friday, December 19th. I call it the Battle of Dudes with two first names: Jake Paul, Anthony Joshua. They're all first name. No, okay.
Never trust a guy with two first names.
But what do you think of Jake Paul in a heavyweight pro fight? I mean, this dude's 6'6", 245? That reach has to be insane.
Yeah.
I don't trust any of these anymore.
I don't trust any
I'm
of them
done with
either.
them.
I don't trust.
I'll watch it. Thankfully, it's on Netflix.
It's free.
Yeah. I'm not buying them anymore.
No,
No, it's free. Netflix.
I know. I got it. But I'm done with that buying crap. So yeah, I'll watch this. I mean, now you're even hearing rumors that some of the UFC fights were kind of rigged or.
Baseball is rigged now.
Yeah, they're all rigged.
Like everything's rigged.
I know. What has my life become?
I know.
Sad.
Everything.
Yeah.
I don't know. I don't know what to tell you. What's Netflix doing? I mean, good job, Netflix.
Post split. So we should probably look at that today. See if we can do something there.
There you go.
Post split trades at 110.
See what breaks down.
55.
Yep.
Hey, finally today for my viral video, I talked about this. So a viewer sent it to me. He's like, Vanette, I found this video for you. So thank you very much to the viewer that sent this to me. This was during the Vikings game. It was the mascots versus the kids.
Bears game? Excuse me?
Well, it was in Minnesota. So
yeah, well,
okay.
Minnesota, okay.
Here's the footage. Watch this. Pretty good. Mascots dominated. Drop back to pass. To the Indianapolis Colt, Tutty. All right, using his feet in around there, takes out his kid.
You know, these are frustrated cheerleaders in this.
Look at this,
right there.
going deep with the handoff pass there to the Golden Gopher from Minnesota.
He's got some wheels.
Watch this. Watch this, Selly. I think this is the mascot from the Braves. He's like, I'm not going down, kids.
So,
anyway, it was so good.
That is fun.
I love it. I love it.
Yeah.
That's great. That's got to be a blast.
It had to be a blast.
I just don't know how they can see, like they're catching balls, how they have the physical ability to make those plays. Like in the like it's hot and sweaty in there, like.
That's probably the team in there. That was probably Minnesota Vikings in there. Let's take a quick 90-second break and come back. We got more Tasty Live after this. What we got coming up next?
Confirm
and send.
That's right. And look at the market. We'll be back in 90 seconds. Tasty Live.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Look who's back testing. tastytrade now has options back testing. for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with Confirm and Send on this Tuesday, November 18th. But before we do, let's talk about Twitter. Twitter's down.
Do you feel naked? Do you feel you're like missing your,
like I'm blowing into a bottle. I mean, I have, at least I have this venue, but yes, yeah.
Well, we'll get you in the YouTube chat. I got my peeps. They're sending me the good info.
Awesome. I don't know how I'm going to get, listen, trading ideas. You'd be surprised how many ideas and subject matter and stuff we get just by the viewers being able to contact us. Now all you can do is email us, which is fine too. Bat@tastylive.com if you need me. Nick at tastylive.com if you need him. But let's take a look at the market first. I kid you, but Twitter is down right now. And I guess it might...
I think it's Cloudflare.
Yeah, it might affect...
Which is net.
NET?
Stock, NET.
I think it might
should look at. You
affect other things too. Net is down around $8, $9. And you can see here it's had a fall too from grace from 260 to 200. I've never traded it. Looking at the DISA options, they are okay. 30 cents wide, not great. IB rank at 35 is pretty good. Let's take a look at the overall market, which everybody is interested in. Even the S&P is down almost 30 handles. 28 does not tell the whole story. Got down to 66.35, another 30 handles lower than this. This is lower than that last Friday low that we bounced off of, and the Friday before that. We are now under that, and we traded all the way up to 67.08 too. So there's been some volatility in the market, and that has reflected in /VX, which got all the way up to 22 here, which is just below last Friday's volatility spike up to around 20, almost 23. Very elevated, has not, you didn't get your weekend premium taken out from Friday into Monday. It's been staying bid here today. It's still bid. Volatility up almost 2%, 1.5% right now. Dow on the down 350. That's your leader to the downside on the heels of Home Depot, which is in the Dow, trading 344, which is down around $14. I know we have a 1/2 ratio, put ratio spread on there. That'll be right at our long strike. We'll see how Home Depot does today. More movers in the market here is the Russell down 10 and the NASDAQ down 143. They're all down around the same, like I said, but the Dow a little bit weaker. Volatility up 35 cents off of its lows of 21, off its highs of 22, mid-price at 21.50. Bonds up 14 ticks, catching a little bit of a bid here. Flight to quality, son? That's my question to you. 117.05, been kind of the mid-range of where it's been since all the rate cut and possibly non-rate cut, according to the Fed Watch tool, which we could talk to when Craig comes in at 8:40 on futures.
Yeah, I mean, bonds they've been right here for 2 weeks.
Yep.
Right. I mean, like that's kind of been. I think I'm more surprised by the move in gold. You haven't had that like flight flight to quality in gold. It's obvious.
Gold trade under 4,000 or right around 4,000 last night.
Yeah.
It's showing down $7.50, but you can see at 40.66. A small move lower, got up to 40.70, so it's just a skosh off of its highs right now. Silver, on the other hand, is down 1% or so, and it was down a lot more than that. Trade all the way down to 49. So maybe when Craig comes on, we'll look at that silver-gold ratios because he is the expert in the room on that when we go to futures in focus, new segment that we got at 8:40. Oil basically unchanged, down 7 cents. Bitcoin, you want to know if it traded under 100,000? Well, it traded under 90,000 last night. Talking about the futures, 89,325. We're back up. I didn't think I would be saying back up to 91.5, down $440. Ethereum 2 traded under 3,000 to 29.56, up to 32. Actually, Ethereum seems to be a little bit more or equally as volatile as Bitcoin. Yeah, on a percentage move for sure, right?
For sure.
Net gas down small. Well, I guess 5.5 cents is a decent sized move. It has had a rally up to 4.8, now down to 5.3 and change. Net gas is one of those things I try to run from when I'm looking to trade something. Baidu, I hadn't really seen it come out. I don't know if it has. Has now, down $4 on Baidu to 110. Home Depot down around 14. You got Target and Lowe's today, two probably most widely watched.
Cool.
Confirm and send Tuesday, November 18th.
We got to get through these.
Let's go. Let's go. I'm ready. Then we got an option jive after that. Tuesday, November 18th.
Time flies.
Tomorrow, TGT reports in the morning. There you go. Fed minutes come out midday. Nvidia reports after the close. I don't have the capital to police 3 separate trades, but want to trade all 3 events. Is there a way I can do this?
Take out a loan. Bad at tastylive.
See how far that gets you. But go ahead.
I mean, from a volatility perspective, I think you go to Nvidia and liquidity. When you balance it all together, liquidity, volatility, just tradability, I think you go to Nvidia of 3 events. But yeah, I mean, everybody has capital limitations, and this is called being a trader. You got to kind of pick your poison here.
Yes, I would.
There's no easy answer.
There's no easy answer unless you have a directional bias on target.
Yeah.
The Fed coming out, not gonna no real way unless you're gonna look at bonds maybe to do something there. But I would whittle this down to 2: Target and Nvidia, and I think Nvidia wins by liquidity, market sentiment, everything else like that. I think Nvidia. Now, if you want 2 vertical spreads in there, you could probably be able to do both of those. I mean, just extrapolating out here. But I would probably stick with liquidity Nvidia. Next question, please.
Cool. I receive a bi-weekly email from the CBOE, and yesterday it said volatility in QQQ was elevated relative to XPX. If I want to trade this volatility skew, I assume I can sell QQQ and buy SPX, but should I sell puts in both, calls in both, or some other setup?
Yeah, if you look at Q Ivy rank, it's 39 versus SPY, which is 32. They're both very liquid. They're both tradable. They're both having similar type moves. So yeah, I've actually looked at the Qs too to trade. So a little bit more volatility in there, especially with Nvidia coming out. So it may have a bigger exaggerated move into earnings. So that last email. That last email, that might be a place to go too. If Nvidia is too rich or too wide or too big for you, you don't like the binary event of the earnings, maybe you trade QQQ as a proxy to that.
You don't get the cross margin, which is the problem.
Yeah, you don't get. Yeah, you don't.
Both different products.
Yeah, you're not going to get. Well, unless you're in a portfolio margin account. But yes, can you sell Qs and buy SPX because of the Ivy rank and volatility is different? That's not the way I would do it.
No,
I mean I would.
We did that segment yesterday about volatility adjustment errors.
Yes.
You can look at that one if you do want to do that.
Yep. But I wouldn't do it. I wouldn't do it on direction of both just because of the volatility. That would have to be your own assumption. Next question, please. What bothers you more, a losing trade or leaving money on the table? Nice question. I don't think we've ever had something like that.
I think probably the FOMO of leaving money on the table is usually the worst one, because I feel like losing trades are just part of the game, and the losing trades, you roll them, you manage them. They're the ones that sit in your portfolio. You know, the ones that you take off, you're like, shoot, I should have kept that and I would have made X amount more. But I generally try to avoid FOMO in both of these aspects and just let it. If I don't have it on, it's done.
Losing trades bother the shit out of me.
Really?
Yeah, more than the FOMO part of it. I don't. When I'm done. You know, I walked out with 2 suitcases after 17 years. I mean, you know, I didn't take any refrigerator with me or anything like that. When I'm done.
You wanted the fridge? That's what you wanted? that was where you drew
It really
the line.
bothers me.
Where you drew the line was the fridge.
It was a good one. I mean, it really was. I mean, it was a Sub-Zero. It was nice. I missed that. I went to like a little like college dorm refrigerator after that. Yeah. No, I mean, losing trades, those are the ones that bother me. Leaving money on the table, shoulda, woulda, coulda. I mean, like we talked about it. I mean, I walked away from Ethereum when it was pennies. So, I mean, I can't look at the FOMO things.
True.
I would, you know.
You too.
I would put a bullet in my head if I had to do that.
Next one, please. Do you think it's necessary to own stocks in order to build wealth?
I think you have to invest in the market, not own stocks. I don't think you'll. Unfortunately, there are very few, you know, penny stocks, even fewer of those, even fewer $10 stocks where you might be able to buy a couple of shares with a relatively smaller account. One investor's floor is another investor's ceiling. I started with $5,000. I get it. We all start somewhere, like you were making fun of me earlier today. It's not how you start the race, it's how you finish it. But you have to embrace leverage, especially in a smaller account, because what are you going to buy? 2 shares of SPY or 10 shares of SPY and build wealth? It would be a very slow grind. So you got to learn strategies like option strategies, and that's why I've always gravitated towards options, because it makes your money basically 10 times its size if used properly. So yeah, I think it's a good place. It worked for me. I hope it works for you.
Cool.
All right. We went through that pretty quick. Let's take a quick 90-second break and come back. We got more Tasty Live with an option jive next. It's Tasty Live.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
It's options. Jive.
We are back, son, and that's right. It is time for an option jive. Even the S&Ps haven't had much movement since we've been on the show for the last hour and 11 minutes, but a lot of movement intraday, almost 60, 70 handles on the even the S&Ps. We're down 30 right now. Option
Volatility
jive.
picking up a little bit.
Volatility definitely percolating, 2158 just off of its highs. Yes,
Doesn't
definitely.
feel great.
It's been a 6-day volatility expansion and a 6-day one-way move. You've had opportunities in between there.
Yeah.
To scalp in and out. You've done some great future scalping, but you had to be nimble.
Option jive. Let's do it.
I'm ready.
Not all deltas are created equal. Does that shock you?
No.
Nothing shocks you anymore. You know all this.
No, I mean, Delta's always been dynamic, so
yes,
it's what it is.
Delta measures the sensitivity of an option's price to changes in the underlying asset price. Often we think of Delta as an expected change in the option price for a $1 move in that underlying. So if you're short a 30 Delta option and the stock moves $1, you expect to lose 30 cents. If you're long that option, you expect to make 30 cents. Here we use the 20 Delta SPY put. As an example, we'll lose 20 cents if SPY climbs $1, and that would be if you're selling a positive, if you're buying a negative, obviously. Fair option values, however, are more complex than a simple linear relationship. And this value change is just an estimate. So delta, theta, gamma, it's not a linear line across time and volatility and all these things that constantly change. It's there's no people get caught up in the theta number really the most, where they think, oh well, I have $200 of theta, I'm not up $200 today. What gives? And that's because it's not linear. These things are constantly changing via changes in the stock price, changes in volatility, changes in time, all that stuff. So today we're going to examine the difference between delta and an actual option price changes, focusing on how these relate to the size of the underlying move, the option's moneyness, which is how out of the money it is, and the time until expiration. So we're basically going to look at how reliable is delta as a gauge for how much your value is going to change in the options.
Okay.
So the next slide here, we're looking at the fair price for a 50, and by fair, we are talking about like fair relative to the option delta. The fair price of a 50 delta call on a $100 underlying with 15% implied volatility, which is very, very low. These skew and change a lot more as volatility goes up, especially if there's upside call skew. and this example is just a kind of a good fundamental example. We're looking at a risk-free rate of 3% here. You can see the actual price change of the option is not linear, right? So the closer at the money option is going to be far different than the further out of the money option. There's a skew or a smile that is baked into here. This is, this one is put skew, but you can look at this as call or put skew, depending on the underlying. But you can see here the change in the underlying doesn't exactly line up with the delta. And why do you think that is?
Say again?
Why do you think that is? Changes in time, changes.
All of it. Time, about all the things that make up the Black-Scholes model. The reason why it's not an exact science. 30 delta moves 1 point. It equates to $30 in your option. No, it could equate to $40, $50, $20, $10, depending on what volatility is doing.
Yes. It's the simple reason why there's no, X plus Y equals Z in markets.
But that's what you're exploiting.
That's what you're trading.
That's right.
That's the whole point. I've tried to, because we get those emails all the time. If I do this and make this and I do this and lose this, I lose.
My option didn't move. I'm short calls and the market went lower or the stock went lower and I have 30 deltas. I should make $30 and I make $5. Why? Volatility is expanding.
Yes. Next slide here. The errors of delta predicted price changes from a $2 spot change in the out of the money options at different distances from the money. So we're looking at both up and down price changes here. So a $100 spot, we're looking 45 days. You have volatility of 15% and a risk-free rate of 3%. You can see that the change in the options and the predictability of the option value change is going to be lesser as you go further out of the money. And that's not a surprise because you have gamma exposure there. You also have, one of the things that people forget is that, when you're talking about an option's value, a lot of it has to do with the actual underlying price. And so puts and calls go up in different amounts because the actual underlying price changes. So when you buy puts and the stock goes down a lot, those puts are weighted delta-wise to a lower price, and so they have lower value. When you buy calls and the stock goes up a lot, those explode because the calls are weighted towards a higher stock price, and that's kind of what you're seeing here as well.
Mm-hmm. Perfect.
This next one, this one's a vol surface or a price surface, but I'm skipping ahead one. Sorry, but no, stay here. I'm a little bit ahead. So the price change here is based on time. So obviously, as you have
delta predicted price change.
Yes. Mm-hmm. So when you have more time, the delta is stickier and more reliable. When you have less time, and this goes to our segment from yesterday about gamma exposure and how it changes as you get closer to expiration. Here, when you're closer to expiration, those options are not as reliable, and that's because it moves so quickly.
The delta's not as reliable. It moves a lot quicker. It is what it is at that time and absolute, but it's subject to change.
But it changes so much. The $1 move 50 days out in time, your delta goes from 50 to 51. And so it's not a big move. With 1 day left, it might go from 50 to 75.
Right.
And so the moneyness of that option gets way, way faster as you get closer to expiration, which means that the actual delta exposure is a lot less reliable than it is further out in time. And that's kind of what you see here.
Yep.
And so getting over to the surface, so you're looking at just the change in, and what this is telling you is that the closer at the money options, the closer at the money and closer to expiring options are going to be way less reliable in all metrics. And we've talked about this a ton with theta decay numbers and portfolio numbers as a whole. If you're trading these 0-day SPX options, they're going to influence your portfolio metrics a lot more than everything else. And this is an example of why. When you get further out in time, when you go to 200 days out, the relative changes in the underlying aren't going to be that great. When you get to 1 day or 1 hour or 1 minute, the changes are going to be very, very great.
A good example of this would be if you had a portfolio typically of 40-ish day options that you put on, and then all of a sudden you change to 3-day options, 5-day options, 0-day options, and you have the same, let's say you like to have 100 deltas one direction or another. You'll watch that 100 deltas when you're in the 3-day options go from 0 to 500 intraday even, where if it was in 45-day time frame, you might, to your point, might go from 100 to 60 or 100 to 120. It's not going to move as much, and it's your money. More importantly, changes exponentially too.
Yeah.
I mean, your delta changing is palatable. Like you can taste it, you can take it down. It's not so. But when you're used to having, just for argument's sake, a $200 swing in your account every day, and all of a sudden you're having $800 swings in your account every day because you moved everything up a little bit in time. Well, it does play a little bit on, your psyche and your head. It does kind of mess with your trading.
For sure. So delta is by and large a good predictor for how option prices will respond to changes in spot price. But this is really in that, in our wheelhouse of time of our normal trades. Exception here being at the money options right at expiration. And then if you have these large moves in the underlying, of course, those are going to skew your delta as well. But really it comes down to the duration and those at the money options. And because of that embedded gamma risk that you have with shorter periods of time. And so here is a perfect example of just how much more volatile the delta change and the P&L change is going to be as you get closer to expiration. The flatter, surface further out in time. And there's a point where, it probably gets too far out in time, right? You want to have some sort of delta exposure. And so you can see kind of the drop off starts, somewhere in that 50-ish day range is kind of exactly where our sweet spot is. So at the money options, close to expiration, that's kind of the stuff that we avoid.
Exactly.
Couple takeaways here. So generally, delta times the change in spot price is a reliable predictor for the change in option prices, particularly for out of the money or deep in the money positions. Those are synthetically the same, right? So you have put call parity there. Near expiration, however, delta predictions tend to break down. So as you get closer to expiration, those at the money options become much more binary. They become much more, there's a lot more fluctuation in delta exposure, in P&L on those options. That's another huge part of the equation that my dad, outlined throughout. Large underlying moves are significant drivers for errors between delta predictions and reality, with errors increasing rapidly with larger than average moves. So that's what we kind of looked at in the first slide. So the smaller moves, delta is pretty reliable. When you have $10 moves or tail type moves, especially 1-day type moves, your delta predictability is much lesser. And that makes complete sense because you're having these bigger than expected moves. And so, volatility changes and all those things reflect in the option prices. While risk is inherent in option trading, staying active and attentive allows you to respond and adjust positions before your expectations are significantly disrupted. So just keep in mind that delta is not, as in all things in trading, there's no exact thing. There's no equation.
Or created equal.
Everybody has a variable. All trading has an unknown variable. And so you have to be comfortable with that in some way.
A good deep dive for an option jive on option pricing without even really talking about how you price an option. That is how you price an option right there on all of those slides. Good job by the team. Good job by you explaining it. You're going to see some of that in action right now with the E-mini S&Ps down 35 and volatility up 55 cents.
Oof.
Your option is going to move a lot more than you thought they were going to. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with the opening bell next. Back in 90 seconds.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Son, and you know what that means. Time for a little bit more Tasty Live. That's right, with the opening bell imminent here in about 3.5 minutes. E-mini S&Ps are down 35 handles or so. Down about 4 or 5 handles from when we first got on the show an hour and a half ago. Haven't moved that much since we've been live on air, but they've certainly had good movement all night long, about, 70 handles or so. E-mini S&P's expected move for the day, 50. That's right, 5-0. We've been in the low.
Seems light.
Seems light from the moves that we've had all day. We've had 100 handle moves almost every day. Yes, you are correct. But we've had it as low as the mid 20s, 34.5 yesterday, 50 so far today. Nasdaq down 165. Russell down 12, and the Dow is the weakest of the group, down 428 on the heels of Home Depot earnings, which is trading under 340, which is down $18. It's been sliding. It was down around $13, $14, $15. Now down closer to about $18. Bonds are up 10 ticks, mid-range to the higher end of the range. 117.08 is the high, 117.01 right now. Bitcoin basically unchanged on the futures, down 145. You can see the cash is up 1,400. The cash was trading all night long. Bitcoin futures traded all the way down to 89 and change. Ethereum up $65. That's a a 2% move in Bitcoin. Decent sized move to the upside, but as you can see here, well off of its highs, right near its lows. Oil down 13. Gold down 10 cents, traded under 4,000. It's had a $70 move on a $24 expected move for today. Big move in gold, well outside the expected move. We'll see what the rest of the day brings in gold. And silver going opposite direction. Silver down 30 cents. Gold up. Maybe we'll do a little silver gold.
That spread has moved significantly in about the last 15 minutes. Silver was down about 1.25%, 1.5%, and gold was down like 0.25%. So that spread was about a 1% wide.
Yeah,
it's now a lot less. So now a half.
Not as advantageous as it was as before.
Well, it'll be better for the gold silver ratio because silver was down more than gold was down.
Yes.
Was if you're long the pair.
If you have the pair, so
Yes.
putting it on, it's not as advantageous as it was an hour ago if you want to be long silver and short gold.
Yes. But I think we're going to be doing long gold, short silver.
We're going to see.
Because that gold silver ratio at like 80-ish.
Mm-hmm.
Interesting spot.
Interesting spot.
Yes.
Net gas down 5 cents, so 1% move. Corn, wheat, and soybeans all up and all up small. They take a back seat to the overall market. We got about 30 seconds before the market opens here. You got Target and Lowe's for earnings today. I don't think they're going to be the big ones. Let's see what Nvidia is doing. Nvidia has earnings after the market closes.
Down a couple. Down
yeah,
three,
tomorrow, down
183.
around $3.30.
Yeah, today will be an interesting day. I mean, volatility 2167, the VIX itself at 2379. So you got, I mean, they're pumping some juice in here.
They are definitely pumping some juice, or all abound.
Yeah,
all abound, 100%. There is no stopping.
Can't hide.
Cannot hide. You cannot hide from the volatility expansion that we have right now.
Yes.
Not at all. That was the quick bell there. We've been open for about 25 seconds. Even the S&Ps really haven't moved for the volatility. Even the S&Ps really haven't had that two-sided back and forth action that you typically see when volatility is in the 21 handle. We'll see what the market does for the rest of the day here. Dow is still down 440 and change. Let's see some of those movers that we have. To the downside, you've got Home Depot down 14 and change. I know you have an earnings trade on there that you'll want to look at. SanDisk, which we talked about this morning, down 10. Microsoft down 8. PDD down 5. Meta down another 5. Baidu for earnings down $5. Tesla down 4 and change. AMD down 4 and change. These are all the stocks. TSM down 4 and change. Amazon down 4 and change. Oracle, stock I need to catch a rally, down 3 and change. Let's see what Amazon is doing too.
Amazon down 4 and change.
4 and change also. Let's see what Google is doing.
The
Let's see if
220
Buffett can keep his money. Google basically unchanged. On the upside, you got gold up almost $3. That's GLD. Yeah. Lilly up 2 and change. Apple up $2 and change. MSTR strangely up $1.50 or so.
Yeah, Apple's
even the S&P's down 41.
Apple's been very, very strong in the last week or so. It really it's gone nowhere.
Yes.
It seems like it's not caught up in the AI bubble, I guess.
It's not caught up in the whole you can get caught up in its own stink, so to speak. Mm-hmm.
No.
Okay. Fair.
Getting some help from this move in Micron here down $5 and basically a scratch on this 280 strangle. It almost makes me want to close it and walk away from this stock that just seems to go up every single day.
Not a bad idea. I don't hate the play. Even the S&P's down 31.
Yeah, chopping around here.
Volatility up 50 cents. You think we hit these lows again from last night?
I don't know. I'm hoping it's done. It feels like, I mean, I think we were both kind of talking about it. It would have been nice to have kind of the
flush out intraday.
Flush out open. We've been waiting for that. We haven't got that.
No, we haven't.
It's been kind of a bounce in the morning and then they sell them all day. Like right when we get off the show, that's usually the top of the market. And then from 10 to 3, it's just constant selling.
Yeah, it's usually the sign of a bear market kind of forming when you get that kind of last chance, like you feel like you missed the bottom and then they pull the rug out from underneath you. The only thing that kind of has a little bit of a wiggle in there is the way volatility has expanded so much. So with volatility expanding so much, I think that actually gives a little bit of headroom to the bulls, meaning giving them a little bit, volatility is just too high for us to really kind of sell off. It's like when you least expect it kind of thing. So I think we're closer to the bottom than the top here in this market. Today might be the one day where we change. You had oil come down to gold come down to 4,000. You had the market come down to 66.30 and change.
Natty gas.
Oh, beautiful.
We put on that. I think that was from What's Your Assumption last week?
Yes.
If I remember correctly.
Yes, it was.
And we just did a call spread, an out of the money call spread, and Natty gas is in.
And you closed it. It was a good one.
isn't one of my most traded underlyings, but you had kind of a price extreme, and natty gas has been on a run here. Maybe it was the warm weather that we got for one weekend that
helps you out here a little bit.
Yeah, that changed the outlook there.
Yes.
So took about $100 out of that.
Nice. And you had a small loss in it too, but you had a vertical spread in there, so you were able to hold it.
Yeah. Home Depot, that Home Depot put ratio spread. We're long the 345, short 2 of the 335s. We're out in December. You think we saw a call there, or just?
And volatility is not moving. It is staying
not
dead.
move. Huh. Spooky. It seems like we're gonna have another day like we've had, where it's just been chop, two-sided action for. That's why the scalping on our segment has been great, because we've had two-sided action both ways.
You just had a 20-handle move in the spoos in no time. Just in the last 5 minutes or so.
But then as soon as we're off, when the bats leave, everything just goes to kaputs.
It does. It does. It does. It goes to kaputs. I guess that's is that a Yiddish term? Goes to kaputs?
I think so.
I think so too. Yeah, even the S&P is down 27, NASDAQ down 140. Russell basically unchanged here. Actually is unchanged right now. Now it's down 50 cents or so. I think you buy the next dip in the market here, son.
What are you thinking at? Like the 66.50? That's kind of where we were.
Yeah, 50-ish. Yeah, 45-ish, 50. Yes.
That's kind of the low.
It's 60 right now.
Do you do E-minis or do you do NASDAQ?
You can pick your poison. I think the E-mini S&P seem to be a little bit stronger than the NASDAQ. So I would rather go there. I mean, if you get the opportunity.
Oh, I would be on the other side.
Volatility staying bid.
Because the NASDAQ has been weaker. You think if you have a bounce, it might be the more volatile of the bounce.
The NASDAQ would be your play. It has a higher volatility. You can even go into the options if you wanted to, too. I mean, if you want to get smaller than the future, although I like the future play.
Coinbase finally bouncing a little bit.
Yeah, I mean, that's with Bitcoin catching a bid here. I mean, by bid, I mean, it's up $270, but it's $3,000 off of its lows made last night. Remember last time Bitcoin made its lows, I said that we would retrace that again. I don't think that happens today. I don't think it happens in the market either.
Retrace it higher or lower?
Retrace it to the downside. Remember I said, like you need that washout at overnight. Like when you have that washout overnight, maybe retest it during the day. I said it earlier in the week. I think on Monday of this week. It seems like it was, just it seems like it was an eternity ago. I don't think you're going to get that today.
Yeah, I think Bitcoin will tell the story of what's next here. If it bounces a little bit back today, then maybe we got a little bit of a short-term bottom here, because it's the ultimate sentiment trade. It's all sentiment.
It is
all sentiment.
It is most definitely.
So
most definitely.
I don't know. I wish I had something to. I'm cleaning up I had a Roku short position into earnings. I'm taking small loss on. But Roku's down a couple. I just had a leftover long put at the 95 strike that's now at the money. So I just closed that one out. $2 and change.
Couldn't be a
put diagonal
trade one
spread.
way or the other.
No, it was like 100. It was a small, like $150 loser on it. So nothing.
Right, very good.
Crazy.
Russell goes green here.
I don't have a ton moving. One of my positions, because volatility has remained bid, my positions haven't really moved all that much. Even the stuff where I have short delta isn't moving because volatility is getting bid. So you're not getting paid on this short delta that you're holding. Like you need
calls aren't moving.
Calls aren't moving.
Calls aren't moving because volatility is so high. Yes, that is correct.
Which tells you that you need kind of a chop or a small bounce, but really the vol contraction. Like if we're up 50 handles by the end of the day, but vol is down a point from here, that's going to be nirvana for my positions, right?
Really odd that volatility hasn't really moved at all. I mean, it's coming in by about 10 cents. Even the S&Ps were flirting with the unchanged just a moment ago. They were only down about 10 or 12. They're down 26 or so. 6666 on the E-mini S&Ps.
Ooh, that's spooky. That is.
All right, are you ready to take a quick 90-second break? Gold is up /GC up $2 after being down almost 100. It's had almost 100, call it $90 move
that
already.
Spread has tightened a lot. I mean,
it has.
This is good for for us if we want to put this on.
Yeah, well, we'll take a look at it right now with Futures in Focus with Craig from the CME. We'll be back in 90 seconds. It's Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
All right, so the X date on a stock, what does that mean?
The X date for a stock refers to the X dividend date, which refers to the dividend of that stock. So if you have a short in the money call and the extrinsic value is less than the implied dividend, then you would be at heightened assignment risk. So the X dividend date is something you want to make sure that you are aware of so that you can either roll or close that position to avoid that extra assignment risk. What does it mean when you hear the term pin risk?
So pin risk refers to options that are usually on a round number and the risk of a pin at the end of the day or the end of the expiration for that underlying. So this typically is applied to SPX or very liquid underlyings that have monthly or weekly expirations where the stock price or the ETF price or the index price is right at an even number where a lot of volume and open interest is.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Back, son, and before we get to this new segment, let's take a quick look at the market. Even the S&P is down 33, NASDAQ down 180 and change, even the S&P 66.56, Russell down 6, Dow down 400, volatility up 60 cents. Volatility has not...
High of the session, or just off
high since we've been on the show, 100%. Let's see what some of those movers are. To the upside, the Buckers, MSTR up 5 with Bitcoin catching a bid here, only down 110 after being down below 89. That's the Bitcoin futures I'm quoting. Costco up 4 and change. Coin up around 4. Gold up $3.50. Your beloved OKLO also higher. On the downside, you're going to have your suspects here that have brought the market higher. Home Depot, obviously, for earnings. Not obviously, but it's been down all day. 11 and change. Microsoft down 10.
We're at 66.55 on the E-mini. You think we nibble on some?
Yeah, there you go.
66.56.
Beautiful.
Quarter, so.
Beautiful.
You think we do NASDAQ too? You want to do, I mean, NASDAQ's down.
NASDAQ on a percentage basis is down more. Sure, go ahead. That was your play. Volatility up 60 cents. Yeah. I like it.
No, you have to take credit for this one. And if you lose on this, I get to blame you.
It's a deal. It's a deal.
66.50.
It's a deal.
I think that's a good spot.
I'll buy lunch. I'll buy lunch.
All right, so we're in for micro ES, micro NASDAQ. Play for a little bounce here. Hopefully vol comes in. Please.
You know, I have
Please give me something.
Yeah, you're gonna need something.
I need something.
I have I have somebody in the studio today that I've traveled with. He's our industry expert on the road. I'm talking about Craig from the CME, and then we've got a CME new segment called Futures in Focus. Welcome, Craig. Give me a little hand. There we go.
Thanks very much, Tony. It's a pleasure to be here.
Good.
The peeps have been asking for us to bring back the what was with Pete, the futures,
like a futures power hour type thing. Yeah, Pete Momat's always been our industry expert. Did you ever work with Pete?
Forex Focus.
Pete was
not that one.
Close. I was close to working with Pete. He'd left by the time I joined CME, but I joined in 2016, and I've been on the road with both you guys over the last 10 years, but this is the first time I've been on the network, so I kind of feel like I've arrived. I finally made it to the network, so thank you guys very much for that.
We don't tell you, but once you come into the studio, you never leave.
That's right. That's right.
It's all California or something
You can't
like that.
leave. You definitely can't leave. You're in forever. You're in forever. All right, my friend. Well, let's start us off here. Where we've been and what's next. What do you mean by this? What are we looking at here?
I think we're going to talk about just kind of what's happened in the equity markets this year, and like what we're looking at for the last month and a half already, right? And I think we had a slide in here, maybe just introducing CME first, if I'm not mistaken. If we're on there, so
can I just teach my son how it's done?
I was going to give you the moment.
You can close your Nasdaq futures and
the E-minis.
And the E-minis just rallied.
Wow,
yeah,
nice
10, 12 handles or something like that.
Once upon a time, I'd have to say, how does Daddy do it? And I don't know if I can do that anymore.
You don't have to anymore. You don't have to anymore.
Okay.
No,
all right.
no.
All right. I'll give you that. Here, let me wait.
Sorry to interrupt this.
Important
his first day with his new hand.
Yeah,
I'm
just learning. I've never done this before.
Important business to take care of.
I'm trying to teach Junior how to do this. It's not. It's a work in progress.
All right.
Is really what it comes down to.
I'm gonna hold that Nasdaq. I took off the E-minis.
This is when he goes again. This is when he goes against.
No, because I wanted the Nasdaq. You took the E-minis. 6650 was your spot. You took it.
We were talking about hockey earlier. In the hockey world, we give them snaps for that trade, right? Snaps.
There you go.
Like they think the opportunity is not going to present itself again. That's the problem. They think this is the only time they're going to get it. See, like right now, if he sold, we could have getting back in again. But no. It's okay.
I'm going to get back in 6650.
You don't have to work. You don't have to work with your son, right? Like
I don't get to work.
You don't get to work with your son. That's the way I should. When he misses a scalp, I say it the other way.
That's
when
fair.
he makes a scalp, I say it your way.
Yeah.
All right, my friend, go right ahead. Since we're scalping here, retail investors with futures, do they look at them? I would imagine they look at them from a scalping vehicle, right? I mean, is that?
They do, and we probably, I would say that's probably the majority of our business is scalpers in and out of the market a lot. But it runs the gamut, right?
Sure.
You've got longer term traders, options on futures traders, which is obviously less of a scalp.
Yeah.
And then certainly the sort of intraday in and out type of trader. So kind of comes in all shapes and sizes.
Very good. Very good.
We're back in. Ooh. 6650. They're moving.
You're on your own now.
I don't like it. I don't like it.
You're on your own now.
VIX up to, or the vol futures at up 75 ticks here, 2188.
You're on your own.
For example,
wouldn't want to be you right now.
I'm dying on my sword. Okay.
Wouldn't want to be you right now. All right, sorry, we're going to interrupt you. Listen, but there's business going on here.
Absolutely,
right? I mean,
and far be it for me to interrupt that. All good. Mm-hmm. We were going to talk about CME though, and it's funny because even in Chicago, I might do a show with retail traders, and they'll say, "What's CME?" Even here, and for us, we know what CME is, but a lot of people don't, and it's by many measures probably the largest futures and options exchange in the world. And that first bullet here talks about the wide breadth of products, and I think that's one of the most important things is you can trade everything from the E-mini, S&P, and Nasdaq. Like Nick's doing, all the way to things that have feet, right? Like pigs and cows and everything in between, foreign currencies, interest rates, agricultures, like I just mentioned, metals like gold and silver, energy like crude oil and nat gas. So it really kind of gives you, and then of course our newest asset class, the cryptocurrencies, really kind of gives you a lot of trading opportunity no matter what market, what might be moving.
So /BTC, you're talking about, at least for the Bitcoin.
Yeah.
Big product.
That's a big product.
5 coins, right? I would imagine that retail investors, struggle with the amount of buying power, the amount of leverage, especially in the volatility that Bitcoin's had as of yet.
Right, and BTC was the first crypto that we launched.
And
can't even remember what year that was.
Well, the notional
Solana coming too.
Yeah, that's Solana's out there.
But I think when you came out with the futures, I think Bitcoin was closer to 20-ish.
Yeah, I think that's probably right. So even then, it was even a big contract then, especially given the vol that you mentioned.
Sure, but it's a $500,000. I'm just
$500,000 now. So we see a lot more individual or retail trading in the micro Bitcoin, right? Which is 1/10 of a Bitcoin. A lot more manageable for individuals to trade than that 5 times a Bitcoin.
Yeah. But a lot of these products, I mean, we trade. We traded the natty gas futures options today.
Yeah.
We've been trading the euro a ton because the euro, like the FX markets have been pretty volatile relative to what what I've been used to them trading over the last couple of years. You've had a lot of interest rate decisions, a lot of changes in the currencies that have been good, have been tradable there too. So the futures are a good way to get, especially with the options, you can get a little bit of diversification and size them pretty small, and relative to the span margin that you get, it's a pretty capital efficient way to put something on to get something I'm not normally, that isn't my bread and butter, but gives me some diversification, gold, silver. I mean, we were scalping the SIL yesterday. It's 100 multiply
1,000 ounces. Yeah,
1,000 ounces on the so it moves $100.
$100
a full
point.
point.
Full point. We like getting small. I mean, as retail investors, because futures, the dig on futures, at least when I got in the business in the 80s, was always how big they were relative to options, relative to stock.
Yeah.
They were always just so big for the retail investor. And now these smaller products, they fit right into the realm of 100 shares of stock. 100 shares of stock for a retail investor, I mean, that's what we trade. I mean, and we're all about retail investors here.
Yeah.
You know that. From being out on the road with us, but this is what we.
Well, maybe it makes sense to flip forward to that slide that's got the multipliers on there for the E-mini, so we can explain what we mean by that. And just kind of a little history lesson before 1997. So we've got the E-mini and what we call the E-mini S&P and the micro E-mini S&P up there. And if you go back to 1997, we didn't have a mini. We actually had a product that no longer exists called, I guess we call it the standard S&P, which was a product worth 500 times the value of the S&P, which even back then was a big product. You can imagine, I think that's $3 million if that still existed today. 500 times about 6,700, I think, is the S&P.
Right.
So in 1997, we introduced the E-mini, which now is actually our bigger of the two products because we launched a micro E-mini back in 2019. And so what we mean by that is, and this might be the biggest hurdle for someone that's familiar with options on stocks or stock trading, is that it's not shares, right? So people can think if you buy one share of Nvidia, you own, what is it, $400? No,
Nvidia's like about $180.
$200. You own maybe $200 worth of Nvidia if you buy 100 shares, 100 times 200, and so on. Yeah. With futures, instead of a per share, we have what's called a multiplier. So the multiplier on the micro is 5. So essentially what happens is that if you trade one micro E-mini S&P, that's about, $33,000 worth of exposure to the S&P, whereas the mini is 10 times that at $330,000.
And it's only $1,000, $2,000 in margin requirement for the micros, which makes it really capital efficient for, like what we like to do with these just in and out, you take 10, 15, 20 handles.
Yes.
Ideally, not.
It's called trading, right? I mean, just trading is what you're trying to do.
That's exactly right, Nick. And really that capital efficiency, or let's call a spade, that leverage is really one of the most attractive things about futures to retail and incidentally to institutions as well. So that's a really important point, is that you can control a lot of exposure with relatively little capital. But I never talk about that without talking about the other side, right? You have to be a good risk manager when you're talking about these levered products.
We get a lot of people that trade the E-minis, the big contract as the core position, and then kind of scalp micros around it. So, like if the way you can look at this is one E-mini is going to be equal to 10 micros. So you can scalp up to 10 contracts to kind of flatten out and move your delta as or move your exposure, I should say, as the market moves. So like if you don't want to get out of a long E-mini position, you want to take off 10 or 20% of that exposure, you could sell 2 of the micros against it. That takes it out, and you can kind of scalp around that position. So the smaller contracts kind of give you a little bit more flexibility around the bigger ones, and the leverage that you get on both those products, span margin kind of takes it into account as well, and account size as well if you're in like
great point. I mean,
it's basically not free, but the margin is baked into the position already. So
it's a great point, whether you call it scaling in and out or scalping around, and that's true of like a futures position or an options position if you want to trade around it, right?
Yep.
So I think, Tony, you had on that slide. So that's kind of what I wanted to say about the mini and micro. And I guess the last thing to say about that is if you've got one mini on, which is the bigger product, and it moves 1 index point, that's a $50 move to your P&L, whereas the micro, if it moves 1 index point, that's a $5 impact to your P&L. And again, it's not rocket science, but it's just one of those things that people have to understand, that multiplier, if they're used to stocks and not futures.
You'd be surprised how different it is when you're used to stock and not futures, having a multiple.
And I always say you just have to learn it. Like it's not splitting the atom, but you just have to learn it, and then it becomes second nature.
No, we called the CME traders knuckle draggers. I mean, so it's definitely not rocket science. I mean, that was coming from the CBOE guys. Now I'm everywhere as a retail investor. I can trade
everybody's people now.
Yes, for sure. You were knuckle draggers at one time. Not anymore. You've evolved. It's okay. You got very sophisticated.
So we were just looking at kind of what's happened in the stock market up until now, and this was, I think we did this on Friday last week, so maybe these numbers have changed a little bit. But we've had another remarkable year, really, in performance, right? With the Nasdaq up almost 18%. But that all happened the first 3 quarters until the shutdown, right? And I hadn't realized that, but the shutdown coincided with the first day of the fourth quarter. So essentially, we've been flat since that happened. Now I think we're probably down a little the last couple days. But nevertheless, they always say that what does the market hate the most, right? Which is uncertainty. And certainly we've had that in spades because we haven't had even any economic releases.
True.
No jobs reports, no CPI, no PCE. So kind of flying blind a little bit,
And futures traders really relied or really looked at those numbers a lot. I come from the option world, and I would say we really didn't focus as much on them as traders from the CME and futures traders trade them. Even going down when I traded in the bond pit, very focused on what they were, what they were going to say, the guidance, everything. It was really it was a phenomenon I wasn't used to.
Because maybe a little less directional.
Yes,
in
exactly,
the
exactly right, right.
And so that maybe wasn't as much of an impact. So now we're waiting on all these numbers, and of course, all of these numbers sort of lead into what's the Fed going to do, right? And that's
another one.
My boy's on tilt now.
I'm on. Hey, but
my
we're
boy's on
keeping
tilt
the
now.
size right. Okay, we're keeping the size right.
I get it. I actually
25 or 24,575 is where I added a little micro Nasdaq here.
The volatility up 83 cents, just coming off highs it just made a moment ago. So you might
22.
You might get a reprieve here if you're not too stubborn this time, like you were last time. Didn't listen to your dad. Please continue, Greg. Sorry
Thank
to interrupt
you, Tony. No, not at all. What we're looking at here is an excerpt from what CME calls its FedWatch tool, and basically this tool takes our Fed fund futures and does some math to it and comes up with some probabilities of what the market is saying the Fed might do at its next meeting. And what I like about this is that it's not an economist or it's not an analyst saying this is what I think the Fed's going to do. Sure. It's literally what the market is saying it thinks the Fed's where the money is. It's where the market has put its money. So what's happened here is if you look at that first row, the December 10th meeting, that probability of moving from a 375, 3 3/4 to 4% of Fed funds rate down to 3.5 has dropped from about 90%, I think maybe even over 90, to less than 50%. So, and that's happened fairly quickly. The market has sort of repriced the probability of a cut in December, which might be some of the volatility that we're seeing in the market too.
Oh, well, absolutely. I think that's probably the driving factor right now, our interest. But conversely, it's funny. bonds have hung out at 117 and change. The same that when you had almost a 80-90% chance on the Fed Watch tool, they were around 117. Just extrapolating out half a point one way or the other.
Yeah, no, you're right.
And it hasn't. The volatility hasn't been as high as you would expect with the movement that we've seen.
You got it today, Vol 22.
No, in bonds.
In bonds.
Bond volatility, it's to your point. We've been sitting in the 116 to like 117 and a half for a couple weeks now, and it felt like, you got a lot changing in these projections. I mean, it wasn't too long ago where we had 4 cuts, basically.
Almost 100%, yeah.
And now we're sitting here with basically no cuts through the end of the year, or at least that's what the projection.
That's what the market is saying, right? And I think there were a few Fed officials that came out last week and a little bit more hawkish than people were expecting. I think has led to some of that.
Yeah.
But yeah, but the market has been, and again, the last couple days maybe notwithstanding, pretty resilient to all of this stuff.
Sure.
Here's the volatility I think that you guys were looking at, which I think you were just mentioning is moved up a little bit again today.
2210, we're at the highs, up 4% on vol futures here. So they're pumping some juice in.
They are pumping some juice. Vol numbers that we haven't seen really, since the middle of this time, October, about 1 month ago, we had volatility trading up around 22, 20.
We're well past the Friday spike in volatility.
Well past the Friday spike in volatility, yes.
So. And again, I think we're getting Nvidia earnings tomorrow, right?
Yes.
And then I think a jobs number, is that Thursday, the jobs numbers?
We get the job numbers, and I think there's Fed minutes that are coming out. I don't know if they come out after the jobs number. I think it's...
Which I don't know what it all means. I think it's already moved.
Well, we'll see what it means
in the market.
Move, right?
I mean, I think it's really set it up. I mean, it's made for it, man. Maybe when Craig's done, we'll do something like, with volatility so high, I think it warrants a trade on both sides. Maybe something in ES, like an Iron Condor or something like that. You're going to be able to go further out of the money just because we're talking about volatility here, right? Just as an example, with volatility significantly lower, same probability of success on your short strikes is going to be a lot closer to at the money. Now volatility is further out. You'll be able to go further out. Same product, it hasn't changed, right? But you'll be able to go further out and collect the same amount of money. So you can bet a little bit more and stay right where you want to, have a little bit more risk, or you can have a higher probability of success, lower reward if you go further out of the money.
Yeah, I think that's good if you want to get into that, because I think what you were planning on using were options on that E-mini that we were talking about before. So, and it's an important point, just even before you get into it, is to note that all of those products that I was talking before also have, and Nick, you sort of alluded to it, they all have options associated with them. And so it just gives you that extra flexibility, just take different positions in the market.
Very good.
Cool.
Well, do you have it up there?
Yeah. Oh. I was thinking, because vol is expanding today, so maybe we move this a little bit further out of the money and kind of take advantage of some of this expansion and volatility.
Oh, I would. I would be with my short strikes closer to the 30-ish delta.
I think we do through the end of the year, though. I think this will be like our kind of core spot, like a core position type thing where we put this on a little bit wider, keep it on as a bigger size. I'm thinking like maybe around the 20-ish delta, we'll call it 3,200.
Sure.
We do like the 3,200, 3,150 on the downside. On the upside, you want to play for the 7,000?
Sure.
We put a
put a round number on the upside. Yeah.
Yeah, 7,750. And this sort of setup is kind of our cookie cutter. 1/3 the width of the strike, so it trades at about $800, which is about 16 ticks. Or 16 points, I should say. Max loss of about 17 points.
Let me just stop you right there, because the 16 points, and again, because I just want to reinforce this.
Sure.
If you were looking at equity options, you would sort of intuitively think times 100. But again, this is a $50 multiplier that we talked about, and that's how you're coming up with that dollar amount, right, Nick?
Yes, exactly. So it's a sizable position for us, but it's
sure.
Yeah.
Sure.
So,
but it's 50 cents a point is what
50 cents a point.
Is what you're
Same
saying,
as the
right?
futures.
Or $50.
$50 a full point, right?
Yep. Very good.
All right. I'm going to try and get filled on this. And
volatility making new highs. Even the S&P is down 82. You brought some volatility, Greg, with you.
Yes,
I don't know if
did,
you left any at the CME, but you definitely
like
brought
that,
some,
though. We need
some
that.
volatility here.
And then I think the last thing to point out on the options that you just did is that they enjoy that same what we call span margining that you mentioned before, which is that same margining system that we use for futures, which is essentially going to kind of give you that capital efficiency over some of the products that might be similar, like in the securities markets.
Very nice.
You think we do this gold-silver ratio too? Want to do this with the micros?
You could. Gold down 15, silver down 50 cents. Silver down almost.
When's the flight to quality happen where you get gold?
Well, gold did have a rally off its lows. It traded down to 4,000. It's back to 4,050 right now.
You want to do it at MGC? So the ratio MGC and SIL is the same as the outright, the bigger contracts, right? I mean, so it'd be one gold to 2 silver would be the
other way. And in fact, we've had some debates about this.
Correct them, Craig.
We've had some debates about this on the road. The notional size, I think this is a great case study, though, because the notional size is actually similar with those two products, 40 to 50,000 or something like that.
Okay.
But silver trades at like twice the volatility that gold does. And
so when you
that's
adjust
why
it notionally, you got to do a little bit more. Okay. That makes sense. It's 2 to 1. That makes all right. We're gonna put that one on too, and you could do that from the pairs trader on the platform. I can show this just when you're in the presets, you can change them to the micro gold versus the micro silver. You long 2, short 1, and this will give you a chart of the pair. You can see it on a day, month, yearly time frame. You're kind of near the lows here, so.
You sure are.
Yeah. So I think this is the spot. E-mini's down to 83. We're at 6,600. We're just talking about 6,700.
What a difference
30 minutes makes.
35 minutes makes. Yes.
Very good.
All right, takeaways, Craig. You're overstaying your welcome already.
I don't want to blow my pilot episode.
We own the network here. We can do whatever we want. I love having you on because it makes it so much easier for us to look at futures because that's what we're talking about here as opposed to just going into the equity side. And the futures really provide a lot of bang for your buck. The only thing I would caution anybody in anything they do is to keep
size.
To keep their size. Keep their size in check. Just remember, it's very easy to click on the button.
Right.
You never realize how big small really is. If you're 100 share or 100 delta in the option world and you're doing one future, you're probably there. You know what I mean?
Right.
So be careful. Maybe go to the option side. Like we just went to the Iron Condor. That's going to have a much smaller delta to it. You don't have to just trade the futures. But futures do give you a lot of bang for your buck. And there is a lot of opportunity with them if you stay nimble in there. Just don't marry them.
I think and that's why I said I'll never talk about the capital efficiency of futures without bringing up the other side, right? It's powerful when you're making money, and it's just as powerful when you're on the wrong side. And that's what you mean by watch your size and manage your risk and everything like that. And I think that's really important. But I think we've touched on them all, right? We've talked about the capital efficiencies. They're open, we open on Sunday night at 5 p.m. We're open essentially till Friday at 4 p.m. 1 hour between, and I'm talking about Chicago times now, between 4 and 5 we're closed every day. But other than that, Sunday evening through Friday afternoon, we're open. And again, I know this is changing a little bit in the securities world. There's no pattern day trading with futures when we talk about the scalping and stuff like that. So, I think we touched on a lot of them.
For knuckle draggers, you guys are pretty smart because patent day trading for retail investors is probably one of the worst.
Hopefully goes away soon.
Rules, hopefully by Q1 of 2026. But one of the worst rules that ever came out. It was made for all the right reasons. It was just the worst application to it. If you can't get out of a trade because you're going to put yourself in a patent day trading rule, which you don't have any, which is awesome. It's a silly rule.
So we got on the Iron Condor in ES. We did the 43-day December 31st expiration, so right into the end of the year. 6,200, 7,000 is our range there on the Iron Condor. We also did the gold-silver pairs trade with MGC and SIL, which are the micros. So we're long 2 contracts of the micro gold, short 1 of the micro silvers to play into that pairs trade. So we got a couple trades on.
Yeah, we certainly do, and you can see all those obviously on the file page.
Yes. Good
Very
stuff.
All right, my friend.
Awesome. Well, thank you guys very much.
Thank you so much. I hope you come back. We'd love to see you again, maybe like twice a month or something like that.
I look forward to it. Yeah.
Yeah, awesome.
Very
You can give us, when we get to know you a little bit better, the audience gets to know you. Give us a little update on your son, who's a real hockey player, not like my little JV guy, but
no, not at all. But I'm happy to do that. I'll talk forever on that. So you got to be careful what you offer there. But
Understood.
Yes, thank you.
Understood. Yeah, you're welcome. You're welcome. All right, let's take a quick 90-second break and come back. Even the S&Ps are down 70. NASDAQ down 340 and change. You would think even the S&Ps down 70 would be the lows.
Came in a little bit.
Vol did come in a little bit. They're about 20 handles off of their lows. NASDAQ down 345. Russell down 13. Russell's been the strongest of the group. And the Dow down 500 and change, equal with the NASDAQ, which is the weakest of the group, and the even the S&Ps on a percentage basis. Volatility, which my son was just talking about, trade up to 2232, made a new high. It's 2190. We're going to take a quick 90-second break and come back. We got more Tasty Live. We'll talk more markets, and we'll talk about a market measure. Bitcoin basically unchanged. Oil down 40 cents. Gold down 18, off of its highs, off of its lows. Lows of around 4,000, highs flirted with 4,100, 4,080 and change is 4,055. Silver down 50 cents. We'll take a quick, go ahead.
No, it's good.
We'll take a quick 90-second break and come back. We got more Tasty Live right after this.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on tastytrade, named best online broker for options trading. Genius loves company.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
We are back, son, and you know what that means. Time for a little bit more Tasty Live with a market measure. But before we do that, let's take a quick look at the market. Even the S&Ps down just about 70 handles, 71. Volatility back to 22, 22.05. And NASDAQ down 360. Russell leading the group. Clubhouse down 10. We're off of our lows on the E-mini S&Ps by about 23. I'm looking across my own positions here. Volatility definitely seems bid here for sure. Gold hanging in there, only down 14. What are you looking at right now?
Now I took off.
I think volatility is over for the day. I mean, I think the highs are in.
Highs for volatility, lows.
Highs for volatility, lows for the market.
You get another.
I sold a couple of
micro?
puts in SPY.
Are you gonna make me do it?
Am I gonna make you do what? Oh, you did it. Oh, you.
Oh wait, I did the.
You bought more Nasdaq, but you did the NQs.
I did the big daddy.
Oh, you got yourself. Oh,
I'm a close.
Now you're all in discombobulated. This is a trader on tilt right now, ladies and gentlemen.
Ugh, that makes me sick.
There you go. At least you're flat. Now they're right back to where you bought them.
I know. That's what I was like. I did the big boy. Well, now they're lower.
Now they're lower again. It's going to be a scalper's.
It has been. I mean,
it has been. It has been.
You've had action on both sides of the market.
Yep.
I also close out. I had a leftover put from a put diagonal spread in a firm into the up move on earnings. I left the put on, and this is kind of why I like these diagonal spreads, because you get a little shot to get your money back on some of these things. They're defined risk. You don't have the tail risk. You have some positive gamma if you're directionally right. If you're directionally wrong, you're defined risk. So you can only lose so much in these options. You know, it's a lottery ticket, and so we got bailed out on that one.
Yes, and putties have been very beneficial to people these days.
Do you want to look at net? It's
look at this volatility completely wrong. Up another $1, up $1.05 now in volatility.
You cursed me.
Yeah. Even the SPs haven't made their lows yet, but yes, volatility still bid. They're gonna make it tough, son.
Yeah,
they're gonna make it tough.
No, this has been.
Mama said there'd be days like this. There'll be days like this, Mama said.
What do you think about doing like a wide iron condor in Cloudflare?
In what?
In net.
NET?
NET. It's why the.
It's why I can't be on Twitter right now.
Yeah.
NET down almost $8, traded down to 87 and change, about $7 off of its lows. Dece options with 31 days. Markets are a little wide here.
Some of them are better. Some of the strikes are better than others. But when you look at open interest or volume, there's just not enough. I mean, like there's
nothing. You can't do anything.
On the call side, you've got some.
You got one little something spread traded here. Maybe like the 200, 230, 240, 250 condor, not iron condor. Somebody probably trying to buy a little bit of a dip here, similar to you were looking to sell a little bit of premium, but it looks like they bought a little dip here.
All right, next time.
Best laid plans of mice and men.
That's okay.
Mm-hmm.
Oh, too soon, guys. Too soon.
Too soon.
Let's do it.
Let's go. I'm ready.
Market measure. Why vol spikes harder than price ever could.
So profound.
Why do you think it does?
Why do I think vol spikes harder? Vol spikes harder than price? Oh, because price has a premium to it. You know, like there's time factor to it. So I think that's what I think.
Well, that's good.
But we'll see.
And just the
I mean, are you talking about options here?
No, just in general, like vol spikes versus price spikes. Because you usually have vol expand a multiple of what price actually does. So like, you get a 10%.
Vol's up 5% right now. Market's down 1.25%.
Yes. Mm-hmm. Why do you think that is? Why do you think volatility expands more? You think it's just like perpetual fear?
Fear-driven. Yeah, sure. Fear's always overstated.
Yeah. Don't you think we'd all learn that fear is always overstated? Like the meteor can only hit once. That sort of thing.
But the media hits a lot of times in the market. It's not like humanity, unfortunately. When the S&P is down 80, 81.
Pain. Implied volatility and price returns of an underlying are two main changing factors that affect the price of an option. This goes to what we talked about with delta.
on the option jive today, which was another great one. There's a lot of factors that change option prices. There's no basic formula that you can do rough back of the hand, X plus Y equals Z. There's a lot of variables here, and they change second to second.
Sure.
Right now, when you're looking at the markets, the price is what it is. It can change the next second. And so you have to understand that and be comfortable with that variable here. But we're going to isolate kind of volatility and price here. So because volatility and price returns are probabilistic in nature, meaning that there is no certainty, there is no certainty where volatility will end up tomorrow or what stocks will do tomorrow. You always have that uncertainty baked into markets. It would help to know what their possible range of values are, i.e. their distributions. So we're going to be talking about distributions of volatility and price and seeing if we can gather some intel here on the SPX. So
let's do it.
Let's take a look here. We're looking 2020 to present, so we're looking at 5 years of data here. We're looking at SPX. We're looking at IV, which is implied volatility, the actual implied volatility of the underlying, which we typically look at a 30-day time frame. And then we're looking at IVR. So the IVR is the relative range of the underlying's implied volatility. It's the context to tell you what IV is relative to its range. Is it high or low? It's one of those things when we created IVR and IV percentile as well, those things are a measure of the IV number itself. If I told you implied volatility is 50%, that doesn't tell you whether it's high or low. It's high relative to SPY or SPX volatility is usually.
We're comparing apples to oranges.
But you don't know what without knowing the range of implied volatility, you can't say whether the IV number is high or low, and that's what IVR does for us here. So we're looking at IV, which is the underlying implied volatility, and the implied volatility rank. We recorded the SPX price returns, and then we looked at the VIX IVR divergence. So we're looking at how high volatility is relative to where IV rank is in SPX. And so we're going to see why vol spikes harder than prices in this analysis here.
Very good.
And so this next one, price returns are roughly normal, are normally distributed with some kurtosis and slightly negative tail skew. And so this is what you'll see with.
Don't look now, your NASDAQ's 580.
Ooh.
You bought them at 526. You bought them at 542.
We'll take.
Oh no, you bought them right 586 and 581. Good job out of you.
It's small. I mean, I need to lighten up the position a little bit. Got a little gung ho, boom boom.
You got a little gung ho. Yes, you did. Gold back up, down 11 off of its lows, and even the S&Ps have rallied about 25 handles to down 60. Volatility flirting with 22, still up 85 cents. That's a 4% move as opposed to a 5% move, which I just quoted a couple of minutes ago.
So this is what you typically see with prices in major indices, right? This is why put skew exists, is because you typically see, pretty normal distribution with much wider tails to the downside. You usually see these bigger moves to the downside, which is why you have that downside skew in equity markets. And so you see this negative tail to the downside here. That's pretty standard. Jumping over to the next slide here. So here, volatility, however, is distributed with what is called a chi-square fashion.
Oh,
did you know chi-square?
No, I had no idea.
I didn't either. This means, though, that volatility cannot go below zero, of course, and it has a large noticeable positive skew. And so you have a inverse correlation here and an inverse skew. Volatility has upside call skew because it explodes higher, and equities have downside put skew because you typically see the bigger moves to the downside. And you could see, that volatility, if you look at volatility futures or like if you're looking at VIX options, there's tons of upside skew, and that's because of what you're seeing here. These occurrences where the VIX has these really big tails, and it can only go so low. There's a baked-in floor here. There is a floor because there can't be zero.
Right.
Premium, so there is a floor here. So you have this upside tail skew in volatility futures.
Well said.
Next slide here. So the main difference between the two distributions is price returns are essentially symmetrical around zero and have roughly an equal chance of having an up or down move on a day-to-day basis. When you look at that distribution, it's basically 50-50. When you talk about over long periods of time, you do have that positive drift to market. So it's about 52-48 in terms of when you look at the long term, and that's why markets are higher now than they were in previous years, is because you have that positive drift to the upside. Volatility tends to cluster around its median of around 15, but when it moves big to the upside almost exclusively. You don't see these 5 or 10 point 10 handle moves to the downside in the VIX. I don't unless it's very, very high. It happens after, reaching a high. So you have that price skew to the upside in the VIX itself. How does this divergence between the VIX and IVR behave when measured across trading days? In other words, how do changes in the VIX compare to shifts in implied volatility rank over time? And what can this divergence tell us about the market conditions? So now we're kind of tying together VIX and IVR itself to give you an idea of is there a time where you've got high volatility but also high IV rank, so high volatility relative to itself? Is there a sweet spot? That's what we're kind of looking at here. So jumping to the next slide here. So most days show negative divergence. So this is where IVR is greater than the VIX. So the VIX number, because it stays clustered, it typically stays in a range, and IVR will fluctuate in a much more than the VIX itself. The VIX will stay at 15, 16, 17 for long periods of time, but when it spikes, you see that divergence. So indicating that option markets remain elevated after VIX cools down. So you typically do see premiums stay relatively high even when vol comes in.
That's correct. It usually takes a little bit of time. Like everybody, even though volatility is coming in, market wants to see that volatility coming in is warranted. So it's not a one-to-one linear thing.
So positive divergence, so when the VIX is greater than the IV rank, is rare but marks panic moments when fear spikes faster than option pricing. So this is, and you can't really trade this. It's very hard to trade this VIX greater than IVR because you have to be in the moment. It's not something you can play for into the future because you have all these components like drag that affect option prices. You can't play for this spike in VIX, but when it happens, there is some opportunity there. So the edge that we're kind of looking at here is selling premium when IVR is greater than the VIX. So this typically happens after the spike in the VIX. So you have the spike in the VIX, implied volatility remains kind of sticky, but comes down a little bit. And that's because you have that kind of slow, and you can even kind of see it here. When vol spikes, it doesn't go straight back down. It kind of has a slow tail off. And that's kind of your time where you have the spike and you get a little bit of
so you don't have to catch the top and the bottoms is what you're really looking at here. There's time to do something in everything, right? There's definitely times that you're going to be early, and there's definitely times when you're going to be late, but you don't have to hit the top and the bottom. You want that meat in the middle there. You just don't want to ramp up when volatility is extremely low so you don't get that big spike up. That's the biggest cardinal sin you can make.
Yes.
FOMO again.
Good stuff. Couple takeaways. So price returns are roughly normally distributed while volatility follows a chi-square distribution. I think that's the first time chi-square has been mentioned on this show.
It's the first time, and who knew?
The main difference between the two are the tails. Price returns are skewed a bit to the downside, so you have bigger, fatter tails on the downside typically, while volatility has a large noticeable upward skew. You have these tails on the upside. This is what markets are. This isn't a shock to anybody. This means if vol goes up, it tends to shoot up and float down, whereas price can go up or down with the same velocity. So, this is why, we've been talking for the last week, this has kind of been a trader's market. You've had prices go up and down while vol has remained, steadily increasing.
Sure.
It's that divergence where on short periods of time, these can go opposite directions, but when you have tails,
they both go to the tails, and that means volatility explodes to the upside, prices explode to the downside.
Very well said, my friend.
Thank you.
Even the S&Ps down 63, NASDAQ down 330 and change, Russell down 6. That's your leading the clubhouse to the upside, only down a quarter percentage point. Everything else down 1% or more. Even the S&Ps down just under 1%. Bonds still trading 117.09. They're hanging in there. Bitcoin up almost 1,845 to just under 93. Traded down to 89 and change last night. Gold is down 10. It traded down to 4,000 last night. It's 4,060 right now. Gold and Bitcoin trying to elevate the market a little bit. NASDAQ, even the S&Ps and the Dow are saying no bueno.
Well, yeah. Volatility has
22.
22.
Still elevated. Got up to 22.32. $22.32, but sitting right there at 22 up 85 cents. That's still a 4% move.
If they reverse this Bitcoin move into the end of the day,
you think Bitcoin has that big of a bearing? I almost feel like the 30% move in Bitcoin is already reflected in the market. And I think Bitcoin,
for sure,
I think it's already kind of a non-entity. I would look at bonds more than I think we can go back to traditional. Like look at bonds and gold more than we can the cryptos. I think that Bloom has left the rose at this point with influencing the market.
My angle was that after a 30-40% move in Bitcoin, if they come in and sell this even more, it tells you that nobody wants anything. Like you don't want any, you don't want to be in any of the FOMO stuff right now. You know what I'm saying? Like they've already you got it. You whacked everybody that's been long this. I mean, like, everybody got some pain here.
Let's take a look at some of those painful stocks. Meta down another $14, even though Microsoft has been a lead in the clubhouse, down 13 and change. It's down to numbers that it hasn't seen since this summer. MU down $12. It never goes down. Tesla down 12. Home Depot for earnings down 12.5. AMD. These are all leaders in this clubhouse APP. Even Carvana. I mean, Carvana didn't have a downtick until October. Carvana's now.
We do something in AMD right now. What do you think?
AMD, it has good IV rank of 45. It's actually, as you can see, everything here has been expanding over the last 5 days. 8.5% implied volatility expansion over the last 5 days alone. AMD off of its highs of 267. It had that big gap from around 160 to 206. What are you looking to do in AMD?
I mean, volatility has certainly increased.
Volatility certainly increased. December, January would be your first call. December with 31 days.
In December, just because you
do have 4 vol differentials here. I mean, you could do a Dece Jan if you really wanted to, or just stay in December trying to make the move. I mean, AMD is not down as much as some of these other stocks.
No. What do you think about just doing a strangle?
You certainly could. You certainly could.
So we did.
What are you looking at? What are you looking at doing? Like, I mean, you can go all the way down if you want to go further out. You can go to the 10 delta options and still get yourself around $5 or so. If you did like the 280, 180.
I was looking at the 190, 280, which is delta neutral. If you want to lean a little bit short, you
can lean either way you want. It doesn't matter to me.
I'll meet you halfway. The
185,
185,
280,
280.
Yeah, you're outside a standard deviation, which is going to give you, that 70 plus pop, 68%.
I'm going to try at 570 here. All right, we're in.
Beautiful.
570.
All right, awesome.
And we have that, we put on that E-mini position, which I don't think will move right now, but
/ES that we did.
Yeah.
I don't think it's going to move too much either. I mean, that's going to be a little bit of a longer term play. We went in 43-day options. You have defined risk. It did go, $50 wide on each side. So you got significant risk in there, but it's not going to move with a 10 or 15 handle move in the E-mini S&Ps.
Yeah.
Volatility now 21.85. This is about as low as it's been for the last hour or so. E-mini S&Ps down 58. Russell flirting with unchanged. We'll be back in 90 seconds. You listen to Tasty Live.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Okay, cowboy, here's an earnings event. Keep an eye out for them when you open your trade. They're fast, they're loose, and they can take you for a wild ride. But that's no reason to steer clear, because you can be your own personal earnings event if you take the bull by the horns. What makes earnings events so special? Before the event, people will start guessing how the stock will move once the earnings report is released. That, in turn, makes the options IV rank higher. Like way, way higher. The nearer the event, the more the speculation, the higher the IV rank. Then right after the event, IVR goes the way of the buffalo. If you sell high premium options right before the event, when IVR is really high, you can take advantage of inflated prices and lock your profits when volatility disappears. Only if, and this is a big if, the stock doesn't move against you. If it does, well, sometimes you eat the bear and sometimes the bear eats you. Earnings events can hit you hard. They can also pay off big and fast if you play your cards right. Pretty simple.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
We are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right. With this man. Q, help us. Even the S&P is down 77. Volatility up 90 cents to 22, about as high as it's been in recent history.
Oh, yeah. The markets are moving. I mean, we've got...
How's the trade desk?
Well, trade desk was very busy at the open. Now it's sort of calmed down. A lot of the margin call situations and excessive risk have been solved by then.
We don't talk about that.
All right, well, it is really, it's a real part of trading when you're...
It is.
So, yeah.
It's the unit size that we talk about.
Yeah, it's a lot of...
Small, that's part of the tagline, Q, okay? Say small.
Yeah, it's a lot of the time when, maybe customers are trading a little bit bigger than they do typically. That can sometimes result in margin calls or excessive risk and things like that. And so that's usually solved within like the first hour and a half of the day. And so, the trade desk has been slowing down a little bit, thankfully. But yeah, it's been a fast market this morning. I mean, you guys have been scalping futures, things like that.
Yeah, some good.
Not as great as my past performance.
You're only as good as how you've done lately.
Yeah, what have you done for me lately?
That's correct.
Yeah, not great today, but we're okay. We're
Did
out.
you just do an Nvidia?
I just closed out a 220 call.
Got it.
Sold it out at 325. It's at $1.60. I don't know.
Nice.
I'm buying the dip. I told you I'm falling on my sword.
Don't do that. Watch yourself.
Yeah, I know. Are we buying this dip? I think I was looking at the ES. We've got 4 red bars. I don't know the last time that's happened in
Never.
a row.
It's
daily.
been 1987 when he.
So,
Not
yeah.
since ever.
The young people get so much flack. All you do is buy the dip, blah, 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 blah. We've had the tariff tantrum, which was massive. We had COVID, which was the 3rd biggest vol spike in history. Okay. Do those count? We had the yen unwind. Yeah.
But you've never seen a market drop from highs.
Oh my God.
What do you mean? COVID was.
COVID, yeah.
COVID was
day
a crash
eventually,
from,
yes.
and the Trump tariffs were basically bad.
Yes.
You know, I'll never forget the yen unwind. I will never forget because that was like my first day on the trade desk where it was like the market's cracking. I remember like running to work in the pouring rain. My shoes were soaking wet. I was like, all right, you know, we need to take care of business today. And it was all day slammed, as you can imagine, right? But
And if you look at the yen, it looks like it never recovered.
Yeah.
It has
All day,
had spikes.
we
I'm just
were-
kidding.
Yeah, trade desk was really busy. Trade desk was really busy that
All right, well, let's get to your list, and then we can let you go, and we can get Glenn in here. We can talk about Forex.
All right, let's go over a top 20
You were
symbols.
just alluding to.
Top 20 symbols in their IVR. You've got Tesla, 22, Nvidia, 40, Meta, 30, AMD, 49, Amazon, 34, iBit, 72, Palantir, 28, Microsoft, 31, TQQQ, 51, SoFi, 42, Google, 39, Micron, 84, MSTR, 33, Apple, 22, GLD, 59, Home Depot, 28, UNH, 28, Netflix, 25, Intel, 37, and CoreWeave, 31. I've also got one last thing I'd like to cover. It's Tuesday, so we've got a demo today at 1 o'clock. tastytrade.com/webinars if you want the official link. If you're Nick, tastytrade.com/demo. Also, if you're Nick, tastytrade.com/demos. You want it, you can find it. We've got vertical spreads today, going over managing vertical spreads, how to implement those into your account. Of course, placing some live trades as well. We've got a live funded account, you know. We're placing real trades in a real market, not a demo account. Real trades, you know, real fills, real working of orders as well, which the customers always like to see, you know, how are you working this position and things
No
like
demos here. Real risk.
Well, no demos with fake money, right? Yes, I agree with you there.
Yeah. Oh, yeah.
Yes.
Yeah, so we'll be going over
Yes.
all of that with myself and then Big Ant-Man, Anthony, one of the managers on the trade desk. So that'll be good. Feel free to sign up. Yeah, I've got like nicknames for everyone. I call him Ant-Man. Anthony, he goes by most other people. I call him Ant-Man.
I like it.
Feel free to join. We'd love to have you guys. And then thank you very much, fellas, for having me on this busy day.
Awesome. Good job out of you. Who is our next victim? Oh, it's you.
Victim is apt.
G-Money, what's up, brother?
I'm always scared right now.
You're a little scared?
I'm always scared.
About?
You.
No. Oh, no.
I got to bring my A game.
No, come on. I do nothing but protect you. I treat you with kid gloves. You kidding me? I mean, I even gave you one of my scallops. I only had 3.
You did not give me one of your scallops.
Give you half a scallop? No, I told you can't have scallops because you didn't order them.
Right.
You wanted them.
Because we were going to
But
go in on it together.
You didn't have
and I got
enough
scared.
intestinal fortitude to order them because somebody across the table from you was making fun of you for ordering them.
That is more accurate. Yes.
That is 100% accurate.
Oh, my God.
How we doing?
We're doing good. I mean,
in there.
My friend's a little on tilt over there.
I'll bet, you know.
He needs to be bailed out a little bit. So he's going to...
Scared money don't make money.
That's right, Glenn. That's right.
He's learning. We had a question this morning. What's worse, you know, a losing trade or FOMO, like getting out of a winning trade and it goes better for you? And I said the losing trade is always worse. He's kind of he's witnessing that now.
No. You stay small enough. You're okay. You're fine.
I'm just teasing.
Come on.
He didn't listen. He didn't listen to Daddy. He missed one scalp.
Like
this is
ride the whole wave up, and then you get 4 days where the market goes down. They're like, "See, he told you, market could crash."
Well played. But this is a good lesson on futures trading.
Yeah.
You know, you missed one opportunity to sell them at a profit, and then they go back lower to this area where you bought them again. You think that, you know, I'll double up here. I'll pick another one so I can get them, you know, back up there again. And then you get into a market where we have today, which for the first time in quite some time, volatility has stayed bid, even on rallies in the market, meaning that this is not over yet. Fooling me too. We're about 10 handles off of their lows. I thought we would be on the E-mini S&Ps. I thought we would be well above that. I thought we'd be 30, 40 handles off of that by now. Volatility trade up to 22.30 and change. It's 22.10 right now. Even though you've got Bitcoin catching a little bit of a bid, gold caught a little bit of a bid today. But to get to you and your currencies, /6E is actually up about 155 ticks today, which means the dollar is a little bit weaker today. Talk to me. Talk to me, Goose.
Yeah, no, this is one of those days where I find myself tightening up the price charts to what, 5 minutes I think I have them on, and you're just like sucked in, just
because there's so much volatility and movement in the market. Yeah,
you're like, what am I doing?
It's awesome. But that's opportunity. I mean, like we talk about it all the time. The volatility when it goes away, it's those markets are the worst.
Yes,
I'd rather have the opportunity than have just the stagnant, chop.
Yeah, well, all things considered, dollar FX markets moving considerably less, a little bit more muted today. Looking across the board, slightly softer dollar, but a bit of a mixed picture. I mean, we're up against the Swiss franc, which is nice to see. A little bit of divergence between that and the euro, with the euro stuck right at 116. That gets pretty interesting to me in the spot market. I mean, just 15 minutes ago when I was sitting here, it looked like we were going to get through recent highs of this morning in that euro dollar. Now we're right back under 116. So that's what I'm watching. Once we get away from that price level in either direction, could have some more elasticity to it. Yen will be interesting this week. We had some BOJ governor speak. It looked like it was more defensive in trying to say, rate hikes are still on the table. Market's not necessarily believing them with the pair trading above 155, but lost a lot of momentum around there. So we're stuck there as well. Aussie dollar coming off of its early morning run up. I would have expected to see this a little bit lower with the ferocity of the U.S. equity market sell-off and some of that risk sentiment. And then Canadian dollar gives you some opportunity. Not seeing a ton of storylines. Slightly softer inflation there. Maybe there's a tariff-related headline I missed, but that one's moving pretty consistently against the U.S. dollar, now eyeing that 1.40 price level once again. That's also interesting if you're looking at non-dollar markets, if you're looking at Australian dollar, Canadian dollar, two historic commodity currencies. That one's getting to the bottom of its recent range. And similarly, if you're looking for a little bit more unique chart with very similar exposure, New Zealand dollar, Canadian dollar, shows you the same thing, perhaps a little bit more extreme. Let's see what those extremes are.
A little bit more extreme on price movement, you mean?
Yeah, and getting down to that 79-cent level is getting back to those lows against, dating back to April. We got there, looks like last week, 2 weeks ago, and bounced pretty starkly off that. So our friend Nick here looking to get in and catch some of that.
Yeah.
That on the speculation of a mean reversion there.
Look at me
in this pair.
I'm up this one too. You like that?
Whoa.
10 micros.
Full tilt.
I had my.
You've unlocked a new word. Now that's a mini. That's a mini lot.
That's a mini.
You're out of micros.
There you go. I'm gonna buy that one. No problem.
Does that mean he's all grown up?
We'll see how long he stays with them.
This lasts.
Everybody flirts with a mini every once in a while, and then see if they can hang. Thanks, guys.
Everybody
needed that one.
Really giving me something today.
Well, that's what we're supposed to do. You know how it is. I mean, that's what we're here for. I mean,
that's okay.
I think it's been proven if you joke with your friends like in that kind of way, you have a better friendship than if you're just cordial all the time and don't call them out on their BS sometime and everything.
That's good.
Yeah.
That's how you reel it back once you go too far. You can bring out that study.
Yeah.
Oh yeah, Berkeley said this means we're really close.
Yeah, I don't think it was Berkeley. I think it was John Jay College of Criminal Justice that came out with it. I don't think it was Harvard or Berkeley.
1 month.
Or anything like that. I think
Were you there 1 month or one semester?
I was there a semester.
How dare you?
I don't quit, son. I start a semester, I finish it.
Is that how it goes?
Yeah. I start a month, I finish the month.
Each semester counts.
That's right.
Yeah, not the years.
That's right.
No. You pay by the semester.
Yeah,
I mean,
that's true.
Yeah.
I think I was of the half a dozen kids.
Best air hockey player in the school.
Yeah, that goes without saying because I'm an athlete.
Yeah.
But but I think of the half a dozen kids I hung out with, I think I was only one of two that graduated high school, and I was one of one that even went to college.
Yeah. How do you get to the college if you don't graduate the high school?
It's considerably harder.
GED.
Yeah.
You get your GED. You get your GED. A bunch of the guys got their GED. Yeah. Wow.
I've got some.
Took a somber turn, didn't it?
All right.
Oof.
Here now.
Oof. Hear me now. You gotta.
I got long the New Zealand dollar against the CAD, also the Aussie dollar.
Nice. I got one slide for
I'm
you
short
guys.
Canada.
Sorry, Canada.
I'm long the U.S. dollar against the. Oh no, I took that off yesterday.
My home and native land. I got one slide for you just on some cross-asset correlations, running the 3-month correlations here against these major U.S. dollar pairs, just checking in on what's moving because we've seen over this year very interesting, dollar moving in tandem with U.S. equities on some kind of buy, sell America, and we've seen the, more historically normal correlation of an inverse correlation between stocks and U.S. dollar play out as well. Still a little bit in flux, but if you're trying to decide between these dollar pairs, if you're looking for S&P exposure, things to move more often than not with the S&P 500, Australian dollar, U.S. dollar is your pair there with a positive 0.63. Everything else across the board very uncorrelated. So if you are looking to diversify, looking at those dollar Swiss franc and dollar yen, really not correlated to those stock moves at all. Also interesting to me is it looks like our U.S. dollar, U.S. rates, bond market correlation starting to pick up a little bit. That U.S. dollar Japanese yen is always or has been over recent years the most correlated to our U.S. rates, but everything aside from that Australian dollar and dollar CAD around a 0.5, 0.6 correlation to the 10-year note and a little bit softer exposure to those longer term bonds as we continue to speculate as to what's going to happen in December, cut or no cut.
You're going to get some stuff Thursday, right? You have
exactly.
FOMC. You have.
We have the minutes, and then we have the September jobs data coming out Thursday.
We had October. Was October the?
I don't think the October is lost.
That's the dog ate my homework on.
Yeah. That one's in the wind.
I thought we got something today. Didn't we get like an?
Who knows?
We got an ADP number. We might have got some release. They had no problem making it up before. Just one more month.
Seriously, right?
Normalize this out. Give us a little Goldilocks number. Keep it going.
We found it, guys. Here.
You thought we wouldn't collect it? Of course we collected it.
We thought we lost it. We got it here.
We have it somewhere.
Our sample.
They weren't able to go door to door. They do this door to door.
A sample of 10 people. The unemployment rate is 10%.
See that? How easy that was?
1 of 10 don't have a job. But yeah, those are my takeaways today. Gold, interesting. You have of these pairs, Australian dollars where you're looking as well, but not as strong of a correlation. But that dollar Swiss franc we have seen in recent days, that be the biggest mover and gold be the biggest mover in the same direction. So that one might be strengthening a little bit. But if you are looking to diversify, these are some pretty interesting numbers over the past 3 months. But, for people that don't always monitor the individual U.S. dollar pairs, this gives you a little sneak peek into their individual characteristics.
Very nice, very nice. Well, listen, it's come to the end of our program here. You did a wonderful, wonderful job. Your mom's going to be so proud of you. Even the S&Ps are not proud of you. They're down 77. NASDAQ's down 396. That's your leader to the downside in the clubhouse. Russell's down 12. That's your leader to the upside, down 12. And the Dow is down 590. Volatility up 90 cents. 2230 is the high. 2210 is where we are right now, up 4.5%. And holding steady here. No movement in volatility with the even the S&P is about 7-8 handles off of the lows. We're going to take a quick 90-second break and come back. We got more Tasty Live. Immediately following these messages, Liz and Jenny next. Peace.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
watching my tongue. If it ain't kinda necessary, then I will be done. I am human, and I am flawed. My skin is thin, and sometimes I bear my claws. Forgiving me, forgiving you.
Everybody, and welcome to the Tuesday edition of the Liz and Jenny Show. We are sitting here live in the SPX pit on the floor of the Zebo.
Anything going on the last couple days?
Honestly, it's been crazy. The market's been crazy, and literally 30 seconds before our show, it turned silent. There was a roar here, and it turned silent.
They're all listening. We know it. No, I mean, SPOOs are down, SPOOs are down 80 right now. We've seen them. They were down 60 last night, down 30 when we opened. This is where we are. This is who we are now. Now, Jenny,
this is who we are now. 80, down 82, just another day.
Just another day. Now, my question to you is, because during our show yesterday, now it was a bloodbath at the end of the day, but during our show yesterday at about 10:30, because it's 10 o'clock now, the market went unchanged and slightly green.
Yes.
So I just need to say that there might be some positive vibes we're putting through, that you might get some two-way action
today.
Positive
vibes during the Liz and Jenny Show. Market green. Can it happen?
Yeah.
All right, Wizzo.
So that it did happen during our live show yesterday, where we were green, and then it turned into a bloodbath.
It really did, and I was out. I had some things to do. I wasn't looking at my computer. Liz tried to call me, and I said, "Oh, hold on a minute. I'm getting a phone call. This could be important. There might be something going on in the market."
You sent it straight to voicemail when I called you.
I sent it straight to voicemail, but I looked at them. It prompted me to look at the market. So yes, Liz called. I sent it straight to voicemail, but I said, "Hold on. I got to look at the market."
Yeah, it was.
And it was ugly. It was ugly.
It's pretty ugly.
It was ugly. So we've had, in the last couple weeks, a lot of ugly days.
Yes, but in the grand scheme of things, I mean, we have to be in. This is a transparent network, if you will. In the grand scheme of things, it's a blip, but it feels like more than a blip.
Yeah. Let's go to the platform.
It's like you get the weather and it's like the temperature is 45. Feels like -12. That's what it feels like right now.
Right. So I know it hasn't felt good unless you're like all short.
Yeah. So you look at the weather and you're like, oh, it's 50 degrees outside. That's not that bad. Feels like.
Then you go outside and it's windy and rainy.
It feels like temperature.
Let's go into the platform and take a look at the SPY chart, if you don't mind.
I had even the S&Ps. I'll go to SPY if you'd like.
Any kind of chart, whatever.
Okay, here we go. They're all versions of the same. So we're in the SPY.
So you can say we're, back to levels that we saw all the way in September, and even
the last time we were there, October 17th.
Look. And then before that,
before that was October 9th.
And before that, it was September. So we've had this kind of chop. Are we going to drop below this? I don't know if you've been watching Tim Knight lately, but are we?
No, but we got Tim on tomorrow.
Oh, yes, tomorrow, Wednesday. Today we'll be on Last Call, just the two of us. Tomorrow we'll be on Last Call with Tim Knight. So it has felt bad, but then if you look to April, if you look back at April, and then really felt bad.
But you know what, though? But take a look at this. You fell from lower highs, right? So we only felt, we weren't even where we were when we fell in April. So you kind of got to take every chart and hold it with a grain of salt. We're down 92.
So let's see, like from January, where are we as far as on the year? So from January 1st, where did we start the year?
No, this is January 1st. This is almost a year.
On the 2025. Yeah, right there. So we started, if you could read those the red numbers there, but we started around.
So if I went to January, I'm right here. You're wrapped around 6,000.
Yeah, you're wrapped around 6,000, and so we're up 600, about 10%. Because we're at like 6,600. They were talking about the predictions.
Who's they?
Tony and Nick. They're talking about the predictions because in the beginning of the year we put in our predictions for year end, and we got a mention. We got an odd.
We did?
We're somewhere in the realm.
We got an odd?
Well, they were listing anyone who might be close. And they said Liz and Jenny. Now, I put in my predictions, you put in yours.
I don't know what yours are.
But I don't know what yours are, but they bucketed us as one. They said, Liz and Jenny are in the realm.
That means we're both right.
We'll see. We'll see where we end at the end of the year. But we must have guessed somewhere around 6,500, 6,600.
No, I did say up. I do remember saying up. I don't know that I went 10% up.
So if we were at 6,000, I think my guesses go like this, like 6,200, 6,300, 6,400, and probably like 6,500 is my guess for the end of the year.
Why did you just give us 100 increments? Like, why did you guess every 100? Did you game the system and go every 100 increments
I don't know.
up?
I think that's how my guesses work. I don't know. Yours, Liz's are like 6,384.
Yeah. I do use some weird numbers.
Yeah.
No one had the 7,000 though. I bet no one in our firm had 7,000.
I don't know. I'm not sure. I think Tom's end of the year guess was 5,500.
His was 55?
Yeah, 50 something. 5,200, 55.
If that guy pins.
That's not going to be a good December. Cancel Christmas.
And then Christmas will be canceled. And then all of his dreams will actually be coming true.
Oh my
He's
gosh.
canceled Christmas so many times.
After these last couple of weeks on the market, yesterday I was threatening. I actually made a phone call. I was threatening to sell my boat. Not that I just can't.
To who? Who are you threatening to sell your boat to? Make me sell my boat.
You know what? I had an HOA meeting. Last night. 2.5 hour HOA meeting last night with all the people who live on the lake with me. And I just said, is anyone interested in a boat?
And? Any takers?
There was a guy who was, there was a guy who knew a guy.
A guy who had a guy?
A guy who knew a guy.
I like it.
I don't know.
So is the boat. Prediction markets. Mikey, I need you here with me because I call BS on you. You've threatened to sell the boat every year you've had it, and you still have it.
You know what? I always threaten to sell the boat.
Like you threatened to get a new marina.
This time of year.
You threatened to not crash the boat.
No, this time of year, because this is when the marinas. This is when people are getting their slips at the marina for next year, and I am. And it's not that I'm not hard to please, but I have not been happy in any of my marina spots. So then the marina called me and said, "Well, we can't get you in this spot, but we can get you in this spot." And I'm like, I don't want that spot.
You need a parker. All you need is someone to park your boat for you.
That doesn't
exist.
exist.
A permanent parker.
It doesn't exist.
Well, we'll find you one.
Anyway, with the market, I think if the market were still all-time highs and it didn't matter, I'd be like, whatever. Just
put me in whatever slip you want.
I'll hire a parker. But when they called me with that slot, I was like, ooh, I'm still in this boat.
So if
Yes.
At some point during our show, SPOOs are down. Here, I'm going to go like this. SPOOs are currently down. 81.70, 81.50. If at any point during our show they turn green, you have to sell your boat.
Deal. Deal.
So at some point, at any point, if we see a green, and if I miss it, Twitter will let me know.
Yeah.
You gotta sell your boat.
Okay, deal. That's a deal. That's a deal I can live with.
Okay.
It feels good just saying it out loud. It's like a weight off my shoulders.
And then you can be like, Liz made me do it because we turned green in the SPOOs.
You know how many
It's a good story. It's a great story. It's a great story.
SPOOs around 80, they turned green, they had to sell the boat.
Had to sell the boat.
Do you know how many viewers?
That's a better reason than any. I mean, some shenanigans are happening and we don't know what it is. They're just shaking their heads.
I don't know. I've been watching the board on what orders are going up. I do. You know how we always see.
No. They're all smiling and laughing. This has nothing to do with orders.
Well, but I have been looking at the board, and you know how Frank's always like calls leading puts. Today, I'll confirm. It seems like calls leading puts. I've seen a lot of calls going up. I don't know.
Today is the day you confirm. Other than that, we call BS on Frank.
Should we take a look at Twitter and see what's going on?
Sure.
There is an inspirational tweet I'd like to see.
Oh, I started on it. She said you got to go to Jack Tucker.
Yeah. Because yesterday was a wild day, and look at his day yesterday. Oh, unless this is from the day before. This might be from the day before.
22 hours ago.
22 hours ago.
Now, Jenny, I will tell you, we did the SPX trade. I did the SPX trade. You did the SPX trade. We got out. So even on those massive down days,
No, November
I'm out.
17th. This was yesterday. Look at the day. This was yesterday, 22 hours ago. So 2 hours after our show. So by noon, he was out of everything. And I want to see how wide these are. 80,
no, his
50.
GTCs hit at 11:37, 11:18, and he's
got $25 wide, 20 lots.
On a bloodbath of a day.
Close. So he must have had, because you see, close. So you've got.
That's okay. This is exhilarating watching you read the screen. It's out there for everybody to watch.
Anyway, Jack, $13,993
on a bloodbath of a day.
On a bloodbath of a day.
Correct.
Yeah, on a rough market day.
Now, Frank Walsh, who always tells us calls leading puts 6 to 5.
Hey, I could see it, Frank. I could see it actually on the board today. Here, Jan 7,700 calls. The crowd sold them. Jan 7,700 calls.
Do you want to go to those? Is it a noteworthy number?
D's 19, 6,800 calls. The crowd sold them. I see a lot of calls going up there.
D's 19. That's pretty far from now.
D's 19. They're already gone. March 7,200 calls. The crowd sold them. There are call buyers everywhere.
If the crowd's selling them, that means the other side's buying them.
Yeah, people are buying them.
I like it.
People are buying them.
Only 71 more points till we're vote free. Okay, so let's go back to Twitter.
Okay.
We do have Kai Study, just kind of set everybody up. If you have a tweet, if you want to talk to us about anything, if you want to talk about boats, you want to talk about markets, you want to talk about calls over puts, Frank the Great, anything, put the hashtag LIZJNY on Twitter. And if you don't, Frank the Great will put it on there for you.
Yeah, right. And so I love seeing all the tweets come in. We had Bob on Fire coming in with the earnings today.
Oh, God, look at this. So breaking news, Frank the Great, SPX has done 893,000 puts versus 764,000 calls. Thank you, Frank. I appreciate it.
But look at the board. Calls,
I can't see the board anymore.
Calls.
We've moved to an undisclosed location where we're farther this way, and I can no longer see the board.
I've got a little.
There's another set in my way.
I've got a bird's eye view of the board. Last trade. 6,800 calls. Nove, 28th, 6,800 calls.
Okay, fine. I'll look at this. I'll entertain you on
No,
this
that's right. You don't have to.
You're just shouting numbers at me. Nove, 28.
There's a lot going on.
That's the end of the month. 6,800 calls. 6,800 calls.
Yeah.
Do you mean there's 6,800 of them traded?
No, 6,800.
6,800. So right here, that's the expected move for the cycle. I'm going to switch this to volume. Hold, please. 6,800 is right here. They have not hit the board yet.
No, you're at 6,880. You're at 6,880. We're 6,800. It's.
I had it highlighted. There you go.
There's just 1,000. And I don't know how quickly that volume updates, but I have. Frank says there's more puts than calls, but I've seen a lot of calls.
Today's the day. It's more puts than calls. Right when Jenny puts her seal of approval on it. Thank you, Frank.
Smooth's only down 68. That's not bad.
It's happening. Okay, so we also have the market, the research corner from Kai, which is awesome, and I love going through that, especially in the middle of this SPX bid. They are actually pretty wild today. I will give you that. There is some activity, and the activity you can see is up in that corner back there right now. So there's a big order because they're breaking it up into quite a bit of pieces. And so it is fun to see.
You know what is maybe turning a corner? If you take a look at look at Ethereum up 4%.
What?
Yeah, Ethereum up 4%.
I'm just going to look at ETH. Is that okay?
Yeah, you could look at ETH or ETH or whatever you want to look at, up almost 4%. So the first time I've seen the cryptos green.
Bitcoin's at 92. But they're green. You know what? Silver lining in things, it's green.
Like if you look at the chart, if you go to the ETH chart, and you see this is our first blip. You see that little blip? And yours is kind of covered. Zoom in a little bit. Hit the plus sign and zoom in a little bit.
There's your blip. I've got a 20-year chart. What do you have on there?
But I barely see your little green bar. Just hit that plus sign and zoom in just a little bit. Because I can't really see that green bar. Yeah, that's it, the plus sign. Yeah, that green bar, today's green bar. It's like the first time I'm seeing a little bounce. Here goes, hold on. Hollywood's walking by.
You want a silver lining, Jenny? I'm so proud that you think that blip is...
Yeah, well, it's the first time I'm looking at my account and seeing ETH up 4%. That little blip. Now, what does Bitcoin look like?
I'll look at IBIT, because I'm looking at what we have. How about that? There you go.
It doesn't...
I mean, it fell from grace. You're looking at, Bitcoin went from 130 all the way down, but this went from 70 to 50. That's a
well, yeah. So that's Bitcoin going from 130 to 90.
Yeah,
tough. It's been tough. The whole crypto.
Oh, Frank keeps coming in with more information. The SPOOs, 200,000 puts versus 8,500 calls.
200,000 puts
versus 8,500 calls.
What? 200,000 versus 8,000?
85,000.
Oh, 85,000.
So I said 85,000 versus 200,000.
In the SPOOs, it's 200,000 puts.
You
so that's
have the
more
same
than twice as much. More than twice as much. Well, it's busy.
It is pretty busy today. Okay.
So
we're gonna go over Kai study. Put the hashtags on there. We have some things that we want to clean up. I just need to close some things. Ooh.
What? Yeah.
It taketh away. So on the train.
Because bonds were over 117.
Yep.
They were over 117.
Okay, so live show. We only do things during this show. We were up about $100 earlier. Now we're down 15 on it. Fine. We're gonna close that up.
Okay.
Our other problem child.
It's better now. CRWB was down $5.
I know.
It was down $5, and this looked like worse than it is now. But I think we still need to adjust it. It's still I don't think this ratio spread is going to come back on Friday.
It's got 3 days. So what do you do? What do you do with a ratio spread that's being tested? You close the spread, which should be full profit.
I don't know. I don't know what this vol. Maybe we'll see. Does the 82.5 spread 1 by 1 trade for close to 250?
The world may never know. No. We leave it.
No, but I think we can take. So when you do a downside ratio spread,
no, I'm gonna leave the spread, and I'm gonna move the put.
No, because that spread we don't want to take a full. We don't want that spread that's worth $1.89 to be worth zero if Core Weave rallies. I think we just close the whole ratio spread.
You think it's going over 80, 82?
You never know. Then if it does, you're mad at yourself for rolling your put.
Fine, I'll close.
I would just. So
I'm closing them separately, and then I'm going to roll the put out in time. I want to show how this goes.
Okay.
So if we want to close it for less than 50 cents, that's fine. We'll do this. That should be filled immediately. Okay. So closing the spread portion of the ratio spread leaves you with one naked put that's in the money.
And we have one naked put that's the 80 put, and Core Weave's trading 73.87. So I think the best thing to do is move it out to December.
Or, yeah, you can go December or Jan, but December makes sense. And you're going to roll it to right at the monies.
Look at that. We can go from the 80 to the 72.5. Now, we're not collecting much. We're only collecting a quarter, but you can go 750 low. Yeah, from the 80 put to the 72.5 and taking a small credit.
I'm doing it.
Yeah, no, that's not bad.
Shipped out in time.
That's not
so
bad.
You're going to push both those through so they can see them.
Sure,
You'll do one, then the other. And that's kind of how we handle a ratio spread. Ratio spreads, Jade Lizards, all the same nature. How do you manage them? You manage them the same way you would a short put, because at the end of the day, that's what you've got is one naked short put.
And look at that. We gave ourselves a lot of room in Core Weave.
Yeah.
A lot of room. I wish I would have done that. When Core Weave was down 5, I closed my puts like a little weenie. I was like, oh, I'm afraid of these puts.
Oh, no, Mr. Bill. Oh, no, Mr. Bill. Okay, so...
all right, hold on. I got to push everything out. I'm getting there.
So I'm just trying to go through our things. The other thing that I want to take a look at, and Jenny, we can address this now. We can address this at 2:30 because these two, if you can't get enough of these two fools, you can watch us on last call. But the one thing that we have to address, and I appreciate Bob will get to his list, is we have a Target position. Okay. Target has earnings today after the close. We have a put that is out of the money, and Target is still up, and we're not out of it. So
all right, let's take a look at open that 3-day up. So we're 227. We sold it for about $1.80. We said when we put this on, we're like, yeah, we don't care if we're going through earnings. We don't care. We don't care.
I don't know. In this market, with these wild people behind us, I don't know that I want to ride that through earnings.
In this market, I am not taking chances on earnings trades. There's enough premium in other products where I don't think I'm going to worry about earnings trades. So I don't know what we're going to do during the last call if we're not going to really take much earnings risk.
Well, there's not a lot of earnings today. There's a couple. There's a handful, and we'll get to that. Okay. But we're just going to put a pin in this because Target is now going in the right direction. We're up 55 cents. When we were on the train, we were down a little bit in it.
Oh, on the train, I was like, supposed down 30. Now they're down 40. Now they're down 50. Liz, are you listening? Are you watching? Now we're down 60. Now we're down 70.
Hey,
now we're down 80.
Now we were down 70 when we put our trade on. Now we're only down 66.
I know. Only down 66.
You're still going to keep your boat. You have to keep the boat for a year if we don't go green.
No, I want. The deal, honestly, the honest to God deal with the boat is if my son moves away, if he takes a job in another state, I'm selling the boat. That's not like trying to
work the system.
I'm not threatening him. Like if you move away.
That's a good threat, though.
If you move away, I'm selling the boat. That's how the original boat came up when he was interviewing for this job in Colorado, and he applied for a job in Hawaii.
Send the boat.
And I just said, if you take a job in another state, I'm selling the boat because he's the one who drives it more than anyone.
Fair enough. Then it's just going to be sitting there. I agree.
So I'm supposed green or not green, that boat's out of here. If he moves.
As a threat.
And honestly, I don't mind selling it even if he doesn't move. But that was my threat.
I think it's good. I think it's very solid. Solid mom threat. Solid. Okay, so we're going to put a pin in target, and we're going to see when SPOOs are green, and we're going to take that off for a scratch, because I agree with you. I don't want to go through earnings with this stuff.
Yeah, let's
go
just
back to Twitter. So I think Frank the Great is coming in with lots and lots and lots of information on our text chain. Oh, yeah, something about silver.
On the text chain. I thought, no, you're talking about, I'll give you some updates. But we can go into Twitter and see what's coming in. SLV also 2-to-1 calls over puts. But not also. SLV is calls over puts where the regular market was puts over calls.
Correct.
So that is from Frank. And what's silver doing? What are gold and silver doing?
Let's take a look. SLV is up 1% today, but it's been, so what's ironic about this is silver and gold have actually been moving with the market, where gold was down yesterday too. Everything was down yesterday. So gold was down yesterday, silver's up a bit today. But this is the most active I've seen them in a long time.
Nvidia calls over puts 2-to-1.
Nvidia?
But they have earnings this week. Microsoft, same thing, 2-to-1 calls over puts.
Oh, Frank's just trying to make up for the fact that you were wrong on the SPOOs. And didn't you say Netflix too?
Yeah, Netflix. Now, we sold a put in Netflix yesterday. How does that look?
It looked okay. We were up a little bit. Yeah, we're up 10%.
That's not bad. Yeah, IBIT's green. We're getting some green on the screen.
We are. I mean, SPOOs are only down 58, which is insane to say SPOOs are only down 58. But we've been getting these crazy down moves. Okay.
Right. Just like looking at our account right there, it's not. ETH up $1. Jeez.
I mean, the bloodbath for me is when everything moves in conjunction. But when you have a down market, things become more correlated. So when you've got gold, Bitcoin, and I use Bitcoin as a proxy for all the cryptos. So when you've got gold and cryptos and the market and everything down, the only thing up yesterday was Google.
Right. And Google is still up today, I think it was, up a couple dollars. Oh, no, now down $1.
It's down a little bit.
Down a little bit.
Okay, back to Twitter, and then we're going to get into Kai's study. Blue Wackadoo, still loved meeting him in person. He's got, this is today, IV rank slaps at 35.9. Okay, good.
Put on a 5 lot of iron condors, 12-14 delta, 140 points wide between the shorts. I mean, that's what you're getting in this with this high vol. I mean, we saw VIX as high as 23.
Yeah, let's see where VIX is right now.
So we saw VIX as high as 23 with this high vol, 140 points between the shorts.
Ooh, we're still up almost 10%, 24.35.
So that to me, this 24.35 makes me think.
So this is our rally.
Today's going to get. This is the rally.
This is the rally to 57. It's going to go.
The day's going to get whacked. That's what this VIX is telling us, and that's what we saw yesterday. The VIX was high yesterday. We should have known.
We should have known.
Should have thrown on more Delta Busters. Like if you see we're only down 58, but VIX is 24.
Here's your rally.
Do you put on a quick bearish trade?
I'm going to go to the counterpart because we're currently at the SIBO, the home of the VIX and XSP.
Yeah, like do you put on a quick bearish trade? But there's so much premium in these options. The bearish trade would have to be like selling a call spread.
So no, but your bearish trade could also be. Your bearish trade could be buying a put spread. It's the same thing. Selling call spread, buying a spread.
Selling call spread,
I was just going to say you can Jajun to the reverse.
Right. You'd buy the put spread.
Oh, sorry.
You're so used to selling them every day.
No.
You could buy the put spread thinking like, okay, is this the rally? Pay $250, try to take a quick,
Yeah, want to do this?
I mean, the VIX keeping its wings up is what's making me think we're going to go down from here.
I know. I mean, the VIX is up a lot. What was its high today?
Yeah, the VIX up $2.
Hold on. Look, Jenny, its high today was 25.84.
Yeah. Or was that yesterday?
No, that was today. I can get on it. That's today, the 18th.
Yeah,
25.84.
Almost 26.
Dun, dun, dun. Okay, so.
I don't know. Seems like a lot.
I mean, honestly, this is what we should see. I'm going to go to UVXY. This is
Let me
what's-
see. Was Spoos only down 52? I'm curious because Spoos were down 70 when we put on our SPX trade.
I didn't get out of mine yet because I got my.
I put in a 50% GTC, but I changed it to a 30%.
Oh, good.
Did you change yours to a 30%?
No, I didn't. I was in our account.
Because we thought, well, maybe we're never going to get 50%.
And remember, I think 10:30 is when we're going to be our highest point of the day.
Let's see if the 30%.
10:35. How about 10:35? 10:37 is when I think we're
No,
going to
and
be
even the 30% didn't hit yet.
Well, because there's so much volatility.
Yeah. So even the 30% didn't hit yet.
Yeah.
So that put spread, the at the money $10 wide put spread sold at Spoos down 70. Now with Spoos down 50, 20 points higher. It's only up $100 per one lot.
I would take that.
I mean, the 30% just hit.
Oh, good.
So that was 20 SPOO points to get 30%.
Yeah. Well, I mean, it's kind of a double-edged sword because you do have that implied volatility that when that keeps its wings up, you know what I mean?
Yeah.
Okay, so I'm going back into Twitter, and we wish Blue Wackadoo good luck. And here, Bob comes in. Thank you very much, Bob. We appreciate this. Whoa, hold on. So we've got Target, which we looked at, TJX, Bullish, and Lowe's. Anything you want to look at? We'll look at. You know what? In the words of Office Space, let's just put a pin in that until 2:30.
We'll put a pin in that.
Because I don't want to mess with this. Kind of like
we have.
If you can see that if you can see our target trade at all turn into a scratch, let's close it.
And again, we're on last call, so let's wait till the end of the day. Yesterday, trades I put on, I wish I would have waited till the end of the day.
I saw and I thought our target was a $3 win. It's not.
So is one of the only ones that, like this week, it was up a little bit every day, not down like the rest of the market.
Yeah.
Middle Southern company. So today I did. Yesterday was JD's birthday. How was his birthday?
It was great. I didn't see him.
Did you talk to him?
I talked to him a couple times.
What did he do?
Nothing, because he's pledging. He went.
But
went to a meeting, ate in the dining hall, and went to classes.
Did he eat anything special?
No. I wish I had more to report. I really do, and I'm not trying to downplay it. But he's like, we can't even. I don't even have time to talk to anybody about my birthday.
Well, I had thought, okay, for a college kid, for their birthday, normally a normal college kid, I would just Zelle them some money and say, here, go get, use this to get yourself some. I don't know what. I'm not going to say go out to the bars because he's not 21 yet.
He's never had a beer yet.
So, but instead, I texted him and I said, JD, happy birthday. For your birthday, I gave your mom, I sold your mom money, and I told her to buy 5 shares of Firefly.
And we did it. We did it on the train.
Yeah.
Yes, he's filled. Here, let's jump in the platform and take a look at it.
So for JD's birthday, I
think this is the best gift ever, by the way. And I've done the same thing for Logan, where I forced him to put it in. I was like, you take this money.
Yes. So I do like that. So I got him 5 shares of Firefly. So now every time he sees he can be 40, 50 years old and think, remember Jenny got me 5 shares of Firefly.
He thinks of you every time he sees Oklo.
And Oklo,
I'm going to tell you what price he got it in.
Yeah, what price did? What price? Well, Firefly hasn't moved too much. We probably bought it right around.
We did, but I can tell you right now because it's on my phone.
Yeah, what price? Hopefully it becomes a good one for him.
Well, I'm not updating, so.
It's all right. Hopefully it's a good one for him.
Who's rolling out 40?
Yeah, good thing you didn't put on that XSP put spread.
I know, but I'm telling you. So I said 10:37 is going to be our high of the day.
Yeah.
10:37. Okay, let's go back to Twitter.
10:37.
10:37. That's what it was yesterday.
How do you remember that?
Because it was right. I saw somebody in the chat saying Europe just closed. We're going to bounce, and I saw that chat, and we did.
Yeah.
They closed at 10, and their highest point we went green at 10:37 yesterday.
Okay. All right, let's see what other tweets we have. I'd buy that for $1. Selling a boat, Jenny. I'll give you $2 if you can name the movie.
$2. Come on, Jenny, you got this.
I'd buy that for $1.
I'll give you $2.
Well, is that from Drop Dead Fred? What is the movie that you say I want my $2?
Oh, I want my $2 is, gosh.
With John Cusack.
Yeah.
I don't know, but what is this movie?
No, you're killing me. I can't even, I'm having a mental
Mikey,
lapse.
I don't know.
This is what happens when I go to bed early, no cocktails.
Oh, yeah.
I'm having a mental lapse.
I don't know what that movie is, Mikey. You're going to have to tell us. And Liz doesn't know either, even though she owned a video store and knows every movie ever
I'm going to have
made.
to can I phone a friend?
Who are you gonna? You're gonna call someone right now?
I'm gonna see if Hippie will come down and tell me what movie this is from.
You think he'll know?
I think he will.
Yeah, let's get Hippie on.
Okay, in a second. If I can get his attention and he's not making a trade, 'cause he's making a trade
He
right
might
now.
not want to be on camera though.
I'll just go like this.
Otherwise, we can put him on full screen and bring him on.
Okay.
All right.
So
this came in from Jared Kramer. Liz and Jenny, calendar call spread on Nvidia here. Sure, let's look at this. November 7th, January 2nd, 195 strike for 525.
You pull up Twitter.
Okay, and then, oh, sorry about that.
You
go
Twitter.
into the platform. I'm going to pull up Twitter, and I will read you the exact
Nvidia.
strikes because I'm interested. Here it is. November 7th. Okay.
November 7th?
November 7th.
We're at the 21st. Is the first day I can go to
November 7th. Just do the 3-day.
Okay.
Okay, 195 strike.
Okay.
And then January 2nd. Or is there a November 17th? Is there a November 17th? No, that's over 2.
No, that's over 2.
All right, January 2nd.
And so they do have earnings tomorrow.
Yeah, that's the 195 strike.
Okay.
And how much is it? Yeah, this is it, because he said it's around 525. So
Yes.
this is it. So a bullish call calendar, if it goes up, great. You've got the weekly that'll fall off. You've got the 45-day 195 in Nvidia. If you go to the Nvidia chart, what could your hopes and dreams be for January for Nvidia? If we run back to all-time highs.
So Nvidia, I feel like all eyes are going to be on Nvidia tomorrow.
Yeah.
Can it save the market?
Can it save the market?
Dun, dun, dun. Yeah, sure. I think it can.
I mean, it's to me, this is a low-risk earnings trade for Nvidia. You're risking $525. You got 45 days. If it falls tomorrow and you're like, oh, I'm out $5, but I have 45 days left on my long, I don't hate it.
I don't hate it either.
I don't
now,
hate it.
the only way you can lose money is if Nvidia saves the market on Wednesday or tomorrow and it goes straight up.
Or he's saying, or the D's 26 for 450. So instead of the Jan, he's looking at the D's 26, and it would be the same. It's kind of same trade, but it's cheaper. It's a little bit cheaper. So it's a little bit cheaper. But
I prefer the 5. I prefer January. Like if I'm doing it, I'd prefer to pay the extra $100.
I like the longer. You got a little more at risk, but not that much more at risk.
Yeah,
you got a lot more time.
I agree.
I like the Jan for 75 cents more. That's what he says, and I do too, and so does Liz.
Agreed.
Yeah, we all go.
Yeah, but that's a matter of preference. If you want to save yourself 75 or however much it was, that's fine. That's a matter of preference. They'll work exactly the same way. The only way
you want to
lose
throw
on this,
that in?
No, because I'm afraid here in my heart of hearts, I'm afraid it could go. Oh, I guess it's at the expected move.
Yeah, no,
Sure,
I mean,
sure.
So what she was going to say is she's afraid of if Nvidia runs like crazy and blows through it, then you might lose on it if it goes too far. But if it doesn't go too far through it, then you can still roll it. Even though it calls in the money, you can roll it.
Okay, so let's just go. I'm gonna put my money where my mouth is then and delete this one. I'm gonna go to Jan.
Yeah, it was the Jan 2nd though.
Oh, it was Jan 2nd. Okay.
But if you go to Jan monthly, how much more is it in Jan monthly?
95. Look at that. Dollar-wide strikes. $7.
Ooh, yeah, that's too much.
That's where we draw the line. Okay, so Jan 2nd it was?
Yeah.
95. Yeah, 547. Shipped.
Okay.
Then we don't have anything to talk about.
Oh, and he said it's supposed to be November 21st. And
okay. Well, we're in November 7th. It was November 21st. That's what we did.
Yeah, okay, we got it.
So,
it.
Now we have no content for last call, so don't tune in tomorrow.
No, because this isn't. Tomorrow we're going to have Tim Knight on.
I know.
We're going to be so busy with Tim Knight.
Nvidia is tomorrow. Okay. I'm going back. Thank you very much, Frank, for putting that on.
Down 40.
Is it 11? 4 minutes till the high.
4 minutes till the high.
4 minutes till the high. 4 minutes till the high. Okay. Now the Great Gatsby. I have a small account, 1 to 2K. What do you do when all you see is red and you get scared of holding? Most of my trades are using about 350 in buying power and collecting around 160 or so in credit.
So that would be $5 wide spreads. $5 wide spreads, you're getting 160 using 350. This is the Great Gatsby, small account. See red and you get scared of holding. It's hard. I think $5 wide spreads in a $2,000 account are tough because it's a big chunk. It's a big chunk of your account. I mean, if you're in a $2,000 account, what do you usually do?
I mean,
It's
you have to
hard.
spread it off. You have to put spreads in if you're in a $2,000 account.
But do you think $5 weight spreads are too big? You're risking more than 10% of your account on each trade. You're risking, if you've got a $2,000 account, you're risking $350. You're risking more than 10% of your account on each $5 wide spread. I think it's a lot.
Okay, so let's not focus on the size of the account. Let's focus on what you do when you're not comfortable with things. I will have a tendency to close things and take a little bit of a loss until I feel comfortable again. I mean, we did that a little bit. You did that a little bit today, like closing some things in your account when the market's all up.
I will say, like when my son started and he had a small account, because I think it's much harder to trade with a small account than a big account.
But it's a realistic approach to starting, though, too.
To starting. So I think when Logan started and he had a small account, I didn't let him do $5 wide spreads because I said 360 was too much to risk on that small account.
And I also remember with the spreads, once you lose 360, then it's gone. If you spend $360 in, say, you wanted to buy Firefly, for lack of a better term.
You still have it.
Then you still have it.
Right. So it's tough. I feel like that's too big a percent of the account. Or you find smaller spreads, like stocks that have dollar-wide strikes, where you could do $2 wide spreads.
And you can't have all your capital at use if you're all defined risk. Remember we answered this question the other day, defined risk versus undefined risk? And it was, I think it was 6% of your portfolio should be in undefined, which is great. Like if you want to use 6%, that'd be one trade.
I know. It's so hard. It's so hard. I mean, And I always will you go to the platform for a second?
Sure.
And I know we brought up Archer many times. We have a position in there, and Archer has taken a fall 14 to 7. It's got cut in half. I get it, but let's just say you have a very small account and you go to January. Like let's say you go to you're in just finding these low price products or Snap or whatever. Like Snap, Archer, find something that's very low priced. So if you go to January and you sell the 7 put or even the 8 put, right? Like, let's say you sell that 8 put. It's $135 using $149. If you're not on margin, it's using more. You can spread it off. But I think about this, and this is how I would to kind of teach my son.
So the spread isn't the spread, though. That's what I think. That's where they get themselves in trouble. The spread isn't the spread. If you're trying to do that, say I buy the 5. That's not a spread. Because
my point here is if you sell this 8 put and it's a loser, you can roll it and roll it and roll it. If you're trading on margin, it's only using $149. And I don't know if a $2,000 account trades on margin.
I don't remember. Well, it said 1 to 2,000. I don't think one does.
But if you have to take, like, if he had to take 100 shares of an $8 product, then it's only using $400, and then you have the shares.
Then you have the shares.
And then you have the shares. Then you have something to show for it instead of a $360 loss on a $5 spread, and then you have nothing.
And small accounts are tricky. I mean, honestly, take a look at the Where Do I Start series with Dr. Jim, because he's pretty good at it.
Yeah.
Okay. Just moving forward, because it is 10:37. Okay. Spoons are only down 36.
It's 10:37.
That's what I said.
That's it. Is this the high of the day?
I mean, this is the high we hit yesterday.
And what's VIX? Check VIX.
2362. We're down back in the 23 handle, out of the 24 handle.
Do we buy a put spread?
You think it's going?
Well, you said this is the high of the day. That's what I'm saying. Do we buy a put spread? Do we buy a 0DT put spread?
No, I don't want to fool with it today.
Yeah.
Not today. Not today. Okay, I want to make sure we get to everybody on Twitter, and I appreciate this, Mikey, and it is shame on me. I have a shame on me. It is better off dead. I've said it a million times if I've said it once. It is better off dead, and I can't believe I didn't.
Better off dead.
Better off dead.
What did I say?
I don't remember. I think that's what throws me off, Mikey. Sometimes I'm like, what is happening?
What did I say? Like something for Friday or
I don't remember.
What's the one where the guy they're dragging around the dead guy?
Oh, better off dead.
Mikey, I don't know how we didn't know it.
Somebody's on
Pay $1
my
for
camera.
the vote.
Okay. Now let's go to Kai's.
Oh, Kai's study. Jeez.
We got a study. It's the research corner, but yes, it's the recap of the week.
Option Jive Research Corner, talking about looking back at last week. I'd like to forget it, not relive it.
But here we are. Okay, government shutdown ends after 43 days.
Okay, wonderful. Markets sold off late week, led by the tech sector.
Yeah, and it did. And Bitcoin dropped.
Yeah.
This is where my heart sinks, below the 1K level.
Yeah. Treasury announced large auction of treasuries, 125 billion in 3, 10, and 30-year notes.
Okay.
So a lot going on last week.
Yeah, but that was last week. Now,
yeah, we got a lot going.
now we're on
There are
Monday.
11 slides here, so we've got a lot to get through.
That's what I'm saying.
And it's already
FOMC
10:40.
meeting minutes on Wednesday. That's the 19th.
That
which was
is tomorrow.
Tomorrow.
Major retail earnings week. Walmart, Home Depot, Target, Lowe's, TJ Maxx.
And then we've got a PMI number on Friday. Okay. So the index weekly performance. Take a look at this. You know what, Jenny? Here's what I find odd. It doesn't look nearly as bad as it did the week.
Yeah. Well, last week, the Russell was the only one who really took a hit.
Is that possible?
You know, maybe it's just where the things we have, we're all down.
That's what I was saying. I was like, we picked them wrong. We were the...
No, but I think, well, you know, the NASDAQ took the biggest hit the week of 11.3%. And
Yeah,
then
but
the Russell, we had 1.9, 1.7.
So the week of 11.3 was way worse than the week of 11.10.
Every week felt bad.
Yeah. Okay, let's keep going forward.
Every week felt
So
bad.
here's
But
what I want to look
again,
at.
I think crypto, like the hit in crypto was painful for a lot of people.
I think it was too.
Yeah.
Okay, so this is what I like to look at. So let's look, I mean, whatever, the week of 11.10, I get it. So the week of 11.17, there's more volatility. That is this week, and the expected move is plus or minus 126. Now, after yesterday's move, I think it should still be the same. Because we're one day in, right?
We're one day in, end of the week, SPX. If we look at between now and Friday.
Ooh, I'm going to go Friday PM.
Yeah, 127.
So an entire day went by, and
vols come up. So
Yep.
we still have the 127, and it's already Tuesday.
Yeah. Okay.
Hey, now we're 45. Now we're down 45.
I'm
So it
telling
might
you.
have been the high of the day.
I think 137, 1037. I'm a sage.
Whoa.
Okay, so I'm
Okay.
going back in. Let's see. So this was kind of fascinating. So this is the 20 Delta $30 Iron Condor. I think this is what the boys did, isn't it? What they requested?
Maybe, but so this is looking at how that 0 DTE performed last
So the 20 Delta $30 Iron Condor. That's kind of a lot. So you're risking.
This is more days than because you've got
No, they have the weeks.
3,
There's
5, 7. You've got the days. You've got the days. Did you see that?
There's 9 days.
What?
There's 9 days.
Okay, 1, 2, 3, 4, 5, 6. Okay, so you see how it performed, and you know, winners more than losers. But you were stopped out at a 2 times loss. If you had that 2 times loss put in, you were stopped out at that 2 times loss on the 5th.
So if you look at this, your average credit, I'm just rounding to 7 because it's easier. If your average credit is 7, you're risking $2,300 each trade. It's
If
$30 wide.
Oh, $30 wide. Yeah,
Yes.
you're risking $2,300.
You're risking $2,300 each trade.
Yeah, so you had that one big loss of 700, another big loss of 2, stopping yourself out of the 2 times.
And this is the Iron Condor, so it's both sides.
Right. Well, last week was a wild week. I had a full loss on one of my SPX days.
I think we had the full loss on 11.5.
On that 11.5.
I think we both had the full loss.
And then Friday was the day that it came back in the very end. Like, we were down, and then we rallied, and then we were down by the end of the day again.
Yeah.
So
Yeah,
Friday
so it came
was
back
and that's no management. And I know there are some people who will do some management, rolling down calls, rolling up puts. This is no management.
This is them taking it 25%, but no management on the losses, except for 2 times.
And largest loss was when one hit 2 times loss. So
Yeah.
that's, putting in a stop loss.
Yeah. All right, so I'm going to go to the next one. So let's see. This is asset IVRs. And you'll see, that's what I find crazy.
Everything's up except the euro.
Tomorrow's going to be, or not tomorrow, next week's when we see them together, I think every IVR asset is going to go up this week.
Yeah, everything is. So IVR's up everywhere except the euro. And you're right. For this week, same thing. We've got a high VIX.
Yeah. Okay, now Bitcoin,
Right.
this is one that kills me.
Yeah.
Failed to hold the 100,000 level.
Right. And now where is it? Is it rallying at all?
I mean, it was rallying, but the last I saw was like 92. Is that a rally?
93.50.
Is that a rally?
93,500.
I don't like it. I mean, honestly, that level, and everybody has said that's the technician level, like when it drops beneath the 100 level.
Then what?
It's tricky.
It's tricky.
It's tricky.
It's having a $1,500 rally right now. We're at 93,500.
But that's nothing.
Well, it's better than 90,000. 93,000 is better than 90,000.
It is, but I think that is a key level. I think that 100 is a key level.
Yeah. Well,
Okay, now the biggest S&P 500 movers this week. So we've seen you're still looking at earnings.
Right. I mean, Constellation Brands, the STX, I knew they had earnings. Coin is just hit with the crypto market.
PLTR and Hood. Those aren't earnings.
No, that's not. But that's all hit with the crypto, right?
Yeah.
So Coin, Hood.
Is App loving crypto?
I don't think so. I don't know. I don't think so, though.
You don't think so?
Well, I'm not
I
sure.
don't know what App loving does.
Hood down to 116, and it was up to almost 160.
Yeah.
Now
I tapped out of my Hood.
Yeah.
I tapped out up high though. I tapped out at like 140.
That's good.
I know. I mean, better lucky than smart. I will tell you that.
Palantir down 10%, but Palantir, how's that looking? PLTR.
That was down, but not as bad as like Hood.
No, it's 170.
Yeah.
It's not terrible.
Okay, so I'm going to keep moving forward. This was earnings in review. These were last week. There's Beyond Meat down 9%. Disney took an 8% hit, and that was last week. And then the upcoming ones. Okay, so let's look at this.
Earnings review. This was just,
48% winners and 52% losers.
Yeah.
Meaning it does, but that doesn't matter. Like even
It's
if you
close.
even if you got the earnings report, you
Yeah.
wouldn't know if it's going to go up or down.
It's close.
And then this week, here you go. Home Depot had it yesterday. What did Home Depot and Baidu do? Home Depot, Baidu, and Pinduoduo had earnings.
So Home Depot is down 3.5%. It's down $13.
What about Baidu?
A pretty big drop. And Baidu, which we decided to pass on, that had a wild range today. So it had a range today of 108 to 118. Like it's trading 116 right now, but it's had a pretty wild range.
And how do you feel about Pinduoduo?
I don't trade it anymore. I
Let's see what
stopped
it
trading the Chinese stocks. PDD is
up.
Down 6%.
Okay.
So down to 120. There's so many people. I hear so many people say like, "Oh, I'm not trading the Chinese stocks anymore."
Like I said, I put all my eggs in one basket.
And JD,
one
yeah.
very tall basket. So, and we have something in JD. What do we have? We are long. This is just going to expire.
What else do we have? Is that all we have? Just that one part of the money?
Yeah, that's just going to go bye-bye.
Yeah, I think we changed a put, maybe an in-the-money put into
earnings.
Into a call. When are earnings?
No, they were a week
they
ago.
were.
So that's what I'm saying. Earnings are over, and that's what we did to protect ourselves, and it's good we did.
Take a look at our target again with the little rally we had. If it's
Still down
it's still
66.
down. It's still down.
It is still down. Netflix is up 20%. Would we want to take it? It's a put. Takes all risk off the table.
Yeah, sure.
So, I mean, I'm not going to touch our I bid. If you look at CoreWeave, we just switched that, so that's good. No, we didn't just switch that.
No, yeah, that's the one we just rolled.
Okay.
We just rolled it.
Up 4%?
No, we just rolled it. You could put in, for CoreWeave, you could put in a 50% GTC.
Yeah, I think so. Have you been pushing everything out?
Yes, I have. And we are running out of time as far as, is there anything we want to do?
I'm going to take our Netflix. We can always jump back into it. 20% in 2 days, in 1 day is pretty good.
Yeah, that's fine. Netflix is up today. Is that surprising?
No, I mean, after the split, I want to know let me look at the volume in Netflix. Give me 2 seconds. I just want to look at this. 14 million shares have traded in Netflix.
Yeah.
It's a lot.
It's a lot. It's busy. It's busy. Okay, so Netflix we got filled on.
Yeah, look at this boost. We're down almost 50 again. God bless your little heart, Jenny Andrews. We're down almost 50 again. God bless you.
Thank you.
Telling you, 1037. And it's not me,
down?
that was the chat.
What's the chat?
That was the chat that told me 1037 yesterday. So that's what I was like,
no, but yeah. We'll see.
I'm checking
We
Jenny's
will see.
work. Hold on.
Yeah, it's all out. It's
Is
all
it?
out. Everything's out.
All we did is these. Oh, they're trading in between us?
In between. We got the bats trading in between. Okay. Anything is there anything you're doing in your account on these busy days?
So on these busy days, I have a tendency to hunker down. I will not hunker down. I will have a tendency to button things up. Like if I have a small winner, just like we took in Netflix, I'll take small winners and I'll take them off because I don't. If I have a little bit of a win, the unshakiness of the market makes zero sense. Just like my SPX, I put them in for 50%. I want less of a percentage in these in this market.
Right. And I feel. I mean, I know. When you get the boost in vol, that's when there is more opportunity. There's opportunity when we get the boost in vol, but I'll never forget. And maybe go back to the SPY chart. Go back to the SPY chart, because what got people into trouble in March and April was, if you look at the beginning of the year, or not even the beginning of the year, look at February. You see the drops. When we had those drops in February, and we were getting this boost in vol. So we had those drops, and we're like,
so
wow.
I think right here we had. So if you take a look at this, we got the boost in vol, and everybody here was like, woo,
Yes.
opportune time.
Yes.
That's why this hurt worse.
And so I think I'm cautious because of that, because in February we had a boost in vol, and we're just like, oh, this is what we've been waiting for, boost in vol. Let's keep selling premium. And then we got hammered with that hit in April.
Yeah, from March, the end of March into April. That's only a 2 or 3 week time frame, but that hurt worse.
And so that was painful. And so I keep having flashbacks to that. Like, I know we have a boost in vol right now, but I'm not going like loading up all in, because I still am scarred from the beginning of the year when we had that boost in February and everyone started going, more
All
in, and then we had that huge move.
But isn't it fascinating when you look at this chart? So it is so funny because the thick skin, short memory. Like, this was way worse than what's happening up here. This.
Oh, yeah.
This is not. We gave back a month. In this, we gave back a month. Doesn't feel like it. Like I said, we're looking at the feels like temperature right now, and it doesn't feel like it.
It feels worse.
But
to me.
But this was a lot worse. A lot worse.
That was a lot worse.
And not only did it feel like a lot worse, it was worse.
It was worse. Yes. I mean, and again, we had the boost in vol, so people started putting, there wasn't as much powder dry anymore. People were I want to say a lot of people were like all in, and then you got hammered with that drop.
Yeah.
So
and so if you can't. That's why we always say this: risk is managed at order entry. And if you can't live to trade another day, then maybe scale back your size a little bit.
Right.
And I mean, it's hard because you think you're going to miss the opportunity, but it's kind of like, it's a delicate dance, right? Where you have to be able to make sure you're going to live to trade another day.
I know. So
I'm going to go back to Twitter again real quick.
Make sure we got to everybody, and I've got everything pushed out, and then we are running low on time.
Oh, Ajit comes in. I like when he comes in.
Ajit.
Okay, so, look at this. Eric, and I'll go to Ajit in a second, too.
Okay.
Eric's out.
Good.
So Eric is out for the day. I love it. And he made $15.29 after fees.
Still working on the VXZ and the MES shorts.
Which is awesome,
Good.
and I appreciate that, Eric.
I'm glad you're having a good day, Eric. I know he had a couple when we were in Texas. When we were in Texas, we were coming up, and that's how long this down move has been going on.
That was that one day. That day the 2 weeks ago. It was Texas.
When we were in Texas, it was like, okay, everyone was taking a hit.
Mm-hmm. Yeah. Okay, so Ajit comes in with the CRM, which is Salesforce, right? Short strangle. Do they have earnings? So can you pull up his? You go to Twitter, and I'll pull up his strikes.
Sure, they do have earnings coming up. They have earnings on December 3rd.
Okay, what were his strikes?
Let me see. What strikes he wanted.
And I like Ajit. I like that Ajit gives us a visual aid and everything. He's great.
So he's doing the 12.5. So its earnings are December 3rd. He's doing 12.5. So he's doing the earnings cycle.
Okay.
He's doing the earnings cycle, and he's selling the 205 put and the 265 call.
Oh, I'm in CoreWeave.
In CRM, Salesforce.
Yeah. Okay.
205 in December 5th. So in that earnings cycle. 205 put. And the 265 call.
So this is pretty wide. So he's going with. So you know what? It's interesting. I'm not looking at deltas. I'm looking at that little dotted bar. That's a standard deviation. So we went a standard deviation out on both sides.
Yeah. So it's pretty far, and Ajit's been doing this a long time. He's clear of the concept, and he's a risk taker, right? When you see Ajit selling naked strangles, he's a risk taker.
He is.
And what's your risk on that trade? Getting long 100 shares
or short 100 shares
at 200 or short 100 shares at 260.
Yeah. All right, Jenny. We are almost done for the day because
I know we have a meeting. We have an 11 o'clock meeting, so we are a little bit busy. But I think as far as the recap goes, yeah, SPOO's down 46.
Down 46.
Where were they when the show started? Down 70?
Down more than that, weren't they?
Maybe. Down.
Yeah. So we're getting a little rally intraday, which is great, but we'll see where it takes us because down 50 is kind of a lot.
Okay.
All right, Jenny.
Liz,
I'll see you in a couple hours.
Last call, right? If you haven't had enough of us, tune in to Last Call. We will be on 2:30 to 3 today, and we've got a handful of earnings coming out.
We do. Everybody remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We will see you all tomorrow.
We'll back
see you
here
today at Last Call.
Last Call, and we'll be back here again tomorrow.
Yep.
Hey, what's going on, everybody? Welcome to Options Trading Concepts Live. I am Jamal Chandler, joined by the one and only Ryan Grace. What's up, man? How you doing?
I'm doing well, Jamal. Nice to see you. How are you?
Good. How was your weekend?
Yeah, it was pretty good.
Yeah?
Good weather here in Chicago.
It was, yeah, which is helping my natural gas position. I like it. We need that to come down some.
Had a slew of great NFL games, some close ones. Bears with a last-minute field goal.
Hey-yo.
Well. So, yeah, man, I had a good weekend. How about yourself?
I can't gloss over your boy, Josh Allen. That dude had 6 touchdowns, did he not? Did I hear that
3
right?
on the ground, 3 in the air.
Damn.
2 interceptions as well.
He did.
And I think the Bills also fumbled, so there was that. But, yeah, he had quite the performance, which unfortunately for the Bills, and as anybody watching this knows, I'm from Buffalo or I'm a Bills fan, the Bills, as I see it, have to put up 50 a game in order to win. You need your quarterback to score 6 touchdowns when your defense lets any running back go for their record or career day.
Yeah, who, by the way, they did have some running back on. He's not even a starter. He's like the third string dude.
Out of University of Syracuse.
Yeah.
Wasn't drafted, maybe, if I'm correct in that. Yeah.
Now, but what I find fascinating about the Bills, honestly, is that they are basically zigging while everybody else is zagging, right? Like, they don't have a number one receiver. Yeah. They don't have a guy who they're paying $30 million a year or whatever the top receivers are getting right now, and it's just like, give Josh Allen the ball and let him go ape. It's pretty dope
fun to watch.
Yeah. Bears, another close win. It's kind of dope the way they pull them out. Loving it. Look, for a lot of you out there who are in the city of Chicago who haven't chosen a team, you still have time. I'm telling you right now, you still got time. They're looking good. It's been fun to watch. As far as the weekend for me, it was actually the first chill weekend, no football for my kids. So last week, I don't even know if I talked about this a little bit, but my kid was in the playoffs. We had one game to go before the championship. We lost. It was a tight one, and it was crazy. They scored essentially on a interception pick six where one of our kids slipped, and they got it, and that was the only way they scored. And they were an undefeated team. I know, it sucked, man. They were an undefeated team, and we couldn't get anything going on offense. Neither could they, actually. We held them. They didn't score. And the one thing I'm proud about my kid about, not only did he have a sack in this game, which he basically had a sack in every game this year, but actually the best play was towards the end of the game. We had basically, it was a minute and change. We had turned the ball over on downs. They had a nice long run. This one kid broke a run for 30, 40 yards. My kid, who's a D-end, ran him down and lunged at the end to stop him from scoring.
Wow, okay.
They still had the ball with 40 seconds left, but at that point it was okay, they were on the 5 and they just knelt on the ball. So we never gave up a touchdown on defense. And I was like, man, I'm so proud of him for that. He could have easily gave up. The game was over.
Yeah.
And he ran the kid down. It was dope.
Never quit.
But this weekend, no football for us. It was it. It was just chill, like you said. Enjoy the weather. Went out a little bit. Walked around. I even so I don't know if I told you. I bought a Bronco a month and a half ago.
Oh, nice. No, I didn't know.
Yeah, love it, man. And I thought the days of taking the top off were done.
Oh, no.
No, we took them off this weekend. We had to take them off. We took them off. Just the front 2 parts. So it's you can take the front 2 parts off that are in the front seat, and then the back part, and then there's an additional back part that you can take off, but you got to unscrew some stuff for that. So I haven't done that yet. That's probably next summer. But we took the top off a little bit. You know what I mean? It was 70,
you
bro.
Have to.
Yeah.
I've done that before with a rental.
Yeah.
So.
Yeah, it's great. These markets are something else. Just to give you guys a recap real quick, E-mini S&Ps are up on the day currently. It's been a struggle at times, but currently up 9. NASDAQ's up 90 points. Russell and the Dow are both in the negative, so that tells you there's something probably going on with interest rates today, right? Volatility, tiny bit up when you look at the X contract, which I think expires this week. It should, coinciding with SPX expiration. I'm sorry, SPX options expiration. Not just SPX, but equity options expiration on this Friday. Turns out it's going to be a pretty busy week here, Ryan.
Really busy week. Now that the government is back open, I'm actually in the process of just trying to pull up my economic calendar here.
I know, right? Me too. I kind of lost it. I didn't even know where it was anymore. I hadn't had to look at it. And all of a sudden, we got a gang of stuff this week. There's some Fed speakers speaking. I actually don't talk about that as much anymore because I don't know how much those really move the markets. Maybe that's going to change given how much there's been some change with the Fed Watch tool when we watch the potential chance for a rate cut coming up in Dece. It actually took a hit last week, I felt. Did you kind of notice that too?
Yeah, absolutely. Where we're no longer pricing in even a 50% probability of a rate cut here. I think it's about 40% right now versus where were we just a couple of weeks ago. It seemed like it was guaranteed. Not so much anymore.
Yeah.
You think volatility in the market, though, maybe kind of shifts those probabilities again back to a potential cut? I mean, you've heard of some stress in the repo market in terms of funding stress or pressure there. You've got a little bit of volatility. I don't think that the Fed is looking at the S&P 500, for example. But let's say you do get some data here that comes in a little bit weaker, shows that there's possibly some slowdown. I mean, do you think that shifts the probabilities?
I think it's very possible. Honestly, I think it's already started to happen, really. I mean, when you look at where we were last week, and as, you know, it was interesting, like watching, I think the theme of last week was essentially, oh, we do actually kind of care about the government reopening. It became a thing as you started to see some of these issues seep into some of these companies that we pay attention to, and eventually the stock market. Airlines was probably the biggest thing. We started noticing that issue there with air traffic control, and that started to create an issue there. Which again, it's something that we rely on, you know, as a country, right? I mean, in general, air travel, and so that, I think, is one of the reasons why we started seeing this shift with all of a sudden it's like, okay, we're going to get a deluge of data, and a deluge of data. Is it deluge, whatever you want to say it, I guess. And all of a sudden you started noticing that the chance of a rate cut started to change. Speaking of the rest of the data, of course, this week we got the FOMC meeting minutes from like forever ago. Right. I don't know how much those are going to mean.
Is it relevant? Yeah, non-farm payrolls, is it relevant?
You know what I mean? Yeah, September non-farm payrolls coming out on Thursday, which is a weird day to come up with that. I'm not sure. I don't know if that helps you or hurts you if you're trading expiration, which again, a lot of people still do. We try not to for this exact reason. But and then you got OPEX, and again, also on Wednesday, pretty sure the VIX, the November VIX will expire Wednesday morning, so we could have quite a week.
And you have I would argue, the momentum tech AI bellwether, which is Nvidia reporting after the close on Wednesday.
Good God, Wednesday might end up being the craziest day of all. Let's see here. SPX, Wednesday, 70-point move expected. Wednesday, you could see that jumps an additional 30 points to 101 points by Thursday. So, yeah, I mean, I think between all of Wednesday and Wednesday night, Thursday might just be pretty damn wild. And then you get to Friday, 115 points expected for the rest of the week here. So, I don't know if that's over or underpriced. I really don't. I don't know. I don't know what to make of it.
Yeah, I mean, you're definitely seeing signs of some of the air coming out of the momentum trade, right? The narrative has shifted a little bit to where now everybody is, I wouldn't say bearish, but skeptical of some of the CapEx spending, some of the growth that's been priced into to the AI theme, I suppose. I think that it continues personally, but that doesn't mean that you couldn't see a hiccup on a month-to-month basis, that you couldn't see a slowdown in some of the data. I think into next year, it's still a positive environment, but it does seem like, in terms of, you look at the strength in the dollar, you look at the direction of rates here, you look at and even the way that gold is trading to some extent should maybe give you some pause that you could get a little bit more volatility in the equity market short term. But I still think generally, you're going into a more constructive environment, but wouldn't be surprised to see some more vol here.
Yeah, I think
into December possibly.
Yeah, no, I think you're right. I think that's kind of the way things are setting up. I don't know. I mean, what do you think? What do you think changes that? Like, because you're right. I mean, in the past week, it seems as though people have gotten nervous about how much spending is going on in AI. You're hearing stuff like, and I don't even think this really matters a whole lot, but you're hearing more of like, these people who a lot of other people seem to care about, right? I'm trying to think, was it Peter Thiel who supposedly sold all of his Nvidia position? Somebody else sold all of their Nvidia position. But again, they were people who were in so early that they made probably 50x on their money. But it's just like these things are occurring at the same time, right? The fact that they're out of their position, and people are starting to wonder, is it the end of the AI trade? And you're seeing a lot of the names that struggled in the past week. A lot of those names that we've been following, the Oklos and et cetera of the world, I mean, they've taken serious haircuts here. I was just noticing this one today, like this thing was upwards of 190 at one point, and now it's down to below 100. Oklo, which has been one of the bigger names as far as energy goes, and it's just it seems to be all happening at once right now. Like you said, I don't expect that spending to change, but what do you think? Is there any positive news that could reverse some of these flows we've been seeing? Because you're right. Outside of the Google announcement today, right, that Buffett, which clearly still matters in the market, which is a trip to me, but still matters when they buy something. Outside of Google, a lot of these other names are kind of struggling right now.
Yeah, they really are. I think the positive news, first and foremost, could come from Nvidia earnings, and maybe that calms the market down a little bit, or maybe it, on the other side, kind of reinforces the shift in sentiment here today. That said, I mean, I think that as long as you get confirmation that you aren't seeing deterioration of the economic growth, that things are slowing down, we've seen some signs of kind of somewhat of a disinflationary environment on the horizon, or that we might be in at the moment. But if you see that with growth too, I'd be really concerned. When you look at crypto, you might be seeing some signs of that already being priced in. If you think about Bitcoin as a forward indicator for some of this stuff, which it has been previously, we've seen it as a forward indicator for, a slowdown in economic data. We've seen it as a forward indicator, certainly for volatility, and we've seen it as a forward indicator. Well, I guess along the volatility side, just in terms of just taking down some of those riskier positions. We've got a $95,000 maybe or $90,000 Bitcoin price, which is a sign of that. So again, I think it's still going to be positive over the next 3 to 6 months. But if you get some signs of a slowdown, that would be more of a concern. But I guess on the other side of it, to answer your question, what might reverse it is just that you're not seeing this whole thing fall apart. Nvidia earnings are okay, or maybe on the kind of Fed side, the policy side of things, you get some assurance. But I don't think that you're going to get any assurance out of the Fed until you get more volatility in the first place.
Yeah, it does kind of feel that way. If you guys are joining us, it's Option Trading Concepts Live. I am Jamal Chandler, joined by Ryan Grace. Mikey Trader Mikey B is out today. He'll be back tomorrow. But in the meantime, I know you have some slides. I got questions too on Bitcoin stuff and MicroStrategy, et cetera. But I'll let you go through your slides first, and then we'll get back to that and get back to platforms.
Yeah, let's do that. Let's take a look at a couple slides here today, highlighting some of the weak performance that we've experienced and the volatility as a result. We'll go through our trading ranges, but I do think it's fair to start to question whether or not this is the end of the cycle. That doesn't mean that you just go straight down every single day, but I think it does shift how you think about the market and how you might be trading this, where you're probably looking to sell some strength and lighten up on some positions until you get, a shift otherwise. But we've had this daily price momentum that's been bearish for, seems like a couple of months now. Have to go back and check when that actually was triggered. If I pull it up on my other screen here in real time, yeah, we first got that signal right about a month ago, middle of October. What I will caution is that weekly momentum has now shifted to bearish too. Is what it is, not what I want to see happen, but I think it's important to pay attention to. We'll see where we close this week, but as of right now, we've seen that with Bitcoin. We're not quite there with ETH. We are there with Solana. And you just don't get those signals all that often. So for example, and I just measure this via exponential moving averages and crossovers. It's on an 8, 13, and 21-day period. It's maybe it's rudimentary, but it's a way that helps me stay on the right side of the trend. Mm-hmm. When I look at the last time that we saw that weekly price momentum shift bearish, so these moving averages cross over and then price trades underneath it, that was back in, looks to be about January of 2022. End of 2021. You've definitely had different, I guess, circumstances at that point in time. You did eventually get the FTX collapse. That was late 21, right? Yeah, really into 22, and then we ultimately bottomed out there throughout the rest of the year, I believe in the spring. But that's the last time that you saw this price momentum shift. So I think it's worth paying attention to. It doesn't mean that we couldn't get back into neutral territory by the end of the week and you could be back at 100, maybe, who knows. But you have to respect the price action here. If you've been in this from 75, you've had an opportunity to take some profits. I'm still bullish in this, absolutely, over the next 6 months, 1 year, 3 years, et cetera, long-term position. But again, want to caution that, we're seeing some pretty clear signs here in terms of what we measure. That said, performance is pretty bearish, has been across the board here for crypto, as we mentioned. Maybe a forward-looking indicator, starting to see a little bit more volatility in equities, but not necessarily seeing the same momentum signals in the NASDAQ or in the S&P that we are seeing in crypto. All that said, if we jump to the next slide, last slide here that I've got is just looking at expected moves given that 1 week, one standard deviation move that we calculate via spot price and implied volatility. So implied vol is a lot higher. Sentiment is bombed out in crypto here. If you look at kind of the different fear and greed indexes, you're really close to pretty crappy conditions, a lot of fear in the market. You see that reflected in vol here as well for implied vols for Bitcoin and ETH. ETH on a 3-month basis is as volatile as it's been. Options are a little bit more expensive, so there might be a trade idea there. But when we look at the expected moves, 6,500 for Bitcoin, get you back to 100. If you're long here, you're trying to buy somewhere around 93, 89, those would be levels I'd look at. I'd probably want to take some profits into 100 if you get there. ETH, same thing, 27.82 is being priced into the downside, so a break of 3, which we haven't seen yet. Doesn't mean that we won't. Solana has been a really poor performer, but can be very volatile at times. Same thing with SUI and XRP. I wish there was a better takeaway for you, Jamal, but we've been in this market or these conditions in crypto for the last month or so. Really looking at this is, okay, let's see if you get a bounce. Let's see if some of these key levels hold. At that point, kind of looking at 108, 105 in Bitcoin, 3,500 in ETH. They haven't held, and it's continued to trade a bit weaker. I don't think it just goes straight down, but you probably think about if you're long in these areas, low 3s in ETH, do you sell out of some of that? You look for a trade on a bounce, but it's maybe an environment which you're selling any rally for now until that changes.
Well, you can correct me if I'm wrong. And I just thought about this a little while ago. Like, you mentioned some of these other times we talk about 2021, some of these other times where things are bearish in crypto. But correct me if I'm wrong. The crypto's weakness right now is not related to anything any issues that crypto have, right? I don't know any major stories right now that's causing crypto to be weak. I don't know about any FTXs or any other things like that, or it seems as though it's been more just because the market has been weaker. It's just been, it's a little bit more volatile in the weakness than the market has, but I don't know any specific crypto story that's causing crypto to be weak.
Yeah, I don't see any, risk-off headlines per se. I think when you look at what's been going on in terms of how this is traded over the last few months or so, absolutely have had bigger whales that have held positions for a very long time, people rightly so, taking profits at all-time highs, whether those all-time highs were first at 112, 115, 120 or so. You've seen a lot of selling there. The market has absorbed a lot of that flow, though. There were reports earlier, months ago, of 8 billion, 9 billion or so being sold via Galaxy's desk, and that was a big, apparently, OG whale holder that's been in it for a long time. On the other side of that, you see the ETFs kind of absorbing a lot of that flow. But you've definitely had a lot of selling pressure kind of as an overhang in terms of people that have been in the market for a long time. Like when you look at flows, there's obviously been a bit of that. You've had kind of this ebb and flow with these digital asset treasury companies that, kind of live by the sword, die by the sword. So when they're buying, you're getting all these headlines. There's a lot of leverage that's being employed at times too in the market, that's very bullish. And then the opposite of that is where we are now. You go back to the beginning of October and the market really blew up in terms of the leverage, really got taken out of it. We haven't quite recovered. And I think, that recovery was, for many people in their minds, myself included, as we talked about this, predicated on, all right, what are we going to see out of the Fed? What are we going to see out of this potential trade deal with the U.S. and China? What are we then going to see out of the government reopening? And you got kind of cold water that was poured on each one of those. If anything, you got kind of a bearish move out of the Fed in terms of a repricing of rates. You got more of a truce between U.S. and China, and we don't know whether that's going to hold. And you haven't seen a ton of liquidity come back into the system just yet. On the horizon, you've got QT ending, possibly, most likely have lower rates over some time frame. If you read between the lines, I think last week I saw a headline where there was a closed-door meeting between the Fed and primary dealers to talk about repo market stress. That doesn't happen all that often, so maybe there's something else that is coming in terms of some relief from the Fed policy perspective. But that's what this trade's on the margin. It's digital gold, I guess is the best way that we like to describe it. It's highly volatile. And so in those environments, it's going to do really, really well. And I think at least for now, you're in the opposite of that environment from a policy perspective.
How much do you think crypto cares about whether or not the jobs market is good or bad, or whether or not we actually do this 25 basis point rate cut?
I think it cares in terms of the read-through. It could be more volatile in the short term, of course, but if you get bad news is good news in the sense that you get looser policy, you get more liquidity. Let's just say, what takes you from where we are today to an expansion of the Fed's balance sheet, those things over an intermediate to long-term time horizon are positive for crypto. It's going to trade really well when there's printing. Let's say that these $2,000 checks, that gets approved, you get the stimmies, the government is expanding, or the Fed is in terms of the balance sheet. I think that's very bullish, but could it go to 80 in the meantime? Possibly. But I do think it matters if it, kind of implies the Fed's likely to cut sooner than later.
I feel like that is not going to go well. Seriously, politics aside, because again, everybody knows I don't really pay attention to politics, but if you remember, the one thing they talked about in 2020 and early 2021 was how much money was being pumped in the market from these stimulus checks, right? And that became inflationary. And lo and behold, we saw what happened to inflation over the next year and change. I wonder how that's not going to do the same thing.
Yeah, I don't know what the probability of this actually happening is, but I think we've seen the playbook for this.
Yeah.
Right? You know that kind of the way that things are set up, right? You have almost this kind of howling out of the middle class, and people are just more prone to take bets. They're a little bit more, we're going to bet on sports, we're going to bet on crypto, we're going to bet on tech stocks. I don't think that money is going to go into savings necessarily,
Nah.
A lot of it
free money that you just acquired, why would you put that in savings?
All right, I think a lot of it just finds its way into assets, and you see asset price inflation. Would be surprised if it didn't, put it that way.
Yeah, it's
not banking on it, but let's just say that happens. I think this is probably the result.
Yeah, it definitely feels like that. Yeah, it's been interesting watching this crypto move here, and we can go back to the platform. Because you see it started basically around the beginning of October, and we probably about 25% haircut as of right now. And again, it hasn't been because of any FTX type situation or Binance, somebody getting arrested. It was none of that. It's just been general weakness, which again, you can personally, look, assets. You don't want assets to always go up. You need some correction to be able to get in at pretty cheaper prices, and it needs time to breathe and everything. We're not just talking about crypto, we're talking about the markets, we're talking about gold, all of them. And I think when things are down, it's it's funny, and I don't know if this is going to be true anymore, but it's like what I always think about when I think about my fantasy football team. Every week that goes by, whether I win or lose, as long as somebody isn't injured, I'm okay with that, right? Because that just means my team underperformed a little bit this week, but they got next week a better chance to prove so. I think when you have a situation where you have an asset that's struggling a little bit, as long as there's not bad news behind it, it's okay.
Yeah,
it is what it is.
I think. Look, I am very bullish on this in the long term. I think it goes to much higher prices. I also think you have some tradable opportunities in the near term. Like I said, I would look for the 93, 89 range. Maybe you get a bounce off of that. The big level underneath there is kind of that air pocket back to here. It's on the chart around 75, where you were in April. That was as the market was wrestling with what's the impact going to be of all of these retaliatory tariffs. This reset. I remember there's that picture of Trump. He's got that big flashcard or whatever, tariffs on everybody. So that's what we needed, I guess, at the time to take us to 75,000 in Bitcoin, and you rally ultimately to 126. You've pulled back here to, let's just call it 90. I think we're a little bit higher. Does it go to 75? Maybe. But I don't know, after this move, what else you're looking to play for, unless you get an environment in the economy that just completely breaks down. I mean, I don't see it going to 75. Maybe it gets there, just technically speaking, but you also would imagine that there's some very key levels where you'd see buyers step in with a longer term perspective.
I'm sure there's some people who are like, well, I mean, I was really interested in 75 and it got away from me. I'm not interested in 93. I'm just going to wait to see if it goes to 75. Outside of those people, is there any other cryptos that you're looking at right now where you're like, this is a pretty decent price in this area?
Yeah, there's a lot in DeFi. I mean, again, sentiment has been very, very negative, and in crypto it can shift. I mean, either the world's ending or it's going to all-time highs every single day. There's no real in-between. And so you're on the world is ending, crypto is dead end of the spectrum right now because it just hasn't gone up every day.
It's kind of like Bears fans. They either think, the team sucks and everybody needs to getting rid of, or they're going to the Super Bowl. Yeah. That's kind of how it goes.
Yeah, you want to win every single game. We're going undefeated this year, and we're going to win the Super Bowl. And if that doesn't happen on week 3, sort of thing, you're pissed off. I'm there as well as a Bills fan at times. But, yeah, I mean, outside of that, where I have, I guess, where I'm not necessarily like adding positions, but where if it gets a little bit weaker, I'll add things like Uniswap. We don't have it on this platform, but Aerodrome, another decentralized exchange.
What is this?
So Uniswap is Uni. This is a decentralized exchange. What's interesting about this is they just recently put forth a formal proposal to activate what's called the fee switch. So in in Uniswap's code base, there's this fee switch, which if it's flipped on, will allow the protocol to pass some of the fees that are generated from trading to the treasury of Uniswap so that it can burn those fees, buy back the tokens and then burn those tokens. So it's kind of like a stock buyback. So if you have this exchange that generates revenue, all the revenue today goes to the people or the institutions that provide liquidity on the exchange. So they get the 30 basis points, the 5 basis points, whatever it is on the notional of the transaction, that goes to the liquidity providers. We talked about that with how you can generate yield through pools. The fee switch takes, I want to say, 5 basis points of that, and it uses it to then, or will use it to then buy tokens, the Uniswap token that's outstanding, and burn those tokens to reduce the circulating supply. So very similar dynamics to a share buyback.
Okay.
The token holders accrue value via this process because there's less tokens outstanding. Presumably over time, they generate more revenue, they burn more tokens, et cetera. So there's a little bit of a flywheel there. We wrote about this over the weekend, so anyone can go to the Tasty Crypto website and check out the newsletter, and you can read the article there. But a little bit of a base case and kind of bull case model around where could you get to by 2030 if you obviously see continued adoption of decentralized exchange and DeFi. But you need to see Uniswap growth. But if you were to see that, which I think is a fair bet, what would it imply in terms of the burn and the token supply reduction? So that's interesting to me because it has a real catalyst and it's a real thing. Otherwise, I think it's just looking at, is there going to be a resurgence of DeFi? I think so. So if some of this stuff just gets absolutely smoked, then there's probably a trade there.
So you said that this Uniswap is not the same Uniswap you were talking about?
It is, yep. So that's it.
Okay.
Yep. Yeah, so that's the Uni token there, Uniswap. So you can see when that announcement came out, it's retraced a bit, but you can see it was about $5. The announcement around the proposal still has to be voted on in December, but the announcement comes out and this rips to $10. So it kind of immediately prices this in. It's pulled back a little bit. I think it would be a different story if we had slightly more conducive market conditions, I guess. But the other piece to this, too, is to make up for the prior years where they haven't been able to do this or this hasn't been in place, they're going to do a one-time burn of 100 million tokens. So that's going to immediately reduce supply by about 16% or so, which is what you saw with the repricing there where it took you to almost $11, $10 and change. So I think long-term it's very bullish for Uniswap. But, again, you need to be in a better operating environment right now.
Yeah. Yeah, I mean, it's obviously like some of the lesser known tokens are going to struggle a little bit more than the Bitcoins and the Ethereums of the world, which we've seen a little bit. But I mean, these are the ones that I've kind of had my eye on. Some of the ones that I probably stepped in a little bit earlier in the summer, that now I can, look at better prices. So that's kind of the thing that I've been focusing on more recently. But yeah, what I find funny is, like, somebody even mentioned it on the chat here, which, by the way, please come in with your questions. We'll be getting to the chat in a little bit. I saw somebody mention crypto winter, and that's kind of funny to me because down 25% is not crypto winter, guys. I mean, it's just not.
No, this is a correction, absolutely. Typically, we've seen corrections between 25, 30%, and you're still within a bull market. I track the momentum signals, as we mentioned, in terms of the moving averages. You have moving averages on the screen there. When those start to break down, you want to pay attention to it, because that is then a scenario in which, okay, maybe that 25% correction turns into a much larger drawdown, and maybe it struggles for a bit. That's what we're kind of seeing right now. But at the same time, I think what makes this really challenging, and it's never easy, but what's made it a little bit more difficult here recently is that there are clear liquidity catalysts on the horizon that could positively impact this asset, which we know historically have. If we get to stimmies, again, very low probability, but you get the end of QT in December, that's step one. You get balance sheet expansion possibly. You get a little bit more clarity on rates. Those things, I think, all on the margin are pretty positive and are still out there. It would be odd to me, Jamal, if there was an announcement around a new program. I don't think that they call it QE, but if the Fed took some actions to kind of reinflate things here, or to possibly resolve any potential issues, which we talked about, some backdoor meetings, closed door meetings, between the Fed and the primary dealers. If something happens, it would be odd that wasn't on the margin positive for crypto.
Yeah, because they have been talking about the Fed drawing down its balance sheet, right? Like, that's been the talk.
Yeah, we've seen the balance sheet reduce from closer to $9 trillion down to like $6.5 trillion, maybe not quite 9, but it's come down quite a bit. I mean, we've had this quantitative tightening policy, I suppose, if you want to call it, in place. What really it means is that as that debt that the Fed holds matures, they don't reinvest. They just let that balance sheet roll down, versus actually being a buyer of bonds in the market. So when they're in the market, that's definitely more liquidity coming into the system, and we've been in that environment for a couple of years now. That's ending. You have rates going lower, so not the only thing that matters, but that does have an impact on crypto.
Someone was asking, is there any way, you were talking about the idea of whales mostly being sellers, and they were just curious, is there any way to see who is selling somehow?
You can track wallets and everything on chain in terms of, the biggest wallets, the whales, so to speak, and then are those tokens even moving to begin with? What amount or percentage of total supply is dormant? What amount of crypto, but Bitcoin in this example, has been dormant for X period of time? Is it moving? Where is it going? You can see whether those wallets that hold a lot of crypto are sending that to an exchange. So if you see that, that's a signal that they're going to sell. So if we see a lot, just generally speaking, it doesn't even have to be like whale wallets or I'm tracking this wallet or that wallet. If you just see the flows moving towards exchanges from wallets that haven't been very active on chain, it's probably because they're going to sell. The opposite is true too. If we see a ton of flow coming from exchange wallets, so we know that on chain, they don't have just one, but big exchanges like Coinbase, Binance, they have hot wallet addresses. There's hundreds of millions of dollars of crypto, Bitcoin held at these addresses. And if we see that moving out of those single addresses to individual cold storage addresses or just individual wallets, then that's a pretty good sign that, you could be in a bullish environment. People are buying off exchange, moving it off the exchange and holding it. So that's one way to look at it. But there's some different software that's out there or just websites that you could use. Arkham, I think, is one of them. Let's see. Yeah, Arkham is one where Arkham Intelligence or intel.arkham, ARKM.com, intel.arkm.com, is going to give you a dashboard and some tools to be able to track this. I don't look at it that closely, but this is just some of what you see in terms of, when there's nothing else to report on. These big wallets are moving. But this stuff is always ongoing.
Intel.arkm?
ARKM.com.
ARKM.com. Oh, okay.
Yeah. Sure. So that'll get you the Arkham Intelligence dashboard, and that'll allow you to track wallets that at least are known to be associated with certain institutions, certain entities. You know, we talked about like jump trading at one point. They're dumping the tokens over the weekend ahead of some volatility like a year ago around the yen dollar kind of depeg or unwind, the carry trade unwind, not depeg. But, you know, you can find those tagged wallets and you can see how much they hold, what are they doing, if you want to do that.
Andrew Cartato wants to know what you think about the stock Circle. Obviously, the stock just came out with the IPO earlier this year, and all I know about them is they are I don't remember. They are a stablecoin holder?
Stablecoin issuer.
Issuer.
Yeah, stablecoin issuer of the stablecoins in circulation. When you look at market cap, the biggest by far is US dollar Tether. So that's Tether, a company I think people have heard of. You've probably seen reports around. They're super profitable. It's like Tether and OnlyFans. Who's the more profitable company with no employees and billions in revenue, right? So Tether is the biggest by far. Circle is the company behind USDC.
Okay.
So that's in the U.S. probably the more popular token. It's definitely gained market share as well. You know, there's an interest rate component to this. So when you think about these companies, Tether, Circle, anybody that today is able to just issue dollars in tokenized form, but then generate a yield off of those dollars and keep it all for themselves, they're going to make a lot of money if they can keep their operating costs down. That said, the risk is that interest rates move lower on them. Their margins are not as wide. So you do have that possibly playing out. But I think if you just look at this and you say, okay, are you bullish or bearish on stablecoin growth and Circle as a major player? Absolutely, I'm bullish. Now, what's the correct valuation of that? Well, I mean, this IPO'd, a few months ago. If my chart's correct, I mean, we're at like 260, now you're down to 70. Yep. Probably a bit overvalued at the time, a lot of excitement. You eventually get an unlock period. You get maybe some selling pressure post-IPO. I don't know what the price is, but yeah, it seems to be a little bit oversold here short term. I think this is an interesting area. Do you sell puts at 50? Like, I don't think it's going to zero. It's come off at 250. I think this reflects what we see here in crypto broadly. So I'm bullish on this. Is this the best way to play it? I don't know, but certainly bullish on this. And there aren't that many crypto equities that you can invest in. You've got Coinbase stock, you've got some of the different miners, you obviously have these like crypto proxy vehicles, these investment companies like Strategy, Circle's another way to play it. How much crypto exposure do you want is the question. I'd prefer to just hold ETH here. I don't own any Circle, but like if you look at the options, maybe there's a trade where you can lock up, you say, hey, I'm pretty bullish on this stuff. I'm going to go out in January of 2027. And it appears that the lowest strike you can sell there is the 45 strike. So you're more than a year out. You take in $600, your buying power is 1,100. It's a pretty good return on capital if you want to tie your capital up that long to make a bet that maybe Circle doesn't go underneath 45. I don't know. But bullish if that helps anyone.
Yeah, Strategy is at October 2024 prices at this point. And I saw this morning they bought more crypto. Not even more Bitcoin. I mean, they are not changing the strategy.
No.
They are still doing the same as they've always done.
Yeah, it just depends on your time horizon, right? If you're looking at something like Circle or Bitcoin or any of this and you're saying, well, what's your view on the next week? Well, I think you see probably, the path of least resistance is lower until something changes. Yeah. But whether it's AI, it's crypto, it's robotics, it's nuclear energy, I think that's what you want to be in over the next few years, over the next decade. It doesn't mean you buy it today, but I don't think the story's over.
Yeah.
Right? Like, I think stablecoin market cap growth goes to like $1 trillion by 2030. It's $300 billion today. That's what I think about Circle.
Yeah. Yeah. I mean, right. I don't believe the story is over. And I think that's been the sort of sentiment in some circles, if you will, no puns intended there, but it's been the sentiment in some circles over the last week or so. Like, as that story over, you've seen the haircut and a lot of, not just crypto, obviously, taking it back to all these other things we talked about, the Oklos of the world. You've seen how they've been beat down, obviously, even bigger names, right? Meta has really taken a beating more recently, and the market is kind of showing you how they feel right now. But again, it's right now.
Right.
Well, we'll see how this all...
And correct me if I'm wrong, but the Meta repricing here stems largely from taxes. Is that right? I mean, this isn't like no one's using our services, we're not bringing in any revenue. I believe that what came out in the earnings, and you have the gap down there.
Right. Don't worry, people will be tripping all over themselves to buy this at 800. They don't love it now at 600, but that's how the market goes.
Right? Like, I would love to buy Tesla at 3 or lower than 3. I think you want to be long Tesla over time. Right. Doesn't mean you buy it at 400 or 500, wherever it was. But I think there's like a bid in the market for these companies if they go a little bit lower. And then, you bounce and you missed it, and we go on eventually to new all-time highs, I believe.
It's usually kind of how it works. Speaking of the different companies, could we check out the list of what everybody is trading today, what all the Tasty traders are looking at and seeing and trading today, because that's always fascinating. Top 20 symbols here. Speaking of, Tesla's number 1, 16 IVR. Google, of course, with the big move today on the heels of Buffett purchase at 33 IVR. Nvidia, Amazon. I mean, there's no surprise here in a lot of these names. Tesla, Google, Nvidia, Amazon, Apple are some of the top 20, the top 5 of the top 20. And then it still cracks me up that people trade Goog versus Google. And I mean, Google's the A shares. I don't know who and why trade Goog, I should say. I don't know why. I mean, I guess if you're selling, it doesn't really matter, but it's the same thing. Like, are you trading both? I don't really know. Whatever.
Yeah, I haven't followed it that closely, but that's a good point. So you have the A shares and then the...
Yeah, and again, one's for voting, one's for not, but it's just always kind of interesting to me. iBit, of course, is up there, number 7, Palantir, number 8, another stock that's taken a hit more recently, but I'm sure it'll find its way back. Micron, 9, Meta, 10, Micron 75 IVR, and they already didn't they have earnings? Am I tripping on that? No, they have not. This is part of the reason why but wow, 75 IVR in Micron. iBit 66 IVR. Netflix, AMD, SoFi has been on the top charts for a while now. Of course, is this TSL? I don't trade any of these things anymore. I used to love names like this, like 2 times, whatever, 3 times.
Okay, yeah, some of the inverse ETFs, ETNs.
Never really traded any of them. I know a lot of people like trading them, but whatever. Robinhood is up there. MicroStrategies, as we just talked about. GLD, of course. TQQQ, Microsoft, CRWV. The top 20 names essentially are tech-related names.
They never change. This would be the same list as last year before.
I wonder. I mean, again, and one of the things I kind of noticed in a small way last week was there was a little bit of a rotation into some of the, lesser traded names, like the consumer staples type stuff. There was a little bit of that rotation as you saw some of the selling happening in a lot of the names we just mentioned. But those names don't find it to the top traded list, at least not for Tasty traders. It just doesn't happen.
Nah, they just don't have the volatility that I think we're hungry for, Jamal. I like crypto because it's volatile first and foremost. If it didn't move like this, whether it's to the upside or the downside, I probably wouldn't be as interested. We wouldn't be interested in the small-scale nuclear reactor stocks, even if those things don't really exist today, right? We're not trading that. We're trading the volatility.
Totally. Goog, and do they have a divergence? 287.56. There's only a 50-cent divergence. I'm not even really sure. Is that 40-cent difference? I don't even know. I don't even really care. I just trade the A shares. I don't really know. I'm curious to know if anybody does trade for a divergence. Really not a big divergence here. We got about 10 minutes left in the show. Any questions you got, we will go through in the chat. Otherwise, we're just gonna do our own thing. Markets have reversed a little bit here, and this has been the day. I don't know if the market is sort of. I feel like the next 3 days could sort of be one of those situations where we sort of trade sideways as we wait for data to come out, as we wait to hear from this FOMC. Which again, those meeting minutes are from a while ago, and there's a lot of things that I would say have not happened since they had that meeting. Which a lot of it is data. I don't know how much you can really take it seriously, but and then of course we got the jobs report coming up too, so I feel like we could end up trading sideways as we wait for those things to come out.
Do you think there's a world in which, given the impact of AI, you actually see jobs data where it would deteriorate in a way that you normally would, or maybe it wouldn't. But because of the AI impact on labor, it throws kind of what you would normally expect out of the Fed off a little bit. Like, could you, I guess here's my point. To rephrase, could you be in an environment where you have a relatively strong economy given the traditional measurements of of just labor markets, or productivity, maybe more so, given productivity on the back of AI, where the Fed still has to cut rates? Like, do you think there's an environment in which AI kind of distorts things?
Distorts the jobs report?
Not so much anything in the short term here, but one in which where we would actually be in an environment where the Fed has no choice because of the financial system to keep rates lower and to almost stimulate, even though from a productivity measurement, things are increasing, right? So I guess what you're seeing is you would see a breakdown in the labor market as it pertains to human labor, but you could still see record earnings and productivity, record earnings out of companies, but productivity growth out of the economy. But the Fed would have to almost step in to, I guess, alleviate some stress in other areas.
I think that's exactly where kind of we might be headed a little bit. And again, I mean, there are going to be some jobs that are culled for the most part because of AI. But just like everything else in human history, we find a way to adapt and we find new jobs, right? Like the fact that we have the jobs that we have right now 50 years ago was not a thing, right? And so I just think just from that standpoint alone, there are going to be a lot of jobs that are eliminated, but they're going to be done a lot more efficiently, and eventually humans will just find other things to do, or maybe even former things to do, whatever that may be. But I think we're probably going to have to start looking at the jobs report from a different lens going forward because of the fact that AI is being such a disruptor, if you will. But it's really, you can consider it a disruptor in some ways. You consider it advancement in others, right? So, yeah, I think it's very possible. And the idea that they'll have to keep rates low because of people who are, struggling job-wise, that might just be a temporary situation until those things start to change out. Or maybe we just shift the way that we look at everything, and the bad jobs report is not as bad as it may necessarily seem. It's just changing, Or we start including how many AI jobs there are in the jobs report.
Right, how
you know what I
many
mean?
robots make up the population?
Yeah.
That's the really wild thing. If you go out a little bit farther, the humanoid robots replacing the workforce, starting with factory workers, but almost all engagements. I mean, you see what Tesla and many other companies are doing. I think the goal is let's put one of these in your home at some point from a consumer product lens. That's where it could be obviously extremely disruptive. Tough to even think about how to price that in.
I don't think I could sleep well at night if I got a robot in my home, dude.
Right? It'd be weird.
I don't know, man.
People said they wouldn't be comfortable.
When you wake up in the middle of the night and it's like standing over you, you know what I mean?
Right? We've seen too many of those horror movies, but people said they wouldn't be comfortable getting in a stranger's car. And now, it's commonplace. UberX, Uber, I think you adapt. There are still the horror stories where like this Uber driver was a serial killer or this, there's always going to be those robot did kill this person. It went dark quick. But I think generally, people will adopt this stuff.
Yeah, no, there's no doubt about it. I'm just saying I'm not going to be the first or the 10th or the 100th maybe. I'm going to be way down the line.
I'm with you there.
Seriously, I really am. Nvidia, of course, is the big dog of the week. You talk about, and I've got a couple of things on here. I got a calendar and I also have a diagonal, but again, multiple days, at least 2 days away. So all of this premium is not fully earnings premium, but nevertheless about $14 expected move, a little under 10% for the week here, about 8%, I guess you could say, for the week. I don't know. I mean, it's funny. I put these trades on actually when the stock was trading like down on the lows last week, somewhere around 170 something, I think, or close to, I thought, is 180. So I put these trades on here, targeting the 200 strike. I normally wouldn't, I was actually not going to do anything because most of the earnings plays that I had done, I usually do calendar call spreads for earnings, and most of them really didn't do a whole lot. I can't remember I think Amazon worked, maybe Google worked, but the rest of them did not. Meta obviously did not. Microsoft obviously did not. And again, just talking about the big names here, because what I noticed from the few earnings that I played, especially these big ones, They probably beat, but they didn't smash, if you will. And so as a result, the stocks were either punished or just slightly lower than the expected move. And that doesn't necessarily bode well for me, like when I'm trying to play for the big upside, splash play, right? And I just wonder if Nvidia is going to be the same situation. If it's going to, again, I don't think the stock's going to, I don't think we're going to see a core weave type move that we saw, right, for earnings. I don't think it's going to be that for Nvidia. But I do wonder, again, a lot of the MO for a lot of these stocks and earnings has been just blah.
Yeah, I mean, they've run up so much over the last 6 months or so. If you miss the top, and I think this is true of Bitcoin or true of crypto as well, if you don't have any further catalysts at this stage, given the gains that people do have in there, that itself is probably a catalyst just to take some profits in the short term, at least. In this environment too, where volatility is picking up a little bit.
Sorry, I just noticed this question somebody asked. I didn't want to miss it. They asked way early in the chat, if you're buying SOL at 135 level or waiting until the sub 100 fib retracement.
I haven't bought any Solana here recently. I mean, of course, if Solana goes, look, first of all, very bullish on all of this stuff. Time horizon is 1, 3, 5 years. I think Solana in a bull market where the Fed is spraying it down with the money hose, which we could still be in, you could see a longer cycle. And that's the other thing that I failed to mention earlier, where people really anchor in this 4-year cycle. And because of that, like, you are there right now at this point in time where it should be, if it is historically accurate, the time to get out. So I think that's weighing on some people. But let's say that that's extended, or let's say that you do get to the point in time where this is just does the crazy shit, as I've mentioned. I think Solana's a 10x. I think it goes to 1,000. Doesn't mean that it stays there, but I think you see much, much higher prices. So if you get to 100, I'm a buyer. Haven't been buying any here, but if it goes a bit lower, probably will add some for a trade, but not looking at it from a technical kind of like fib retracement or anything like that.
And that's essentially the April low, which everything was pretty low at that point in time. So that 100 level.
Yeah, I don't think you get there given the catalyst on the horizon, what you needed to go there in the first place that elicited the volatility. But if you do, I don't know if you stay there.
Yeah,
I would imagine people are like,
I think a lot of other things are going to be down too.
Right?
Just, quite honestly. For lunch today, it's an Indian spot, 9 cents. Yeah, like 9.
Yeah,
cents.
I'm ready.
Looking forward for it.
Starving.
I'm looking forward to that. Is there any assignment risk with SPY at 21 DTE theoretical? I don't know exactly what position you have on, but there's always potential assignment risk, especially as you get closer and closer to expiration. It just depends on how deep in the money your position is. So, not really sure.
Hey, guess what? Look at extrinsic value. If you don't have any extrinsic value, there's probably a good chance you're going to be assigned.
There you go. Yeah, I think I've gotten most of these questions here.
What else are you trading, Jamal? I got some questions. What are you in right now?
Me, I really got a lot of things I'm sitting on that I need to get paid on, really.
Okay, so you're going to sell into any strength, as we talked about, and kind of reassess. Is that fair?
I need the strength first.
Okay, yeah. I'm in the same boat.
Into it. As you can see, a lot of my positions are somewhat red, but again, some of them are diagonals. They are, a lot of my book right now is a January, December, either diagonal or calendar call, outside of the few things that I'm short, that are kind of in the money. Like we talked about some of these energy names, the IonQs, the IRAs of the world. Those are the ones that I've, they're sitting at these sort of near or at the money situations on some of the short puts, or way out of the money, like the IonQ. I think I'm short the, where's my position? Oh, no, here it is, the 55. So I got a couple of these that kind of are annoying, but I got time, so I don't necessarily need to worry about anything. And I feel like we're going to get some clarity one way or another this week with all this data coming out, with Nvidia coming out. I feel like this is that kind of week, so I'm just kind of waiting on that to happen. I'm looking forward to it.
Yeah, I think when you look at this stuff too, we this is again true of crypto. Just take it for granted it's going to move like this in the upside. You're comfortable with it. It doesn't feel one way or the other. This elicits a much worse emotional feeling when it moves by the same amount just to the downside. But I mean, you look at the average true range in here, like IonQ is moving on average on a weekly basis about $10 a week right now, and it has been for quite some time. And so it feels crappy today, but you could easily be right there back at $60 tomorrow, sort of thing.
That is the hope, Ryan, for sure. Guys, we could sit here and talk to you all day, man, but it's our time. We got to roll. Thanks for watching the show. As always, if you want to reach out to us, you can do that on Twitter is the easiest way. I'm at Jamal Chandler. Mike is at Trader Mikey B. Ryan is at Ryan Fred Grace. And also, you can always check out at Tasty Crypto, too, and get all the tons of great stuff there. Folks, thanks for watching Option Trading Concepts Live. We will see you tomorrow at the same time, about 23 hours time. Later.
We wanted to call in because recently some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty-gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
This was not a paid, you're not getting paid for this advertisement.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And I'm the Bat.
John McLaurin, Wisconsin. Number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
My dad, who was trading options in retirement, introduced me to options trading. He said, you have to check out this tastylive site. The way they taught options was very accessible and easy to pick up. I think a lot of people think that options trading is gambling, but it's not. It is simply probability and taking an educated guess. It's more like insurance. People should watch Tasty Live because you can pick up a lot of information in a short amount of time, and it's actually practical. You can use it to make money, most important part.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
In road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But, stay a while. Take your jacket off.
No. I'll stay, but the jacket's not
Come
good
on,
enough.
take your jacket off.
Nope.
Come on,
No.
do that.
I'm sorry. I didn't mean to.
No, I'm sorry.
You hopped on this cowboy's horse, so I guess you got to hear his tale. In '87, I took it off. There was the market crash. In '92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes.
Never do.
How do you shower?
The jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado. Just endlessly washing up on your short.
I mean,
This is moving so fast, and I like it.
Yeah.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on tastylive.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
my ego, watching my tongue. If it ain't kind of necessary, then I will be done. I am human, and I am flawed. My skin is thin, and sometimes I bear my claws. Forgiving me, forgiving you. We're all learning to live in truth. All I can do is what would love do? What would love do? Love will love you. What would love do? Love will love you, love you. What would love do? Love will love you. What would love me? Love will love me. Love will love you, love you. Put down my halo, put down my wings, realizing I can't fix everyone or everything. You are human and you have your own path. And if you need me, I'll just wait here until you ask. Forgiving me, forgiving you. We're all learning.
To risk and reward. The market is extremely volatile. I know Josh kind of mentioned a minute ago, it feels like you kind of been chasing your tail a little bit. If you're buying the highs, you're selling the lows. I mean, we're right back to both spots a couple times throughout the day. Before we get into that, Brother Gus, how we doing today?
Brother Bruss? Yeah, I'm doing good, yeah, I did. Again, this morning I was met with some necessary liquidations, so I've recouped a little bit of cash here. But this market action today is making me cautiously optimistic that this might be the bottom in a technical sense as well. We've had some good resistance at these levels in the last 2 months. So yeah, hoping we'll catch a nice little bounce and return to the highs. But I got some shorts on too. I said I've done a pretty good job. I could have rotated into shorts a little bit more when I felt that we were nearing the top. Right. But I've done a pretty good job with how long delta I was to getting some off to getting some shorts on, such that I'm not getting completely obliterated in this recent environment.
No, I love it. Is there anything else that's kind of standing out of the portfolio? I know on my end, UNH not doing too hot today. QQQ not too hot. Bought a call that expires, I think, by the end of this week or by the end of next week. A little bit long bias, just looking for a little bit of a pop. But we're still a little bit underwater. That just goes to show how volatile this market's been to the downside.
Yeah, Jared putting it very well here in chat. Jared, this is a very vindicating comment because I go to say things like this on air all the time and then realize I have to be professional. But we catching a bid here, fam.
We catching a bid here.
That's true. Type shit.
Type.
We are catching a bid.
We are catching a bid.
Thank you. But yeah, we certainly are catching a bid. Errol and I like to joke that we always seem to be talking about maybe making new lows while we're on air. Perhaps today we'll break that trend a little bit. Although as I'm speaking here, I'm watching this candle shrink a little bit, so I don't know. Still a bit concerned. But yeah, with the affirmative rally off these lows. I mean, we touched 656 this morning. We've since shot back up to 663. So yeah, I'm seeing that as a there's a lot of buying power here. It's just whether the selling pressure is enough. But a part of me wonders if this action that we're seeing and we're trying to attribute it to this and that, if it could just be profit taking as we near 700. I mean, particularly off the top, touching 690. That to me feels like people are starting to say, oh, well, we're getting close to 700. I feel like a lot of people are going to have sell orders at 700. Like, let me just collect some profits now. We've had this good run I bought at the bottom in April. So that definitely could be something as well. Because that's the thing is, we feel like the sky is falling, but when you zoom out, this is nothing. This is nothing. Like such a blip.
Which makes it a little concerning with how, I guess, the lack of pop in VIX, I feel like there should be with the pullback that we've got. Right?
Yes.
Put it in perspective, it's not a big deal. With that being said, we can jump into the Tasty Trade platform, check out volatility at the same time as we...
You just reminded me, I want to get short VIX as well. I said I would do it over 23. I wish I had gotten it at 25 this morning, but let's do it.
Anyone know a good company to build a computer? Used iBuyPower before. Curious if anybody knows anything else. No, I know Micro Center is probably a great spot to check out. I've went in there a couple of times. I haven't built my own yet, but I went with a couple friends to build out theirs, and Micro Center was a great spot to.
Yeah, I sourced all my own stuff just from all over the place when I bought mine. My power supply specifically is a iBuyPower brand, I believe. Yeah. But yeah, I mean, Newegg is good. Corsair website is good. I like to use PCPartPicker.com. That's a great one to like set up the whole build and make sure everything's compatible before you start buying stuff.
Mm-hmm.
Those would be my shouts there.
Oh yeah.
We're gonna go 2 weeks short VIX. I'm not gonna sell a naked call. I do not want to do that, brokerage.
Looking at VIX right now.
Yeah.
I gotcha. Quick look at VIX over here. Let's go on the daily.
Oh yeah, this is so juicy.
There we go. VIX sitting at 23.38 right now. The other day, whenever we had a VIX pop, we traded at around 28.99, just shy of 29. And then we contracted from there. Volatility tends to cluster, but maybe we get some pullbacks before we see more clustering to the highs. But with that being said, we did a little bit in the micros on NASDAQ. We did a little bit last night. I was doing a little bit of a trade review, and the market started to rally. So we had an opportunity there. We'll break that down into the TradingView platform in a little bit. Look, I don't usually like to trade during Asia session. The liquidity is typically lacking. And like you can definitely tell just based off of how the candles are moving outside of the New York session. But anyways, we traded a little bit of the micro NASDAQ. You know what we traded for the first time, Gus? Some micro Bitcoin yesterday. I paper handed it. I got out after the market ran against me, maybe 5 to 10 points. We'll look at the entries and exits after that. But first time trading some micro Bitcoin. And then also I got short some gold last night, which was going really well. And then it ran back on me. But those are some newer products that we're getting involved in. So we'll take a look at those and what we've been doing in there. But it was a good time. It feels weird trading a new product you're not typically in, though, I will say. You feel a little uncomfy.
Sure, yeah.
At times. We got Nokia, took this one off today. That was just a put. Oklo sold in Iron Condor in there, 31 days till expiration. Still break even on that one, so we got a little bit more time. Beyond, I'm over this position. You're not in Beyond, are you?
I still do have my shares.
Okay,
yeah.
This one is. I'd prefer to have shares in this one, I would say. At this point. So.
Yes. Yeah, I'm grateful for the shares at this point. I didn't want any time horizon on that trade. It's just it's too sketchy.
It's Beyond, yeah. The story kind of came and went. Yeah. It's whatever at this point. So
yes.
Gold has been a little bit more quiet. We got some positions on in there. 3 days left till expiration. We'll come back, manage that one before the end of the week. QQQ, bought a call. This one expires by the end of the week. I bought the 604, expires November 21st. We'll circle back around to this. This one's really going to be dependent on if we get a rally really tomorrow and Thursday, because again, since we bought this call, our time is going to be working against us. So we kind of need that pop or that rally to sustain itself a little bit to, squeeze something out of this one. So we got a couple days to do that. I hope it's not on Friday because time is going to whack this one if that's the case. And then UNH. UNH has been a little disappointing lately. A little bit more out of the bunch, but got a little bit of time left on those ones, and then we'll circle back around to those by the end of the week. But that's what really stands out in the portfolio. Really, just trading some of the gold products, some of the gold futures, and then also some of the Bitcoin futures for the very first time. There's a first time for everything.
Love it.
So,
the Bitcoin futures. That's very. It's great that we have those. It's what I keep saying. It's just
the ability
another
at
vehicle
least.
to do this. Yes.
Yeah, right. So, and I was sitting there too. I was like, you know what? I'm not the biggest crypto trader, but kind of cool that you can get involved and express your opinion without having to have a massive bankroll.
Well, yeah, and I'll tell you what too. What all this Forex stuff has got me in my Midas Forex trades over here. I joke that I win every time. I legit do win every time, and if I'm losing, I just buy more and wait until it's winning. But what that has taught me is that the principles really do hold up across everything. You don't need to know anything about crypto to say, hey, Bitcoin's at 90K. That seems a little low. Like maybe things will track back towards the upside here.
Right.
Likewise, I have I think I'm long euro against the yen, or the other way around. One of those two I have on right now. That's all just because I can look at a chart and say, hey, this thing's at a 7-year low, and currencies are cyclical. This is a good spot to get involved with this. And so likewise, I think that same sentiment sort of lends itself to crypto. That you don't have to. You do have to be pretty sharp if you're going to be trying to do crazy intraday stuff, especially leveraged products. Oh my gosh, I can't believe anybody in the world does leverage crypto. But to just do some swing style stuff or to read chart action, all the principles still hold up the same way.
Check out some of those the crypto futures, right? Those products are already leveraged.
Yes.
So I know if you're looking for that leverage, that directional exposure on those products, definitely with some of those products. Yeah,
absolutely. To give some shouts to chat here. Woke up to TOS saying my computer needs to have Windows 11 now. No warning, LOL. Something is happening right now with Windows 10. Like they're going to end security support for Windows 10 or something like that. I have Windows 10 on my computer, and every time I boot, I get a pop-up that's like, hey, security support's going to end at the end of the year. You're not going to be secure. I've just been ignoring it myself. But I did have to update my motherboard BIOS to be able to play Black Ops 7 because it said something about the Windows 10 security thing. So I don't know. Weird stuff going on there. And then I saw, it felt so bad this morning. I bought some Open. You bought some Open this morning. Oh, no.
And with that being said, we can jump over to the TradingView platform.
I guess
we'll check out some of those tickers.
I guess that's sort of.
Was that Open?
Yeah. I mean, it could be better. Open, I saw was very volatile today.
I gotcha.
And then additionally, Meta making me a little less depressed as well. Jared, I've tried my hardest since you sent that comment to figure out what your position could possibly be. Did you get long at the very, very bottom? If you were long before today, you're losing. If you're short, I guess you must be short. If I were a betting man, and some would say I am, I think you must be short because it is technically still down today, even though it's been working back to the upside. But happy to hear it. I am a little too deeply long Meta for my comfort, but holding strong on these for the time being. I have two 710, 715 short put verticals, 212 DTE, and then additionally a 820, 830 short put vertical, 759 DTE.
Nice.
That's going to get home.
Nice. Just waiting on pop in the market.
I'm more concerned for the 759 DTE 830 strike Meta. I am more concerned that Meta splits than I am that trade loses. that is my greater concern.
It'll come around. It'll come around when NASDAQ comes around too. I was doing a little bit of a trade review last night. As I was doing the review, noticed we were trading near down our value area low. And after that, we traded near down the value area low a couple times last night. And again, this is Asia session, right? There's London session, there's New York session, where if you're not familiar, we're typically trading New York session. That opens at 9:30 Eastern Standard Time. But this one was last night. So this one was maybe around, I think it was maybe 7 or 8, doing a little bit of a trade review. We noticed a couple of times the market wasn't giving us any, clean opportunities per se. It was really hard to tell if the market was trying to stay within this region over here, or if the market was looking to expand outside of that region. So right here was really difficult to determine what the market was trying to do. So with that being said, it was one of the reasons why we just used one contract. Sometimes it's like, even if you have a little bit of conviction here, like just taking the trade with the smallest position size, or maybe half your position, or 80% smaller than what it typically is if you're ever just unsure, especially if you're trading around a time you don't typically trade, right? This isn't the most volatile time in the market. It's most liquid time in the market. It's usually New York session. What are we doing placing trades at 7 o'clock in the evening? So with that being said, that's why we made the decision just to use one contract. But we were looking to get long off this value area low just because the market repeatedly tried to trade outside of our level of value, and that is what gave me the confidence personally to take this long, and was able to ride this one all the way towards the value area high, and was able to catch a meat of the move. That did happen very quickly. We're on a 15-second chart right now, so this is really making it seem like it's a longer duration than what it really is, but it was not that long of a trade. Maybe just like 7 minutes, if that. And then we got one more trade to go over from the same price point that we'll go ahead and break down here. But no, have you ever placed anything overnight before? Mostly just swing positions?
Yeah, no. I mean, nothing. I've never done anything overnight in markets that can move overnight. Like, right. I do obviously swings all the time and keep things open overnight.
Yeah, of course.
But yeah, in terms of markets that can move overnight, not really. I mean, I have some crypto exposure, I suppose.
Yeah, that's what I was thinking. Maybe some of the crypto side.
Yeah. But I'm never, again, just because I don't know crypto that well and I don't follow the trends or anything, I'm just never doing anything like, super aggressive or short term with crypto. It's always like longer dated stuff with a broader thesis that I don't even feel like I need to check day to day necessarily.
No, I'm pretty much in the same boat. This isn't even a typical occurrence for the most part. Later that evening, maybe 20, 30 minutes later, we sold back off down to our value area low again. We wanted to see if we'd get any response from there. This time was 2 contracts just because we had a little bit of a tighter risk. You can see we had our first entry at 24,869, and then the next one at 24,872. So that would bring the average price at around 870, 871. And we were risking the lows where we got stopped out of, which was at 24,000, 861. So we had about maybe less than 10 points of risk on the trade. So sometimes whenever you snag an entry that's fairly close to your risk, sometimes you can size in a little bit more. So that's why we used a couple contracts on this one. But anyways, we ended up getting stopped out, and the market ended up pouring to the downside. So there's the risk management protocols coming to save us once again. Because again, you might look at these value area lows sometimes on the volume profile, and you might find that, okay, Errol, I'm using a stop loss, but the market is stopping me out to the downside or stopping me out to the upside before the market runs. And it's like, yes, that is true. If you do use smaller size and you don't use a stop loss, there's a higher probability you're going to catch the move that you're looking for, but there's also a higher probability you're going to have to withstand some of the drawdown that comes along with not using a stop loss. And with the market being so volatile, it can just be so difficult to, withstand some of these drawdowns, especially with just one micro contract. I mean, if we sell off 50 to 100 points overnight, and we see the market do that in 10 minutes all the time.
Oh,
right?
yeah.
That's like $100, $200 just on one micro contract, not even a mini. So
I saw a guy on Reddit the other day. I told him how to do it and helped him out, but he was like, maybe I've told this story before, but he was like, I trade a lot of futures, and I have price alerts set up to go off and wake me up in the middle of the night so that I can get out of positions, but my computer keeps falling to sleep. How can I fix this? Bro. And I was like, brother, you should just sleep. But if you want to keep your computer on all night, here's the settings.
That's hilarious.
He was like, thanks.
That's hilarious.
Yeah, I thought that was funny. But yeah, it's like,
who's going to sleep first?
Yeah, you were the market.
You're the market.
Yeah, and it's I can't imagine living that way. And so, yes, to that end, I totally understand where you're coming from here. It's scary.
No, 100%, 100%. We did trade some of the micro Bitcoin futures for the very first time. I gotta admit, I paper-handed this trade pretty badly, but let's just go ahead and look at the entry and exit. And what we were looking at, because we did some analysis together, and we're gonna try and trade off of that a little bit. So this was the short entry from last night on the micro Bitcoin futures. All you got to do is type in MBT. If you're on the tastytrade platform, you're going to have to type in /MBT. But I'm looking at MBT right here. Micro Bitcoin futures got short at 91,355 yesterday. Ended up getting out at about 91,750, maybe 10 to 20, 30 minutes after that. Clearly didn't have a lot of conviction in this trade as to paper handing this move, because we ended up getting more moves to the downside. Price did end up heading lower. But when you have no confidence, no conviction, the market's going to expose that.
Yeah.
So some of the Bitcoin futures here, if we go to a larger time frame, we'll look at some of this analysis together. I'm still not opposed to getting short, though. I think if Bitcoin can rally a little bit more, I'll feel a little bit more comfortable getting in short. And that's something that I was looking at when looking at Bitcoin yesterday either. And again, am I a crypto trader? No, not per se, but I'm a futures trader, and this is another futures market we can apply some of the same concepts on top of. So that's what we're going to do here. But if we can get
I got longer as you were talking.
Longer?
Yeah.
Oh, there we go.
Yeah, I picked up what I even just do. Yeah. I picked up all 94 DTE. I have a naked 60 call, February 20th expiration cycle, and then I also picked up a 54.56 vertical.
Oh, fire. What's that?
Three of those to be exact.
What's that, IBIT, or is that the?
IBIT, yes.
IBIT, nice.
Yeah, so we're all sorts of in. That adds to my existing position of naked 75 call, naked 105 call at 212 and 423 DTE respectively. But
okay.
Just to put that out in the ether, Errol and I have misaligned sentiments on crypto here.
I mean,
I'm thinking longer dated though.
Yeah. And I mean, I'm thinking short term here, and again, a little bit bullish. It'd be nice to get a decent pop so that you can feel comfortable getting in short. Right here, it felt like you're getting short into the hole, and that's really what it felt like yesterday. It's like we're shorting into the hole. We're shorting after Bitcoin just fell 10 to 20,000 points. Now you're gonna get short. So it's like, let's wait for a pop. We'll try to reposition, get short. If it squeezes us out, then it squeezes us out. But let's at least try to position ourselves to the downside a little bit better. But that's what was going through the mind last night. Then we got some options positions on IBIT as well, right?
Yes.
And you prefer IBIT over BITO.
I really don't have a preference.
Don't have a preference?
It's IBIT. IBIT comes to mind first. I mean, honestly, I couldn't tell you like what the differences are at all.
I mean, IBIT is more liquid, maybe.
Yeah, maybe
that one might be more liquid.
Yeah, I'm not sure. IBIT is just kind of what I've always done. But I mean, BITO, BitB, whatever you fancy.
Yeah,
they're all pretty much moving the same. But yeah, IBIT. Actually, see, I drew some very accurate trend lines on BITB sometime. I don't know when I did this.
BIT. Oh, the Bitcoin ETF.
Yeah, but yeah, I apparently perfectly drilled the trend and breakout in January and February. So
yeah, you're gonna have to steal those charts over there, brother. Better watch out.
Gotta change my Twitter to Gus Crypto.
Yeah, you better watch.
There is fantastic news breaking in chat right now.
Okay.
Warner Brothers Discovery rose 5% after a report that Paramount Skydance is preparing to bid $71 billion for the entertainment giant.
71 Bs.
Yes, P-Sky, my goat.
Sky, the
they
goat.
just
My
keep
goat.
doing more.
Yeah.
It's amazing. So happy I have these calls. And yeah, I think that is just another bullish thing for P-Sky. And I'll tell you what, full read right now, that will get approved, the deal will go through, and then for some reason everybody will panic and sell Paramount as though making this giant investment into a company that's too big to fail and has been around for generations is a bad call. That's what'll happen. I don't care if it's an overpay. Love that. Love the purchase. I don't know how much I love, as alluded to in chat, Larry Ellison controlling the entire media world, but I love it for my position.
No, we love that.
Yeah,
we love that.
So big fan. Anyway, sorry, didn't mean to derail. I was sitting here quivering, wanting to say that this entire time. I'm very, very excited about that.
That's P-Sky though, right?
Mm-hmm.
Yeah, being the beneficiary of that.
P-Sky, I'm already at a freaking 10x. More, give me more. This is so irresponsible how I've done this position, guys. Please, if you're ever to 2x on anything, please exit.
Please exit.
This is a degen position.
Whenever you're about to take a screenshot of whatever you're going to take a screenshot, go ahead and close it.
Yeah, that's true.
Go ahead and clock out.
Yeah, if you're up enough that you're trying to show the world, go ahead and take your profits.
That's funny. Let's take a quick look at some of the micro gold.
Comcast
futures.
and Netflix also bidding for Warner Bros. Discovery. Sorry,
Are they doing that right now? Comcast and Netflix?
Yeah, Netflix has a chance. Comcast. What are we talking about?
Yeah.
Are they even still
Talking
public?
about practice?
CMCSA, is that still a ticker? It is.
Talking about practice.
Talking about practice.
As we pull this up, this was the gold short that we ended up stopping out of. So we got short at around 4,041 on gold. Ended up covering that at 4,059. Gold in the micro Bitcoin futures is going to be one of the products that I know with NASDAQ we're a little bit more active with them. Like we're getting in and out maybe within 10 minutes, 20 minutes, 30 minutes, in and out the same day most of the time with the micro NASDAQ. With the Bitcoin future and the gold futures products, most of the time we're going to swing those positions. So whenever we hop back on here, most likely there'll be swing positions in.
Why is that?
Just to give more context. Just to give it's really difficult, I think, to hyperfixate on multiple markets at the same time, and I think you have to do that for very short-term trading. So doing that for NASDAQ, it's easier to do, but I think it's difficult to hyperfixate on 3 markets at the same time.
So it has nothing to do with the products themselves.
Nothing with the products themselves.
Interesting.
Nothing at all. If anything, kind of excited to get into the different types of personalities these futures products have to kind of offer. So.
XRP is an ETF, to answer your question, big deal. That would be XRPC.
XRP.
Yeah.
Pull that up.
XRPC.
XRPC. Also, we figured out the grouping section to where we can pull up multiple charts and lines.
We meant to mention this way sooner. Whoever was in chat that told us how to do the overlaid graphs or charts on TradingView, thank you. That is such a big thing. We both felt so stupid that we didn't know how to do that before, but we can do that now. We can juxtapose things. Yeah, that looks like a recent IPO there.
I'm swimming out here on the chart. I'm swimming looking for it. I'm like, it's over here somewhere. All right.
Bids for WBD can be the whole company or parts. Interesting.
We just got regular OG XRP over here.
Interesting.
Let's go. But yeah, no. We'll look up some of those other products. I know we got a couple minutes left.
Oh, there's /MXP as well. XRP futures.
Maybe we can do. Let's look at the indices side by side. Let's look at SPY. Let's look at QQQ, and let's look at IWM all on top of each other.
I like it.
And then maybe we can throw in VIX. We know that's inversely correlated.
Yeah.
Might as well.
Love it.
NQ, so we're going to go NQ here, right? NQ plus, I think it was. NQ plus ES, right? And then maybe plus, we'll go plus. No, this
wasn't it.
This wasn't it, right?
No, yeah, you got to put one on, and then you got to click the plus button next to the. Yeah.
So boom, plus.
There. Yeah. Now we're cooking.
We got a Bitcoin one now. Let's go. We're gonna do the indices, then we'll go to the crypto markets too. Sorry, Dan. I know Dan just clicked off. Dan just clicked off the segment, guys. NQ. There we go. If we can get it, there we go.
Yeah.
And then
no, you're doing the whole thing now. You got to go plus. Yeah.
There we go. ES. Let's get ES. And then let's get.
Did that go? I think I wanted to know which ES you wanted there.
I don't think it did. It's EWS.
Yeah.
There we go. So we got ES, we got NASDAQ. Let's get IWM in there. I know. That's the indice and then the.
That's because you're in futures.
Got the Russell there.
RT1. Yeah.
There we go. And slide the VIX in there, just so we can see that inverse correlation.
This is coming together. Look how beautiful this is.
Oh, yeah.
They have XRPM ETF? XRPM. Oh. 3% monthly income. Oh, so this is like an XRP dividend deal? An income stock for XRP? Very interesting. Oh, this IPO'd today. Huh. Very cool. That's a cool diversification asset, especially if you're a income investor. Look at that.
Look at that.
Look at that.
We got NASDAQ and you can kind of see the color codes over here to the right. We got NASDAQ in black, ES in blue. I think that's blue. And then we got RTY in green.
Yes.
Green.
You're doing good.
Yellow or orange is the VIX down here at the bottom. So we can kind of see that inverse correlation. Whenever the market sells off, we can see VIX literally spiking through these lows.
Yep.
So massive inverse correlation, massive fear pouring into the market. So this is actually really, if I was an econ teacher, this is something that I would be using the mess out of this software.
Oh, yeah.
If I was an econ teacher, no doubt.
Yeah. And anything finance, I mean, you can show, you could do a whole sector overlaid on top of each other. You could do the whole Mag 7. I mean, there's all types of ways you can.
This guy, Grumpy Mike.
He's
at the groupie section. Yeah.
The groupie section?
This guy.
Is there any use for crypto now? Only banks will maybe use stablecoins in the background. Yeah, I mean, it's give and take. We're not the right people to answer that question.
I think there is. I think I'm a big pro crypto.
Yeah, I mean, the decentralization is still, a bullish variable for it. I think people don't like centralized banks.
The thing is,
it'll always have that.
I don't think we'll get around corrupt actors in the government. And so with that being said, that's why I feel like crypto is going to squeeze its way out into success somehow, just because of those reasons why.
Yes, I'm inclined to agree. And I mean, especially if there were to be some, giant like black swan sort of event that really hurts the dollar or that really degrades people's trust in the U.S. government or whatever it may be. I think that they really start to have a place there, and especially in countries where there is no stable currency as well. I mean, that's a really easy way. You could just say, okay, you guys are going to use Bitcoin, and this is going to be a stable, more stable currency than whatever you got.
Yeah.
So I don't know. There's some applications. Like I said, I'm not the right person to answer.
We got to get Dan on here soon.
Shelly and Dan and Ryan could do a hell of a job answering that question.
We got to get them on here.
Yeah, absolutely.
Anyways, that being said, anything else top of mind before we wrap for the day?
No, I'm hungry. Gonna go get me some Dos Bros, the best Mexican food we get. In my opinion.
Fire.
Yeah,
I did squeeze that in before.
Excellent.
It was excellent.
That beef is so good. It's legit.
I had the chicken. It was fresh and clean. You know how you just feel fresh and clean after you eat?
Yeah.
So you know you had a good meal.
Absolutely.
That's how I hear the meals are out in Europe. I've been, but I hear you feel pretty good. Thank you. With that being said,
yes, it is true on the Europe thing as well. Yeah,
that's what I hear.
Feel
I haven't been, but
a lot lighter coming off that. Yeah, if you're in the Chicagoland area, check you out some Dos Bros. Don't be put off by the name. I would never have tried it on my own because of the name Dos Bros. Are you kidding me? You should be Dos Hermanos.
Right.
But
there we go.
It's amazing.
Amazing. You heard it here first. With that being said, big deal. 07, Rodrigo, big deal. Grumpy Mike, everybody else, thanks for taking the time to hang out with us today. Be sure to stay tuned for more segments coming on next, and we will catch you guys next time. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on tastytrade, named best online broker for options trading. Genius loves company.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading.
Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
We're back. It's still Tuesday, November 18th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Jamal Too Tall Chandler.
That I am.
We're not going to continue the conversation from the green room here. How are you today?
I'm great. I'm great, despite the sound of the music, because the sound of the music, I would say, actually displays how the market feels. But I'm great. I'm great. How you doing?
I was feeling really good about being long S&P, short Russell coming into today. Not so much now. Outside of that, Russell? I think it's a pretty. Yeah.
Really? I mean, like vol? I mean, it's short vol or short directionally?
Short directionally, long put spread. Put on yesterday's show. It was working out yesterday afternoon. It worked out a little bit this morning. Today, not so much. Weird day today, though. Bonds at the long end of the curve giving up their gains. Metals recovering. Energy still in its spin cycle. Natural gas down. Oil up. Dollar struggling. Tomorrow's expiration, though, Jamal, and ahead of it, we're seeing a little bit of vol expansion continue, not just in stocks, but basically everywhere. You can see it in bonds. You can see it in the metals and currencies. It's ubiquitous. What do you make of that?
You know what? I would caution anybody about taking too many strong opinions about right now, because it's just like you said, you look at all the different things that are happening. You look at how small caps are outpacing. You look what's going on with the broader equities. And I think a lot of it is just the jitters about the data we're about to hit. I mean, Wednesday is going to be huge, right? Like Wednesday and the rest of the week, I should say, are going to be big. Now, I don't know if that's going to lead to movements, but it's going to be big for a lot of opinions we're going to formulate going forward.
Well, we have the expiration tomorrow. We have, of course, the FOMC minutes tomorrow. We're going to have Nvidia earnings after hours. We'll have non-farm payrolls on Thursday morning. We're also going to have Walmart, right? Which, given the Home Depot earnings today, given how people have been reacting to Disney and the general state of consumer-facing equities right now, can't help but feel bad things.
Yeah, but I mean, I'm encouraged by. One of the things that you put out to our chat group, the idea of the how bearish the sentiment is overall from multiple places that you're hearing. Honestly, I think that means that maybe at some point a bottom is in store here. It's just a matter of how bad this data. Honestly, I don't think that doesn't even matter, to tell you the truth. This is one of those times where even if the data is bad, they'll find a way of using it however they want to use it. But I just think the sentiment overall is probably the most important. And we usually, when we see sentiment like really negative, I mean, it's for a reason, and it also means that not too far around the corner, we're bouncing.
I want to get your take on the shape of the volatility curve here, looking at the VIX term structure right now. This was clipped a few minutes before the show, so it may not be perfectly up to date. But this is a pretty flat term structure when you look out in time. The difference between the front month and the back month right now is less than 2 points. We're still, technically speaking, in a little bit of a contango here, although there is a kink appearing at the front of the curve now. The front month for December 19th expiry trading 6 cents higher than the January 16th expiry. This is not something that we've seen in recent months. That's, at least when I've been around, haven't seen it in recent months. Maybe that happened in the middle of October. I'd have to go back and check. But it feels like since the lows in April, we've had a market that's been in steady contango, and it's been a reliable part of being a dip buyer. That's somewhat changing now, Jamal. Does that warrant us to change how we approach this market?
Yeah, well, to answer your question, what do I think about the VIX term structure? It's kind of fascinating, right? I think people should keep in mind when you're looking at these VIX futures, for example, the DEES VIX future right now is using options, and they all use options in a 37 to 52-day window, right? Like from where they're standing. And so this one is using a lot of options that are incorporating the Fed meeting and the possible moves around that time period. When you look at the, for the November, I am saying that for the DEES, it's looking at 30 days beyond that, 37 to 52-day window currently, right? And so it's an area where there's going to be a lot of movement. It's incorporating, I think, the DEES meeting that we're going to have, which obviously is causing a lot of the changes there have caused a lot of consternation in the market more recently. But what it tells me is that it's going to be for DEES. It's not as the volatility is a little bit lower, as you can see, than it is in November expiration. So obviously there's a lot more near-term worries, even though we're going into expiration right now. As you can see, between now and the next 24 hours, which is essentially when this expires, there's a lot of fear heading into these events, heading into Nvidia earnings. Is it going to be all about the spend in AI, and are they able to continue to monetize what's going on? It's more about it doesn't encapsulate the jobs report, but we obviously know there's a lot of worries around that. So I think, and I think over the next 24 hours, you're going to see the VIX one day, you're going to see that sort of go a lot higher too. Right now it's trading around 18, and it's actually going up as the market has gone higher here. But again, it's because we're heading into Wednesday/Thursday where there's supposed to be a ton of data coming out, and I think markets are sort of nervous about that, and deservedly so. It's interesting trading in this landscape right now because it went really quickly to what is, how great AI is to how much are we spending on this, and it really changed fast, and I think that kind of fast changing narrative doesn't necessarily last too long.
Well, if there's an AI overhang today, semiconductors are the worst performing sector right now, down 1.3%. Discretionary is right there, down about 1.3. Tech down 1.1. Outside of that, most sector ETFs are up on the session. I count 19 of the 25 I track trading to the upside. And it's what's led to a pretty divergent roller coaster type of day today. There was a point earlier in the session, particularly if you were listening to Tony and Nick this morning, where stocks were really in the tank. S&P had hit a low sitting there at 65.94. We're currently nearly 80 points higher at 66.73 right now, Jamal, bouncing from an area where the lows back in October were carved out. The NASDAQ is among the loss leaders, with the semis being weighed down the most. You can see it's recovering above not the lows from last week, but the week prior. Nevertheless, it is a new monthly low. It has a new high on the board for IVR coming in at 42 right now. The high for today was 48. So a little bit of relaxation and volatility as the market has rebounded here. But these are also increasingly ugly charts. Yesterday was the first time that we closed below our 50-day moving average in the NASDAQ going back to late April. Same thing goes for the S&P 500. That's not necessarily the death knell in a longer-term uptrend. In fact, the 3, 6-month, 12-month eventualities thereafter historically have been positive, although the rate of change tends to slow down. You're not looking at like expansive double-digit growth thereafter. It's more like high single digits for 12 months out, if history is any guide. Is this a sign that maybe we are in a different mindset? We need to embrace a different mindset that we've been in, say, over the past 6 or 7 months, on top of what we're seeing with that VIX term structure?
Yeah, I mean, I think, we have some fears about what things are going to look like. But when I think about this, in a way, it takes me back to, if you go back to February, look at February. A lot of people have been focusing on how this is the last time we were below the 50-day moving average. It was April. But I look back at February. Remember when February, when we were on the rise, we were sort of treading water. We had just hit all-time highs. And then towards the end of February, things kind of got ugly for about 5 days in a row there. And it feels like kind of that's the same area that we are right now. Now, again, back then, the fears were about, it was about tariffs, right, back then. And it went it got a lot worse before things got a whole lot better. But it feels like we're around the same period of late February, and we're waiting for the next shoe to drop. And I'm just not sure how heavy that shoe is going to be. I'm not sure how much it's going to hurt. But I tend to feel like, things are generally going to be okay. We'll see, though. I don't know. It's been a strong rally here in the markets today. I feel like that tells you a lot. Like the fact that sentiment is kind of negative, but yet markets are finding a way to bounce out of it. I think the fears are just more about what's to come. The fears are more about what's to come, and without knowing anything. And again, without knowing anything, I think that's why we've seen volatility jump a little bit. That's usually what we see when we don't know anything. But I think as the details become more clear, markets are going to calm down some.
Yeah, well, we have Mohammed bin Salman in the White House right now, says will increase investment in U.S. to $1 trillion in AI.
Yeah, how about
that? That was up from the initial $6 billion planned on spend.
600 million, right? 600 billion. Excuse me.
600 billion. Yeah. So it is an up. Listen, that's a lot of money if it is indeed coming. It remains to be seen. We'll have to look at like the line project that they're building out there as perhaps how much follow through we actually see on these grand plans. And the answer to my mind would be like, let's curb our enthusiasm here. But if it's a spark plug for the market today, giving us a little bit of hope that the spice will continue to flow, Jamal. After all, we need money to feed this infinite AI machine right now as we do the data center build out. Mm-hmm. It's giving us a little bit of a move here off the lows. So we're back to the lows of last week for what it's worth. We're back to the lows of the weeks prior here in the NASDAQ at 24,780. The S&P 500 without that heavy tech weighting is also pulling up off the lows, down by 0.17% now. We're nearly 100 points off the low here today, 65.94, just about 13 more to go. The Russell, though, is our big winner, which really makes this all the more painful for me because I'm still sitting long MES and short the Russell, at least short deltas in Russell with the launching of yesterday's short put spread in RTY, because this looks like a pretty crummy chart, all things considered. I don't know if I've seen enough today to say that I'm wrong, because we are looking at momentum that seemingly is fading to the downside here. But what's your take on this whole Russell story right now? Forget the fact that it's the leader today. It's also one of the worst looking charts, probably the worst looking chart among the major equity indexes.
Yeah, it is. And I'm a little surprised that it's the leader. And I'm also surprised. Because I say that because most of the time in the recent trading sessions, I've noticed the Russell and the Dow essentially doing the same thing. And so it's clearly the one that's diverging from all the other three today, including the Dow, which is kind of confusing to me. So I think, to your point, I don't necessarily think you should call it quits on your trade. I don't necessarily know how much how much you can really ascertain from today's trading. Honestly, I don't, because has anything changed fundamentally from yesterday to today? And we feel like things are going to fundamentally change between tomorrow and Thursday. So I don't necessarily know how much stock I put in this move today, especially given that it's the leader and the other three are doing something different.
One thing that I saw interesting, I'm going to just pull this up. Let me pull this chart up here. This is through yesterday. It's going to pop up on the screen. Sure is. Comes from Goldman Sachs. This is as of yesterday's close, Jamal. It's about net trading flow overall over the past 5 days, okay? And over the past 20 days, there has been net inflows to U.S. equities. What's been going on has been there's a churn in exposure. And where has some of that churn coming from? Information technology, both over the past week and the past month. 5 days being 5 trading days in a week, times 4 weeks, a month, 20 days. Okay. So this is the story of what's going on right now, and perhaps helps explain why the Russell is above water while our NASDAQ is on the downside. Because of the valuation buildup that occurred in September and October, traders have taken this opportunity in November not to get out of the stock market, but to change their exposure within. And so that could be something that ultimately helps keep this market afloat. The other thing that's helping keep this market afloat is that when we think about the expansion of vol and the volume that we're seeing in the options market, one might surmise that instead of selling their Nvidia, their Google, their Apple positions, traders are just buying puts and buying that downside protection right now in an effort to hedge off this concern that really it seems like all of us have. And I got a push notification today. AI valuation worries extended to 4th day for stocks.
Yeah.
So it's commonplace. I have my other concerns worried here, but when we take a look at this market ahead of Nvidia earnings and VIX tomorrow, it feels like that's the ball game for this week. Right? Like, forget whatever's going on with Saudi Arabia. If Nvidia is a bust tomorrow, today's lows might feel quaint by the time we go home on Friday.
I know, and I wonder if it's going to be a bust. I don't imagine that they're going to miss on earnings. I think, again, the trend that I've noticed during this earnings cycle with the Mag 7 in particular and some of the adjacent names of the AMDs, et cetera, as well, is that, outside of, I think it was Amazon and Google, most of them, they had like a one-time tax situation with Netflix or whatever, which again is not really Mag 7, but it might as well be. But most of them, even if they performed well even if they did well on earnings, they didn't necessarily perform well after earnings, right? Stock moves. Because again, I love to do a lot of calendar call spreads, and I do them in the big names, and most of them fell to the downside on earnings. Apple, I think, initially went up but fell to the downside. Obviously, Microsoft fell to the downside and keeps on falling to the downside. Same thing with Meta. And Tesla did the same type thing. So it's been a lot of that on earnings for a lot of these names. And I wonder if Nvidia is going to be the same situation, or has this recent dip in the market created opportunity where people are going to step in and want to get long?
They call Abe Froman the sausage king of Chicago. I hear that they call Jamal Chandler the calendar call spread king of Chicago.
It's true. Yes.
It's just a rumor.
Yes,
just a rumor that I hear out there. Yeah,
it's true. I could also be the sausage king, but we'll talk about that another time.
That's for engineering the trade when it comes back on. Okay, so 6,600 more or less is the line in the sand. It's where the market peaked out in August. It's where the market caught itself in early October. Today's lows are around there. If I was really, really wanting to get bared up, like I've been chasing this to the downside, I sold it above 6,900. If you were able to take some profit today, it seems like a reasonable place to have taken profit. As a momentum first person, Jamal, from my preference in terms of trading on the technical side of things, the slope of the 5-day moving average is still negative, right? The slope of the 1 month moving average has now turned negative. If another session like this, we're talking about the slope of the 50-day moving average turning negative, because yesterday it was 67.29 and now it's 67.27. So the rate of change there is decelerating. I can see it in my momentum indicators. MACD just dipped below its signal line for the first day. Stochastics are trending towards oversold. This would be catching a falling knife if I wanted to get long here. So while that is a nice looking candlestick right now, there's also a lot of damage that's been done to the chart. So vol expansion aside, the fact that we did break below the 50 on a closing basis for the first time in going in the S&P here, we're talking about really in April. NASDAQ, similar story. Why step in ahead of Nvidia earnings, I guess is the question, when this chart doesn't look like it's something that's exactly reaching to the upside right now?
Because they're as low as they'll ever be, Chris. No, I honestly, that's not the real answer. I mean, why step in? I mean, first of all, I think those who are questioning that haven't stepped in yet, and I don't blame them. I think the only real answer to why step in now ahead of earnings is because nobody knows when things are going to bounce. I think that's why you use time to your advantage. You try to go far enough out. I mean, today I just did. It's a trade I've done a couple of times recently, and I put it on again. But this time I went out to the December 1st expiration. I use SPX to do it, but I sold the 6600 put along the 6590 put. So basically sold that put spread, right, to finance a long call spread. And again, all in expiration, and the call spread is the 67.75, 67.85, and I collected a credit to do that, a $1.50 credit to do that. And so, again, to answer your question, why step in here? I mean, I don't know how all this news could come out negative, and the market could actually perceive it in the positive way, right? Like we've seen that so many different times. So in this case, I'm just trying to give myself some time. I'm actually using December, and just in case November ends up staying choppy or even a little bit negative, right? Maybe this ends up reversing itself sometime in the next, when we start the next month. But it's a smaller, credit, basically collecting a credit to be long that call spread. And I know my risk is basically like 1-to-1 in a way. I mean, since I collected a $1.50, this thing costs $850, and that's the most I'm going to lose, right? Potential chance to make $1,000 and change. But I'm doing it here because I don't know when we bounce. I don't know how news is going to be perceived going forward. Like we just said, I mean, 2 weeks ago, there was all of the talk of as many people as like to joke about the money moving between all these different companies that are AI related, right? I even did something on it in a short, but Nvidia, OpenAI, we've all seen how all the money is moving around, and that didn't seem to be an issue until it was, and that's just kind of how the market works. So when is that not going to be a big deal again? I don't know. Maybe it happens after Nvidia earnings. Maybe Nvidia earnings exposes it more and we go lower. But I think you got to find small ways to sort of capitalize on the bounce back, because we've seen how quickly this market can erase losses.
It can erase losses quickly, and it's one of the reasons why the next 2 days matter so much, because if you look at SPX or ES, for the sake of this conversation, we'll go over to that December expiry. You can see here over the next few sessions, we have this little kink in the volatility curve where once we get through this week, next week's a holiday week, but things really do subside. You're not even seeing that much consternation around the December 10th expiries, maybe by the end of that week through the 12th, because that's the week of the Fed meeting. But even so, you're kind of just then cycling back down. So you get through Nvidia tomorrow, non-farm payrolls isn't a total bust. It's weak because you want the rate cut, but not so weak that it appears the Fed's late. It's a very fine line. I don't know what the number is. It's more of a feel type of situation, Jamal, the morning of. But you could see how if you can survive the next few days, this is a market that could pick itself back up, right? It could. It's not over yet. Now, if we're down near 6,600 again, I mean, first blush, I didn't pick it up there this morning because I already have the exposure. But if I didn't, I would have looked to buy a little bit more. I'm content sitting here with what I have today because it's been an absolute hellish slinky. And I don't see a reason to double down. But that's the momentum person in me saying, like, why would I buy when everything here says the tide's going out, not coming in? I have the Russell exposure. I have the NASDAQ. Really just, not there quite yet, but you could almost make a case when you're down closer to 24,000, you have some lows in that area where today swing high becomes support. That's what had happened in October. We dip into that area again, people happy to buy the dip. This could be a lot of chop for the next few weeks. So you mentioned that earlier. I could see the bulls and bears fighting it out now. Bears are a little bit more incentivized, but the bulls still have to run into the teeth of this valuation argument, which could keep stocks lifting, but the tech-heavy stuff weighed down. And then my Russell position's got a real problem if sentiment changes.
Look, on the plus side, we needed this, Chris. I mean, look at some of these major these charts of these major names we're talking about, or you could just look at the NASDAQ. Like we did need some kind of pullback, and this has been an orderly pullback. And again, I've used pullback on purpose, not sell off. It's been orderly pullback, maybe about 1% here and there. We need this, man. I mean, let's be honest, because things have really been pretty frothy when everybody talks about what's going on with AI and the spend. And again, as I mentioned, I mean, there's still a lot of concern about all of this money that's essentially being passed around between the different companies. That's essentially just pushing debt further and further out. You're hearing more about the CDS potential issues with Oracle and or CoreWeave. I mean, these are just not good things you want to hear right now when these are the names that are controlling the market. So I think we needed this pullback. I think it's a good situation to have in the market right now. And I think the worst thing that you can do is to give yourself a little bit duration and pick up some long delta here, because when the market goes, it goes. We see it so many different times, and I think I think it's Catterday Knight mentioned it actually in the chat. It's nice to buy low if this is a low, but it's a heck of a lot harder to buy higher highs. I mean, it's a whole lot harder.
Oh, I love buying higher highs. It's
I know you do. You really do. You're at home there, okay? Most of us are not, Chris.
Yeah, I see 52-week highs. I go, oh, what am I missing out on?
Yeah, you're like a cat in that way.
Years.
You're like a cat in that way. Hey, what's going on over there? Hey, let me see what's happening.
Look, it's been a bull market for 3 years, right? Or you want to call it 2. October 23, we had a little bit of a pullback. So whether that's alpha or just me being levered to beta, who cares? I say who cares, because it's working for now.
I mean, it's good to see these Microsofts and Metas of the world kind of pull back some, and people are like, it's just funny too. Like, nobody wants to touch it, right? People trip over themselves when it was 700 on the way to 800. Now nobody's interested at this level.
Yeah, I'm not really interested at this level. That looks like a double top, Jamal. Microsoft, that doesn't look too hot.
Where do you think Microsoft's going? You think it's going back down to 400? Is that what you think? You think it's going to 300? Microsoft?
400. Yeah, why not? Let's fill the gap. We haven't filled this gap yet. Let's go back to 395.26.
Well, it is going to be, if that happens, it'll be a very tough market. I mean, we'll be back to 6,000 before you know it. And I promise you, nobody's making money in that kind of market. We've seen that. We saw 2022. That was ugly. That was a hard market to trade.
Maybe. Google seems fine today, for what it's worth. Ever since Uncle Warren stepped in, easy week for them.
I know. Kind of interesting that he chose to step in on that one versus any others.
Yeah. And it's in his last letter ever. He's like, by the way, I'm betting on Google. Nice life. See ya.
Yeah. Yeah.
Interesting parting thoughts. Let's go over to bonds here, which have been losing their gains over the course of the day. I suppose the rebound in risk appetite shouldn't surprise people, because if you have this resuscitation in the stock market, people abandon some of the hedges or safe haven trades they put on. So you have notes, for example, which popped up into that 113 area again, 113.02, and they have since faded off. You go over to ZB, they were up above 117. They have since faded off a little bit. The high there was 117 and 8 ticks. But like everything else, the volatility continues to creep up now in the bond market as well. That's usually a cause for concern where we sit, Jamal. You don't want to see the thing that's supposed to be the safe haven asset become somewhat destabilized. It's not like gold. It's not like, okay. So what's your take here on bonds? You and I only have the pleasure of talking once a week now, so perhaps things have changed for you since last Tuesday, even if the prices really haven't done all that much.
What did I say last Tuesday? I don't really understand what's going on. I still don't really understand what's going on in bonds right now. And I think that's because, again, what happens with the Fed doesn't necessarily directly determine what goes on with ZN and ZB, right? 10 years and 30 years. But there is some confusion right now overall in the bond space. And that is part of it, that situation with the Fed. Are they going to raise? How much that's changed? I think that's what we're seeing. Obviously, the data, too. I mean, if there's one thing that moves off of the data, it's the bonds, right? And so we haven't really had much data for the bonds to sort of digest. And I think that's kind of what you're seeing here, Chris. Like, bonds are sort of directionless right now because of all that's going on at that level. So that's kind of what I still see. I don't fully understand the action here. But you're right, though. Volatility is creeping up a little bit here. And so I think that's something to keep an eye on. Maybe this thing will give us a trade sooner or later.
I'm still leaning long here in notes in with bonds, just for the safety concerns about what could be happening in the market. Because if the AI story falls apart a little bit and the spending pulls back in, outside of the AI spend, there's a very cogent argument to be made that the data that's coming will showcase an economy, broadly speaking, that's slowing down. And private sector trackers, I retweeted one yesterday from the Southern Business conglomerate, and they said that their metrics for activity in the South, which has been the growth engine of the US, are the worst that they have in their data series. Going back to the 1980s, they're at levels consistent with where we've been in deep recessions. And the only thing that they surmised was, well, we don't track what's happening in the Midwest and the West and the Northeast, but considering we have been the strongest region around the country for the past little bit, if we're having problems, you can almost guarantee that everyone else is having problems right now. So I'm leaning into the idea that, hey, let's say the tariffs come off, Jamal. Tariffs initially are inflationary. The Fed's been telling this all year. Prices are on their prescribed path. You get a one-time price adjustment. They keep going up. The Fed cares more about the other side of the equation, the decline in real output longer term. So what if we're dealing with the employment fallout of the tariffs themselves, which again, through the manufacturing data, the industrial data that we see, payrolls in those sectors have fallen since the tariffs were first imposed in April. But then the tariffs come off. They're coming off for food. So we have the lower jobs. We lose the tariff impulse. So maybe inflation takes a step down a little bit in the short term. But growth is weaker. Inflation's weaker. That's something that typically keeps bond yields pinned lower. So I'm very comfortable. 112 in notes, 116 in bonds, ZN, ZB respectively. If we're north of those levels, I'm going to stay bullish. Just need the duration on our side to express those views.
I mean, and essentially, it's somewhat of a bet on fear, right? Of how bad the economy is going to end up being, right? I mean, that's essentially your bet with the long bond play, I assume, right?
In part, yeah. The data as it comes out from the government reopening initially is not going to be good. There could be reacceleration, and there's actually, again, what's going on in November is different than what happened in September and especially October. But there are folks out there who are saying, don't get too wrapped up in the data weakness that's forthcoming because there's already signs of reacceleration in November. This is more of like, can notes and bonds make their way back to the October highs before December 31st? I would make a bet that they can. I would like to just take that as a trade, get out, look for another pullback, and then try to reestablish a new long. So I think we're still going to slinky, but I think we're in the trough here and getting ready for our next, wave higher, so to speak.
And this was from, I know that one data you were sort of cited was from the Southern conglomerate. I have a really big question. I'm curious. I mean, do you think that they drink mint juleps, or do you think that they drink whiskey? I mean, which one?
Sweet
teas. Curious. Sweet teas.
Yeah, sweet teas down
man.
there.
The sweet tea has got something in it. I grew up down south.
Yeah, I did not grow up down south, but I'm sure people have ascertained that.
You grew up in the
now.
opposite of down south, Chris.
No. Let me find this report. This is actually something that is. Oh, this guy's tweeted so many freaking things since yesterday when he first published this.
I hate when they do that.
Okay, Southern Business and Development. I'm just going to pull this up.
I like
here.
Southern Conglomerate better. It sounds
Southern
more.
Business.
Sounds more, backroomish.
Project activity in the South so far in 2025 has been so disastrous that totals are on track to mark the worst SB&D 100 in its 31-year history by a significant margin. In this 31-year history, didn't we have COVID and the global financial crisis
yeah, right.
and the recession after 9/11?
Yeah, I don't know.
Yeah.
No,
this is the lowest point since 1994, and you could see. So if we, the South, are sucking wind by dearth of deals, which we are according to the data, then the rest of the U.S. is most likely barely breathing a new job creation. So goes the South, so goes the nation, typically in both good and bad years. I found that to be pretty compelling. And that's even with them noting that they've captured all the big data center deals this year. So,
I mean, I think it is compelling, and again, it speaks to what we're going a little bit right now with how the market is feeling. The whether you believe in a greed and fear index, it shows you that traders are generally nervous, and all you have to do is look at today's VIX to know that even more. I mean, we got as high as 25. Like that's nearly 1.5% moves in either direction, and I'm sure we've probably come close to that just with the trading range that we've done today. I mean, so that just tells you the kind of market that we're in right now. There's a little bit of nerves, and I understand your bond trade for sure. I mean, I think that's probably the best way to play it given the current sentiment of the market right now, especially before data's come out. As a matter of fact, I'm actually a little surprised that this is not moving up into the data, the bonds, and maybe that starts tomorrow, but you would think that there's going to be a little bit more angst out there heading into the situations that we're going to see for the rest of the week.
Yeah, I mean, we have this rolling, ADP employment weekly change now that's coming out. It's on a 4-week basis. For the week ended October 31st, they saw the economy lose 2.5 thousand jobs. The prior rolling 4-week was 11.25 thousand jobs. So this is what I said, October was rough, but as you look into November, maybe those job losses turn to a little bit more positive, and then all of a sudden, is that something that the market wants to see right now? Does the market want good data? They want the Fed to give us the cuts. So maybe this all works out, Jamal, where we get enough bad data for the Fed to cut, and then it starts getting better again, and people go, oh, the economy is reflating. And then stocks just go back up and yada, yada, yada.
It sounds like you just solved it.
Did I? Maybe. In that case, I'm definitely in the wrong positions right now. Several of those wrong positions seemingly remain gold and silver, which at this juncture, how much pain are they causing today? Oh, a little bit less. What a delight. Up by 0.04%. Yeah, this morning was looking a little rough, but now we're back above 40.55. We kind of caught ourselves in that zone. I was just taking a look yesterday at potentially cutting my losses here. And while I was making that decision, I said, it looks like we're going to bounce around. To my absolute delight, when I came back online this morning, gave my son a bottle around 6:30 in the morning, and I saw that little glint of hope that a bull likes to see when they're stuck in a long little morning star candlestick cluster here on the 4-hour time frame, right at where the market should theoretically turn. So I said, sometimes these rules are more suggestions than laws. Yeah. So I'm sticking with it. I'm not convinced that we're out of the woods yet, because the momentum clearly has turned over here, and we're just starting to break the downtrends of some of these shorter term moving averages. But back above 40.55, this is a place where it still feels okay to be thinking about some long exposure. This is maybe we're reclaiming, dare I say we're reclaiming the 1-month moving average today, which if we were to do so, that comes in here at 40.68, and we're currently $1.50 off that.
Look, by the way that I'm looking at things and the way I started talking about the show, right? It started off at the top of the show talking about how it's hard to really glean any bits of information from the last 2 days because there's a lot coming down the pipeline that we know of. And I think the market is, despite all the movement that we've seen the last 2 days, I mean, we're sort of, borderline running in place in a way. I know there's been a lot of movement. I know there's been sell-off in some of the big names that we pay attention to, the Mag 7 names. There's been some rotation into the healthcares a little bit and consumer, staple type names more recently. But I just think that's some of the rotation that we're seeing ahead of what's expected to be a big shift in turn. Eventually we're setting up for the rest of the year here, right? I mean, when we get jobs reports, we start getting some of the inflation data, we get what the Fed thinks, we're going to get what the actual Fed does, which again is still up for grabs, but the data is going to move towards that. I think right now we're just it's hard to make any real, we could come in and gold could end up being up $200 from here over the next couple of trading sessions after what happens. We just really don't know. So I'm saying that because I don't necessarily think you should get out of whatever position you believe in right now, especially if you got some duration to it. I think the harder thing is trying to do some weeklies right now. I think that's the hardest place to trade in right now, as usually is when things are uncertain, because you could be trading one way and completely get lucky or unlucky based on who knows what. So I think giving yourself a little bit of duration is, we always talk about that, but now it's more important than ever because things are weird right now, and not everything is making sense.
Not everything is making sense. I'm just going to clean up this chart a little bit here, Jamal. Silver prices, very much like their golden counterpart, finding some interest around that 1 month moving average. You know, the past several weeks, this area between the 21 and the 50, just like it's been effectively since the April lows, has been a catch point for silver. And while that has not worked out in the equity markets, because it's a very similar type of setup in that regard for momentum, it is holding up here thus far in the metals. So SIZ5 back to 52 right now after dropping to a fresh weekly low here today. You're seeing that whole cadence going back to that 4-hour time frame where you're getting these former highs that were carved out in late October, just like in gold, forming up as support now. So maybe this little bit of a correction is over in the metals. It's where I'm leaning. So I am crossing my fingers and hoping that the longer term tailwinds that have carried us here this year continue to carry us, because what has exactly changed, Jamal? Right? We're going to do $2,000 stimulus checks.
God.
Like, is that okay? Sure. Let's do that. But like, what's the mechanical process of that? If we're not going to treat it as a joke, that's about $600 billion of spending. The tariffs themselves are bringing around $300 billion a year. So that means we're going to have to finance new debt in order to send out stimulus checks to people in this country. If that were to legitimately occur, do we think sending out $600 billion is going to be inflationary or disinflationary?
Inflationary.
I would take the gold and silver side of things. That's the world we're going into. And while I don't think it's reasonable or likely to happen, it just shows like the impulses. What's the impulse of the federal government right now? Is it for austerity or is it for spending? What's the impulse of monetary right now? Is it for contraction or expansion? It's looser, it's expansion. And the government's clearly trying to express to the market that it understands the economy doesn't have enough aggregate demand in it right now, and it wants to do more to help reinflate that. So some old-fashioned Keynesianism, Jamal. Gold, silver.
The one
still
thing
going to sit on the long side.
The one thing I can't reconcile is how gold is, and gold and equities have been kind of in lockstep a little bit at times over the last couple of weeks. That hasn't really made much sense to me. The divergence of gold and the dollar, not been as much divergent. It's been hot and cold. Really, it has. I really don't understand those relationships as much anymore as I did earlier in the year. It's been a lot of changes, I think, with gold, and so I don't know how much those mean anymore. I really don't. I just haven't been able to sort of reconcile those, but. I think that's one of the more interesting things to watch, right? Because for a while there, I've noticed, you can drag Bitcoin in this conversation too. Bitcoin, gold, and S&P 500 would do the same thing pretty much every day for like the last, I don't know, a week, 2 weeks. And I just haven't been able to understand it. Now, I will say over the last 2 trading sessions, I guess it's been varying. But again, I think the last 2 trading sessions are not something. I think you actually can take those in a vacuum. I think they're very different. But today and yesterday are going to be very different than what we see for the rest of the weekend going forward. But it's been weird to see that relationship differ between equities and gold and silver.
Yeah, I'd like to take my P&L in a vacuum. Unfortunately, my brain doesn't work that way. So the last 2 days can't get wiped away. But this is the benefit of duration, right? You ride this out. Do we have a line in the sand in the SIZ5 contract? I think 49. We can say it's not 50, but it's 49 here. That's a pretty nice bounce today. And we're sitting near session highs right now. Not what I had on my bingo card earlier. Copper prices, this is something likewise that continues to work, Jamal. I've been trading this sideways. It's a decent bit of volatility here in the market. You just have to hop on over to CPER, 44.8. So last week when the short iron condor trade was put on, the fact that we've gone nowhere and vol continues to come out of the market, if you're in this with me or doing something similar, that's what you want to see. So in terms of maintaining the position, there's no reason to change tact right now, as far as I'm concerned. And in general, I think it's these type of trades where it's that very typical tasty. It's kind of like a barbell approach. Like I have a bunch of things on that are just directionally neutral. sell the volatility 45 and 21 out. And if those continue to work, it helps feed and finance the more exploratory trades that I like to do in the metals that have a bit more convexity to them. So things like this are important building blocks, of a portfolio, even if it's a relatively uninteresting market on a day like today.
Yeah, that's the way it should be done. Speaking of copper, I have a calendar call spread in there, which I feel like a lot of my portfolio is right now.
King of Chicago.
Yeah. It's an easy way, right? It's an easy way to finance longs and give it some time and duration because, again, you got to work through this time period that we're dealing with right now where seemingly a lot of stuff doesn't make sense. I'm long the 6 calendar call spread, so short the D's 23 options, long the Jan 27 70-day options. See how it plays out.
Let's jump down to the energy sector here, Jamal, with, let's do a brief reprieve real quick over into the world of cryptocurrency, because we talk about sentiment being so bad today. And then all of a sudden you take a look over at crypto and it is starting to climb a little bit more. Bitcoin briefly dropped below that. Bitcoin briefly dropped below our 90,000 level overnight. Where is what I am looking for? There you are. Okay. This comes from CMC. They have a fear and greed gauge that they publish as well for crypto. I would point out that crypto, greed, and fear, we are now at the lows in sentiment that we have back in April. This comes via Nicola Duke over on Twitter, who's a mutual. Extreme fear right now. Extreme fear in crypto, extreme fear in stocks per the Unusual Whales, one of Tasty's partners. The Unusual Whale Sentiment Index, you see it in CNN, fear and greed. And yet on a day when the stock market's been in a roller coaster, investors are more than happy to pick up some crypto exposure here. Is this a signal? Is this the canary in the coal mine that bear machinations shouldn't be overstated right now?
I think you could say that. And look, crypto and particularly Bitcoin and the markets have been moving together in lockstep for quite a while. As a matter of fact, crypto started its downturn just a little bit earlier, I think the beginning of October. But nevertheless, I mean, they've mostly been moving together. The one thing I'll say about crypto during this downturn, and again, this is more of a downturn than anything. It's not like a crypto winter, as other people have been mentioning, I think, because that doesn't really make sense. I mean, crypto winter, you're talking 50+% or more. It's been a 25% downturn from the highs here. And as that has happened, there really hasn't been the typical bad news that we usually hear when crypto is struggling the way that it is. There's some kind of firm that is blown up or wallets are wrong on some exchange or, FTX or something like that. That there really isn't any of that story. I think it's just following the broader weakness in the market just to a higher degree because it's a little bit more of a volatile asset, even though there's been more of adoption. So I'm not that surprised that people are going to start to try and pick up some crypto here in these levels. I mean, it only makes sense because, again, there really isn't any strong negative story. It's just sentiment.
It is just sentiment. And for the sake of this conversation this morning, I sent Nick this message here, this might be the Bitcoin washout, recent pullback from the high in line with the correction earlier this year. I only blow this up now because the correction, that's really difficult to see. But it was 31% or so from January highs into the April low. And today we hit the 30% mark.
Yeah.
So think if that's what a Bitcoin correction is, 30%, and you say winter is at 50, if you don't think we're going into winter, this is a place where longer term hodlers may be interested in buying. And so I find it fascinating on a day when you're seeing these extreme fear readings tick up in all these different, sentiment trackers. Ethereum's up 5% in the futures market. That's an interesting thing to occur when you're in extreme fear. It also goes to show how the positioning is in the short term, where people have been liquidating and perhaps even driving this to the downside. So any bit of good news can spark a turnaround. But the purpose of that was to talk about the general state of things in the market. We are going to go back to oil and nat gas here because we have 8 minutes left and we still have some boxes to tick on Futures Power Hour.
Hey, listen, if the job market is terrible and people start losing jobs, I mean, they're going to look for quick alpha ways with those $2,000 stimmy checks that they're going to get, and it's going to go straight into crypto. Let me tell you.
Oh, my God. We're going to have to start talking about GameStop again, aren't we? Oh, my God. An AMC. Oh.
I know.
All right. Well, we know what to do. Not our first rodeo. Speaking of which, not our first rodeo for crude oil, which is starting to perk up a little bit here, Jamal. Volatility creeping up at a high of 28.6 in the IVR today. If you're not paying attention to what's happening off the coast of South America, you should. We've moved our largest carrier strike group into the region. So I don't go to the Turks and Caicos or Aruba or Curacao anytime soon, because you might have a light show in the air overhead, and getting off those islands could be difficult. That is a U.S. attack on Venezuela can't be ruled out. I would highly suggest we keep an eye on that, just like we kept an eye on Diego Garcia in the Indian Ocean in the spring to take a gander at what was happening with a U.S. potential strike on Iran. And how did that work out? So here at 60.78, there's really much ado about nothing in terms of adjusting trades. The short iron condor near 60, 61 has been the bread and butter since late June. There's no reason to stop buttering that bread, I guess. But we have to keep an eye that there is potential for some outsized move to the upside, which is why yesterday we were discussing, and unfortunately for me, I don't think it was actually filled. It was not filled yesterday. That's a bummer. Canceled? Yeah, canceled. We were looking at the long 63.64 call spread, long 63.64 call spread for the end of the week, which it's, it was going to cost $30 yesterday, max loss. It's still at a max loss of $30 today. Is this reasonable if something happens geopolitically? I think so. It's the one thing I want to keep in my pocket. If there is a vol expansion for geopolitics, I'm happy to risk $30 to make 970 if something goes sideways because of Trump and Venezuela. Hopefully this gets filled now. I could always change my pricing to get the fill right. I could always take a bigger loss there and reduce my profit potential. But I'm going to do this now for the foreseeable future in the oil market. On Friday, if this is at 0 DTE and we have not done anything with Venezuela yet, I'm going to go out and I'm going to look out to the 10 DTE, and I'm going to do the same exact thing, long the 63, short the 64. It's not quite the same profit profile, but keeping something in the back pocket for the eventuality of what looks like to be a U.S. attack on Venezuela. This is a very small risk. This is as cheap as the insurance can get, as far as I'm concerned. And then it just goes to why only 63 or 64, why not reach even further back than that, Jamal? Venezuela is about 1 million barrels per day. When you think about Israel, Iran, and the Strait of Hormuz potentially being mined and then closed, that's 20 million barrels per day. So looking at a $7, $8, $9 rally around Iran-Israel speculation, you're talking about potential impact that is much more constrained. So I wouldn't get jazzed up about oil going back to 75 or 80 if the U.S. attacks Venezuela, but getting a bit of a bounce and a vol expansion back into those maybe September highs, totally feasible in my worldview. So I would like to have one of those chips in my pocket. And hopefully the market gives me the chip, because this is day 2 of trying to get filled on it.
Nice. Yeah, the only thing I've done in crude recently is played a couple of bounces using MCL. Did it on, after the dip on the 6th of this month, and then also the dip on the 12th of this month when it breached 59 both times. But outside of that, the vol really wasn't there, but it looks like it started to creep back in. And again, I think this is something we're seeing across the board, right? In a lot of different asset classes, vol creeping back into the markets because of these next couple of days that are coming up. So it looks like you have an opportunity to do another iron condor if you want. And that trade has worked a lot throughout this year.
Natural gas is back to break even today after a bigger dip, and perhaps a sign of the times, Jamal. We talk about another market where you're finding former resistance become support. I'm just going to mark off some of the highs that we had here from the start of August onwards. It's where the market peaked in early October, and it's today where this market is once again finding a bounce. You could see it here at the start of the month that we really didn't want to creep back below 4.4 in NG, and we don't do it again today. As far as I'm concerned, at 38 DTE, we were able to get filled on what I found to be a very appealing short iron condor trade, which in today's market, if you were looking at the short 5.8, 5.9 on the call spread and the 3.938 on the put spread, it's still 2.5 to 1, a little bit better than that, in fact, closer to 2 to 1 on the risk to reward at right near that 60% probability of profit. And given the strikes, the trade that's effectively being made is that we're not going to break the lows that we had in October. We're not going to break the highs that we had in March. And if the market wants to give us the opportunity to take that at a near 2 to 1, that we won't break the yearly highs or lows before we have to get out at 21 DTE, Sign me up. Sounds reasonable. And it's totally uncorrelated to Nvidia earnings or anything else happening in the market on a day like today.
Yeah, this is one where we're similar, but just a little bit different. I actually just have the strangle. This is the second strangle that I've had in that gas in the last couple of months. I have the 510 390. Initially, I had the 360 put, but I just rolled it down into the weakness yesterday. And a lot of it is the same reason. Like you said, I hope it doesn't breach not only highs from March, but even highs going back to just June. I hope it doesn't breach 5, and I hope it doesn't breach 390 to the downside, which is the lower end for this particular contract. So it's one of my bigger positions, and I just think it's a good one given where volatility is. I like it. I'm keeping it.
You and I are in the same boat there, so hopefully it works out good for both of us this time, as opposed to some of the last times that you and I have been in the natural gas ship together. Yeah. Which, it's natural gas. Euro, weaker today. Dollar, not having a great session. The tide turning against it as the day goes on. But of note, the Japanese yen is now giving up its gains. So we talk about a rebound in risk appetite here over the course of the session. You can't really get too worked up if you're seeing the dollar fade, the yen weaken the most, stocks rebound. Crypto is on the up and up. The yen continues to melt. And I think actually this is worthy of conversation here because we've started to get some murmurs out of the Japanese government. So I do want to go over to the Tasty FX tab here, even though this is a spot market. I think it's worth just putting this into context of where the spot market is because that's what the government ultimately looks at. If we start to think about the spot market moving into the January highs, starting to scale up into 158, the sensitivity for Japanese yen intervention is once again going to increase. This was the whole rationale that we had all of the first half of last year. As you approach 160, intervention starts to increase. And then we gave up on the trade, Jamal, looking long the other way. And then, of course, for me, that was painful because I watched the trade I had planned all year long work. I just wasn't in it. And the yen had that enormous snapback over the next several weeks. So while I am of the mindset still, because I'm still trading this position-wise, like I still have my long yen put spread here, okay, that's at 52 DTE. I'm much more inclined to think that if we start to see substantial more weakness, we're not talking about much more weakness, but if we start to head into that like 0064 area, we are beginning to pick up pennies in front of a steamroller as it pertains to getting short 6J or having short deltas in 6J. And I'd much rather go the opposite direction and start to think about what an intervention trade could look like. High convexity, out of the money, only executing in low vol environments so that it's a cheap view that could see a quick expansion if and when it comes. And we're not giving up on it this time. So Jamal, you and I got to get off the air here because there's more to do on Tasty Live. Dr. J coming up next. Quickly for the calendar tomorrow, though, before we get going, more data due out, perhaps, but the FOMC meeting minutes, those are indeed coming out. We'll see what those Fed speakers think about a potential rate cut in December. The ones that we've heard from this week that are voting members seem to be inclined to cut rates for what it's worth, Jamal. And of course, Nvidia earnings after hours. So don't forget that. You and I will be back in a little bit. I'll see everyone at the last call today and then overtime. So good luck trading. Until then, though, grab a quick coffee, grab a bagel. I don't know. What time is it? People eat bagels in Chicago in the noon.
They do.
Yeah, right. All day long.
All the time.
And Tasty Life will be back after a quick break.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
So I've been trading for about 5 years, maybe 8 to 5 years, and I got in the options world because I wasn't making enough just holding long equity. You know, there's not a lot of strategy. It's just sort of like buy it and then pray it goes up. I found tastylive from my friend, and I started looking at the YouTube videos. My favorite part about it was just that there was math, there was probability, it was something you could consistently rely on. Once someone gets the right information, which they provide on tastylive, they can really change their financial situation for the better. Consistently, not, oh, I bought a stock and it went way up one time, but how can you do it consistently, over and over? And with tastylive, I was able to do that.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast, man. Welcome to the Tuesday edition of what it is that we are trying to do. You made it to the show. I made it to the show. It is an exciting moment for all of us that are part of what it is we are trying to do. So if you're watching over on the Tasty Live Network, that's amazing. But it would actually be more amazing if you popped on over to YouTube and joined the discussion in real time so you can communicate with your brethren who are also watching the program. You can celebrate if you're a bear. You can commiserate if you are a bull. But it is, of course, a good time had by most. And so, Josh, go ahead and bring us into the market. Man, do we still have a market? It's not looking too good out there, guys. It's not looking too good out there at all. We got EMS&Ps down 26. NASDAQ risk-free instrument, extremely high-risk product, down 160 on the day. You got the boomers down 330. And then you've got the Russell 2000 futures index up 13 on the day. You got bonds down, you got notes up, you got oil up, you got gold up a couple of points, man. You got the shifties up about 18 cents. You got the video feed appears to have improved. And so big thank you to the production team for helping me kind of sort that guy out, which of course it could all come crashing down in the next 10 or 15 minutes. But for right now, it does indeed look to be okay. And so if you have a question for me, I would drop it in the chat box and I'll try to get to as many as I can right around the halfway mark of the show or thereabouts. I typically get to anywhere between 0 to maybe 0.75 questions per show. So the earlier that you get the question in the chat, the higher the delta that I will get to that question. But I already see you guys in the chat. Man, you're tricking that algo. Man, you guys are pumping that algo into thinking this might be some decent programming. Maybe we should push this out to more people. I mean, I see Sam L in the house, man. Flower Power in the house. James Wentworth in the house. Man, look at you guys. Ash Finn Weiss is here. Man, Danish Dynamite here. Man, look at you guys. I appreciate you guys so much. So what I want to do is a couple of things going on in the portfolio. So number one, let's take a look at Amazon. So Amazon is down $8 today, which makes sense because the market is down quite a bit. In fact, hold on. Let's actually look at, right now you're looking at the market, right? You're like, okay, market down 30, even S&P's down 30, NASDAQ down almost 200. It's like, okay, it doesn't look too good out there. But it's actually not too bad, right? Because if you look at the EMA S&Ps and you go to the chart of the EMA S&Ps, you can see that on the lows today, I mean, they had them all the way down to 65.94 on the low print there. So they were almost what, 65 points lower, like almost down a clean hundo on the day. I don't know if it was ever exactly a hundo. Maybe it was right there on the doorstep. But a nice little rally back in the market to only be down 30. And then, of course, you've got the NASDAQ, which is down 190. But take a look at it just a little bit ago. It was down to 24,376. So just a clean 300 points lower than where it is now. So we were down 500 at one point this morning. And so down 190, down 180, basically a green day. Like basically the boulevard of broken dreams, right? Like this is pretty basic stuff. I don't think I'm really kind of splitting the atom here today. I think we're all pretty well aware of how this works. You got the Dow, you got the boomers. I mean, these guys were down to 45,988, so they were under 46,000. So another 300 points lower on the boomers. And then, yeah, look at the Russell, man. Look at the Russell bucking the trend. It's up 12 on the day. So the Russell is actually green when the rest of the market is struggling. Now, of course, the Russell was down to, 23, 21 earlier. So it was down 40 points below where it is now. So it would be down 28 to 30 points on the lows of the day. But it's rallying back. It's coming back. It's Taco Tuesday. I'm excited. You're excited. It's all happening right here only on the Tasty Live Network. And then, of course, you've got volatility. VX volatility futures up 17 cents. And then spot volatility VIX up $1.18. You got the VIX up to 23.50 on the day. Man, look at that candle, though. The VIX was actually all the way up to almost 26 earlier. So the VIX was almost up to 26 earlier. Now, again, guys, I know, you know, can we use this VIX print? I'm not sure. Usually VIX HQ tweets something out within 3 to 5 business days after the fact to let us know if this VIX print is even usable. We don't know. We don't know what kind of calculations the VIX interns are using, so we all have to wait. This one may not even be usable. But let's just assume that it's legitimate. Let's just assume that this one makes it past the cutting room floor. Man, that's a pretty big VIX jump earlier this morning, up to almost 26. And now it's all the way down to 23.50. And so it's been a minute since we've seen, a $3 or $4 range on the VIX. I guess it's kind of 3 or 4 percentage points, not really dollars on the VIX. And then kind of a huge reversal intraday selling off. It's just another great, I guess it would be another great example, another great illustration of how volatility doesn't like to live on the higher end. It doesn't like to live in this expansive state. Like it will expand, it will increase to kind of reflect the additional uncertainty, craziness in the world, chaos, whatever. But then once those things get resolved and once there's some kind of conclusions that are met one way or another, volatility sells off, man. It wants to live on the lower end of the range. It wants to live around its historical average, if not even lower. I mean, of course it wants to live around its historical average because that's why it's its historical average. But when you see these big expansions up to 25, 27, 55 for like earlier this year type of stuff, yeah, man, the VIX does not want to live up in those high ranges. But anyway, I digress. All right, so let's go ahead and let's see here. What I want to do oh, guys, look at this. I told you guys, man. Like I told you guys, Home Depot played it to the upside. And again, I served it up on a silver platter. I absolutely served this one up wiffle ball style for you guys to make some money today by doing the exact opposite. And I'm going to do that again here in a couple of minutes with Target. And you can bet your bottom biscuit we're going to do it tomorrow with Nvidia. And it's actually going to be a special little surprise for Nvidia tomorrow. But you got to tune in tomorrow to see what that's going to be. But Home Depot down $15 today. I didn't see it coming. And so, yeah, you got the stock down 4%. I mean, I don't know what they said. I can't imagine that it was anything good, but you've got the stock in a pretty bad spot. Now, we have a short put spread on, and this is actually, like if hold on, let me delete that. Let's delete that. Let me open up Amazon and I'll open up Home Depot kind of side by side. We'll do a little compare and contrast here for Home Depot and Amazon. So both of these strategies have 31 days to go. This is actually a really, really good compare and contrast because this Amazon short call spread that we have on right now, we put this guy on. If I bring up the chains here really quick, let's crack open a little rooster and kind of see what it's got for us. Let me click on Amazon, click open the chains here. And you can see we did this trade on October 30th. Yeah, we did this trade on October 30th. Here it is right here. It's right here. So that's what? almost 3 weeks ago. So that's when Amazon had earnings on October 30th. We did this trade and we still have it on. Now, if you remember, if you watched the show like the following day, October 31st, Halloween, then you saw that Amazon obviously ripped it to the upside. Like we were in a really, really bad spot with this short call spread, but we had time. We had duration on our side. And so this is one of the reasons why, getting in at 45 and getting out around 21, it's different for defined risk as it is, relative to undefined risk. But generally speaking, as kind of like a basic framework, in at 45, out at 21, just an incredibly powerful foundational strategy. You want to do some other things around the edges, your 0 DTEs, your 1 DTEs, buying a little premium, like whatever. I think that's all fine and dandy. But when it comes to the foundational elements of what it is that we are trying to do, which again, I don't really know what that is. I'm trying to figure it out. I announce it at the beginning of every single show, and I'm hoping that maybe next week is going to be the week. But foundationally, I do think that one element of whatever it is that we're trying to do is kind of in at 45 and out at 21. All right, it's kind of this duration mindset when it comes to short premium plays. Okay, we did it for Amazon. It didn't work, but look what's happening now. So we stuck with the program. It was defined risk. We didn't panic. We understood, all right, my maximum loss is known. I don't need to do anything crazy right now. Like I can just sit tight. If it never comes back, it never comes back. I mean, that's trading. That's the way that it goes. I mean, that's of course going to happen from time to time, no matter how good of a trader you might think you are. That's of course going to happen to every single one of us. But the same thing is kind of potentially getting started today with Home Depot. Right now, we don't have as much time with Home Depot like we did with Amazon because we did the Amazon trade 3 weeks ago and we're in the same cycle that we are with Home Depot today. So when we did Amazon 3 weeks ago, we had 50 days to go. So we had a very, very large window of time to work with. Whereas now we only have 31 days to go, which is still a pretty long time, but it's not as long as 50 days. And so, we may run out of time. The clock may run out on us, but still, this is one of the beneficial things of choosing duration, even for an earnings strategy like what we did with Home Depot. So with Home Depot, and look at the market down 9. Look at this thing, man. Wow. Look at the NASDAQ risk-free instrument only down 84. Are they going to push it green on the show? Look at the Russell up 18. Man, Taco Tuesday must have just been announced in full effect. Even S&P's down 775. I mean, this is it, man. I mean, he must be pushing the tacos. He must be pushing the burritos. He's probably got a little Fluata action. Like, it's all coming out there, man. You got S&P's only down 8. That's some pretty crazy stuff. But with Home Depot, we're going to sit tight and we're going to do nothing. And those are all the reasons why. So Home Depot, I wish it had worked out a tiny bit better, but it's okay. We've got plenty of time. And so Amazon, Home Depot, we got your Kimberly Clarks, you got your Qualcomms, you got your Starbucks. I mean, the P&L Open Bros, I mean, they're coming back for us, man. Like they've got a little ammunition, of course. So we're going to go ahead and bypass that. We'll talk about that maybe tomorrow. But let's go to Target earnings. I know you guys are asking me about Target earnings. And so, and I see you guys in the chat, by the way. Look at you guys, man. I see Emmett Morrison's here. Man, Jared Kramer's here. Peter Leger is here. Joel James in the house. Scramble everything in the house. Let's go to Target. So I got Target, TGT. So I'm thinking about Target. And obviously all eyes are on tomorrow, right? All eyes are on tomorrow with Nvidia. All eyes are on Thursday morning with the USA. Right, we've got Nvidia earnings on Wednesday night. We've got USA earnings on Thursday morning with the jobs report, Jobs Thursday, which again, I don't know what could be less feng shui than Jobs Thursday. Can you guys think of something? If you can, put it in the chat because I would love to know. That pretty much takes the cake for me. Like that's A++ in terms of anti-feng shui. Jobs Thursday. It doesn't make any sense. It doesn't make any sense at all, but it is still coming down the chutes on Thursday. It will be no less imaginary than it would be if it were reported on Friday. That much is certainly true. But for Target here, I'm kind of thinking, guys, let's keep it. I mean, we got the magenta shirt on. I'm kind of thinking, I think we just keep it a little buttoned up, right? I think we just kind of play this one close to the vest. Like, let's try to be a wee little bit strategic. Like, let's try to kind of dip into the strategic reserves and do something that maybe isn't fully directional. Maybe do a little something that isn't necessarily dependent upon getting the direction of moving the stock, fully correct or kind of nailing the magnitude or whatever. I mean, obviously, you've got to expect to move butterflies. You've got these other things that we do directionally. Of course, we're going to be doing things similar to that, or maybe exactly that for Nvidia tomorrow. But for Target, man, I'm thinking, let's go to December. with 31 days to go, right? So let's buy ourselves a little bit of time here. And I'm really thinking 31 days to go. You've got Target, you've got the stock at 89, you've got the stock up 49 cents. I mean, it really doesn't get too much more obvious than this, guys. Like, I don't really know how you can look at Target. Again, don't overthink it. Just kind of visualize Target as like an idea, like a way of life, like philosophy, if you will. If you view it through that lens, I just don't know how you couldn't possibly be super duper bullish on this stock. I mean, think about it. Target, they got it all figured out. I mean, they've been doing the same thing for the last 25 years, but they've got it all figured out. So I'm thinking for Target here, let's just do something really simple. Maybe we sell an 85 put. I mean, that's another great thing about the stock. It's an $85 stock or $88 stock, $90 stock, right? You know, we're going to be able to do something undefined risk in here, and we're going to be able to size it pretty effectively kind of within that, you know, undefined risk position sizing window. And so, you know, when you start getting into $150 stocks, $200 stocks, and what have you, it becomes a bit more challenging to do things that are undefined risk just from a buying power standpoint. But when you get down to like the $100 stocks and like the $90 stocks and the $60 guys or whatever, now you have a lot of flexibility. Now you're really nimble and you can do a ton of different things kind of, you know, in either direction. And so I'm kind of thinking, man, what if we just sell the 85 put? What if we just play Target to the upside? Which again, you guys know what that means. I cannot make it any clearer for you. I'm trying, but I'm not sure I can do it. Like, I'm pretty sure I have reached the maximum point of clarity that I can possibly give you. If you're looking to make some money today, you need to be on the opposite side of this trade. Again, I present to you Exhibit Triple Z, Home Depot this morning, right? You need to be playing Target to the downside. You choose what way you want to do that. You can buy put spreads. You can sell call spreads. You could probably even get away with buying 2 delta puts, and you'd probably be fine. All right, don't do that. That's a little crazy. But maybe we're buying some put spreads, we're selling some call spreads. Man, I'm here for you guys, man. Don't you ever forget that. Don't you ever forget that. Even S&P is down 22. And so, okay, all right. So maybe he pulled the Fluatas from the menu. That would be the only explanation, I think. So let's go in here. Maybe we sell this 85 put. And I don't know, man. It looks okay to me. We sell it for like $335. Look at the buying power, right? $1,400. Again, $30,000 account. That's what, 4% of the account? A little over 4% of the account. Typically like to live between 3 and 7%. So it all checks out from a position sizing standpoint. And so it's all good, man. It's all good. And there you go. A little Target to the upside, leaving some powder dry for tomorrow, of course. And there you go. All right. So we are now short a put in Target. There you go. I did it. You guys know what to do with that information. If you are brand new to the show, welcome aboard. I'm so glad that you are here. Whether you stick around with my show or other shows, if you want to take an active approach to your portfolio, specifically using derivatives and even more specifically using options, man, you're in the right spot. You are totally in the right spot. I hope you stick around and get a ton of value from all the different shows. There's so many amazing, you know, hosts on the network and shows on the network. Like, I'm excited for you that you're here. If you are brand new though, I'm serious when I say do the opposite of me. The people in the chat can back me up, right? It's not a joke. It's not a sarcasm. Like, you need to be on the opposite side of my earnings trades. And so, all right. So there's our Target trade. And that's pretty much it. And so Josh is getting long Target. No, man, that means you're on the same side as me. Yeah, you see, Josh, he said he doesn't pay attention. See, Josh was like that kid in class that like was just kind of nodding off, right? And there's like that kid in class that like, what was that? Right? And so no, you need to be, he said 100%. Yeah, that's right. I appreciate the fact that you owned it. I appreciate the fact that you didn't shy away from it. So there you go. But anyway, there you go. So Target to the downside should be your play. But let me get to y'all. So we're right around there. We're a little bit early on the halfway mark of the show, which is good actually, because tomorrow we got a little something special happening. And so let's go in here though. Let me see if I can I surprise and delight somebody in the middle? Let me see if I can surprise and delight somebody in the middle. Hold on. Give me 1 second. Let me see if I can find somebody. Let's see. Oh, here we go. I got it. Because I'm trying to prioritize new people. And again, I have to scan it quickly because I don't want to just sit there with a ton of dead air, obviously. But I found Thomas Y3H3F. Man, what's going on there, Thomas? Thomas has a great question. So thank you so much for being here, Thomas. I appreciate you, my friend. I hope that you stick around. And again, whether it's my show or the other shows, like, I don't take it personally. Like, man, as long as you're here, that's amazing. But your boy does need that watch time. So keep that in mind when you are trying to decide what to click on and keep watching. But Thomas, Y3H3 says, hey, Dr. Jim, could you please explain when buying leaps calls are preferable to stock? Is it purely to be more capital efficient? Man, this is a really, really great question. And largely speaking, yes, that is going to be the primary reason why you would decide to buy a leap call option as opposed to buying the stock. And I'll even show you one, maybe even two examples to kind of illustrate this point. It is purely a capital efficiency play, right? It's really not much more than that, right? And as we're going to see here in a second. So for example, let's say I go into, like let's say Amazon. Amazon's a very good example because it's a $200 stock, right? So you're in a margin account, like I'm in right here, and like you might be on, kind of your end of the screen there. I'm in a margin account. I want to buy the stock. I'm going to go in. It's going to be like 11 grand, right? I'm going to basically have to put up about 50% of the overall notional value on the position. Looks like it's only a little bit over 10 grand. That feels like it's a little bit low to me. But okay, all right. So you get a little discount on Amazon, apparently, a little holiday discount, a little Prime deal there on Amazon. All right, okay, I see what they're doing now. But you've got the buying power at just over $10,000. That's still pretty significant, right? So okay, so is there a way that we can simulate a very similar stock position at potentially a fraction of that $10,000 buying power? And the answer is yes, and that's going to be by using leap call options. So if I delete, so let me clear away this order. So let's say, oh, you know why? It's probably like that because I already have a position on Amazon. That's probably it. Like if you clicked on this, yours is probably around 11,000. So that's why I'm getting the Prime discounts, because I'm a Prime member. And I'm a Prime member because I have a short call spread in Amazon. It's as simple as that. But if I go to, let's just say I go to like March, for example, right? So say I go to March and I'm going to find the first 90 Delta call. So right here, my 90 Delta call in March, 155 strike. You can see that those are selling for about 75 bucks, a little over 75 bucks. So if I go to buy one of those, you're going to see that I'm only going to have to put up, well, for me, it's 6,500. But again, that's because I have a short call spread. You guys would be putting up, the full weight of this debit. So you'd be putting up 7,500 bucks. And so now it's like, okay, I can have 100 shares of Amazon for 11,000. I can go in and buy a 155 call in Amazon that has a 90 delta, right? So if I circle this guy right here, you can see it's a 90 delta. So remember there, Thomas, that means that you're going to get 90% of the move in the stock. So if the stock does increase and it does move higher, you're going to get paid 90 cents on the dollar. You have to give a little bit up because for every gimme, there's a gotcha, right? You've got the capital efficiency in terms of the savings and the buying power, but you got to give a little something up. And the thing that you're largely giving up is the simple fact that you're not going to get a dollar for dollar move in the stock. And so, yes, it is primarily a capital efficiency play. Here's a very good example. And of course, you can kind of play around with other stocks, so you're going to see the same phenomenon, right? Go in there, go to buy the stock or even short the stock, but you were talking about leap calls, of course. Go to buy the stock. It's going to be about 50% of the notional value if you don't have any existing positions on in Amazon. Then go find the first 90 delta call that's maybe 5-6 months into the future, generally speaking. You can go further out in time, it'll cost you a little bit more. You can go shorter duration, it'll cost you a little bit less. You can kind of play around with it, but you'll see 85 to 90 delta or thereabouts. You're going to be able to save a pretty significant chunk of change on the buying power. So hopefully that helps a little bit, and it can be a very, very effective tool for having positions on in especially higher price stocks that you kind of want to have a directional play, but you don't want to fork over the capital. The in the money calls and the leap options could be a good option for you. So all right, so let's see here, man. Let's go all the way back to the beginning. The surprise and delight phase of the show is now over. We now move on to the regular phase of the show, which is right there around that same B- level of quality that you guys have come to know and expect and love. So Ash Fan in the house. What's going on there, Ash Fan? Appreciate you, my friend. Weiss in the house. Hey, Dr. Jim. Good to see you. Time to get back into Chipotle. Believe me. Don't do it to me, guys. Are they rallying today when everything else is down? There's no way. Okay, up 6 cents. Okay, all right. So they're back there right around 30. Did they break below 20 or below 30? Let me see here. Did they actually hit under 30? I think they did, right? 29.75 is your low. 29.75. Wow, man. Man, Wow. And look at that. You can even see it on, I mean, it was July. This thing was 60, right? In July, this thing hit a high of 58. It's now down to 30. I mean, that's a 50% drop in its overall value, which is pretty, I mean, that's pretty significant. And so, yeah, that's some pretty crazy stuff. And so, all right, Chipotle is not looking too amazing, but let's see here. If I go into, let's keep going here. Ranch in the house. I like plain bagels with cream cheese. In fact, that might be what's for lunch. I'm not much of a bagel and cream cheese guy, but yeah, I mean, sure. I mean, I think that bagels and cream cheese, that's the tried and true, right? That's the expected move. And so there you go. That is certainly one way to play it. If you go to, let's see, Sam L is in the house. Doc, is it Taco Tuesday already? Because the VIX at 25 means something is definitely cooking. Let's see what the Open P&L bros have in store today. Yeah, they got a little something. And I see my videos getting choppy, man. I don't know what's going on, guys. I mean, I really don't. But yeah, the P&L Open is not looking too good from a Starbucks standpoint. And we will see, my friend. VIX at 25. Like I said earlier today, I'm going to reverse course pretty significantly, which is we haven't seen that too often. Like, this has been quite a reversal in the market when it comes to volatility. And we'll see if it sticks. And we'll see if it, obviously it could rally back, volatility could get back on its horse, or of course we could, head back to, a red volatility day, which of course would likely be a green day in the market. And so let's see, Ordenu's in the house. What's going on there? Oh, Brian Dowdy. There we go. Hey, Dr. J. I want to sell my Bitcoin at break even and move it to Tasty by buying IBIT to have options. What is the most efficient way to do this? Selling puts while holding Bitcoin? Buying power is not an issue. So let me think here. So you want to sell your Bitcoin at break even and move it to Tasty by buying IBIT to have options. What is the most efficient way to do this? Well, so I'm not too familiar with like straight crypto like purchases and crypto ownership. I mean, I don't own any crypto. Like I trade some IBIT on here and things like that, but I don't own any Bitcoin. I don't have any Ethereum like on the side. And so I'm actually not the right guy to ask. I would reach out to Dan. Reach out to Crypto Dan. You can find him. He probably gives out his email on his show, I would imagine. I don't know it off the top of my head, but if you need it, reach out to me and I'll connect you with him. So send your question to me there, Brian, and I will send it to him, and he can probably help you do that in the most efficient way possible. And so that's what I would do. Orgdenu's in the house. Greetings from Italy, Dr. Jim. What's going on there, Orgdenu? I appreciate you, my friend. I appreciate you very, very much. Sam L, let's see. The universe just can't let you stack 3 winning trades in a row. That would create a blip in the matrix. Yeah, maybe so. Order restored. The fade doc strategy is back exactly as it should be. Yes, indeed. And again, I gave you guys some target. Like, it's all good to go. And there you go, man. So you guys play target to the downside, and you're going to do quite well for yourself. So Wolf is in the house. What's going on there, Wolf? I appreciate you, my friend. Flower Power in the house. Says Bill Ackman used to love Chipotle. Wonder what he thinks of burritos now. He's knee deep in Fannie and Freddie. Now I know. Nah, man, Bill Ackman's out there giving dating advice. Right, like, may I meet you? Oh, man, if I was back in my prime, man, I'd be dropping that thing left, right, and center. Like, I'm like, yeah, that you want to talk about the shock and awe strategy. You drop a may I meet you on somebody? I mean, the simple shock and awe, it's going to get you in the door. It's going to buy you another 20 seconds. Now, what you do with it from there is entirely up to you. But Bill Ackman, he just gave you the golden ticket, man. Like, you are in the chocolate factory. Again, the next couple steps, it's up to you. But the may I meet you? Man, I love it. I'm totally on board with the may I meet you. But anyway, I digress. You got to be on Twitter to understand that joke, of course. Ranch in the house. What's going on there, Ranch? I appreciate you. James Wentworth in the house. What's your best Lotto zero-day pick of the day? Great question there, James Wentworth. I mean, for me, I'm not going to do it now, of course, because the day is almost over. I mean, typically, if you're going to take a kind of a lotto shot in a zero DTE world, you want to do it earlier in the day. And so, I mean, for me, I personally like, maybe some index plays early in the morning. Like, if you have a feeling about the index and you want to take a shot on the index, I think, or one of the indexes, doesn't have to be just one singular index, but you just take a shot on one of the indexes. I mean, to me, those tend to be the smoother plays from start to finish. Now, you may want to take a shot. You may want to take a shot at an individual name, like obviously Nvidia could be a potential play tomorrow, or even Thursday after the earnings. You could take a shot on Target tomorrow after earnings, whatever. The individual stock is going to have a lot more risk kind of layered into the position just naturally. But again, if it's a zero DTE, especially if you're buying premium, the risk is capped, things like that. I don't know, man. I don't really have a favorite necessarily. I mean, especially with the VIX now over 20, comfortably over 20, like a lot of things are moving, And so you can really kind of take your pick when it comes to the different things. And so, yeah, that's what I would say when in regards to that. But scrum everything. Let's go. Hey, Dr. Jim, glad you're on air. Looks like you took care of the internet bill finally. Maybe not. I mean, it's stuttering again, so I don't know what's going on. But now we can not only hear your sultry voice, but that smugly victory lap smile we rarely get to see. And so, yes, you get a little something. And we're even doing it without victory laps. Like we're even doing it with losing trades in Home Depot. And so that's how you know that we are in midseason form. Like that's how you know that we are good to go and all is right in the world, my friend. And so let's see. Sam L. Doc, I spent 10 minutes wondering why Nvidia was mooning. I thought Nvidia was already out. Nvidia's not mooning today, is it? I don't think so. Yeah, no, down $2. No, it's coming out tomorrow. And so, no, Nvidia is tomorrow. And yeah, so we got Nvidia tomorrow. And just target in the morning. I think that's pretty much what's on the docket for the next couple of days. But then again, remember, we've got USA on Thursday. And so you've got lots of things coming on down the chutes. Sergio's in the house. What's going on there, Sergio? Sam L. Nope, just me confusing Nvidia with Nvidia. Oh, there you go. VNTA? Wait a minute. I'm one ticker away from buying Vanda Pharmaceuticals. Wait, there's actually a stock that is VNDA? Wow, look at that. Well, look at that. You want to talk about luck in your way. You want to talk about the original luck box. Here you go. VNDA. What an unbelievable ticker symbol. Doesn't even matter what you do, right? Nobody cares about your business model. Nobody cares about your statements. You're the pure typo play on NVIDIA. Like, I love it. I love it. When do they report earnings? Hold on a second. When do they report earnings? Is it coming up soon? I don't know. It must have just happened recently. But wow, you're just playing typo off of NVIDIA, man. That's some powerful stuff. And it's amazing because it's like a very subtle, slight typo, right? It's just the first two characters, right? It's just a quick little transposition of the N and the V. And so, man, that's really, really powerful stuff. But I appreciate you there, Sam L. Ashfin, is Jim ready for his B- viewers today? Man, I'm always ready. Always ready. One has to know the delta of that. Yeah, Ash, reach out to me too, by the way. Let's connect again because I was down for the count because of my throat and stuff. Let's connect again for the Discord. Let's do it on the other side of Thanksgiving. Man, let's make it happen. I 100% want to make that happen. And again, my apologies for going down for the count, but my kids took me down. They 100% took me down. And so Emmett Morrison, hey there, Dr. Jim, glad to see you today. Man, it's good to see you too. Looks like the video's okay now, man. This is weird. It's very weird, guys. I don't know what's going on. But Danish Dynamite, Dr. Jim in the house. Will NVIDIA crash the market, man? I don't know. And you've got to tune in tomorrow to see how I'm going to play it. And I will, of course, I will not let you guys down. I will have something for you, and it's going to be a little bit more extra special than usual. And by extra special, I mean it might be slightly worse than what you're usually accustomed to. Scrum everything. James Wentworth, are you the famed JG Wentworth? Yes, 1,800 cash. Now it's a great question. Let's see. And then we got Thomas in the house. Ordenu's in the house. Let's see. Saul Rodriguez, Dr. Jim, tuning in to see if you can pump the market. I'm doing it, man. EME S&P is only down 7.25. NASDAQ down 90. Like, we're doing it there, Saul. We're doing the best we can. User says NVIDIA to save the day. Yes, it will save the day tomorrow. If you can't beat them, join them, right? But if you can't beat them, you don't join them. Right? Or no, I'm sorry. Hold on. If you can't beat them, you join them. If you can beat them, you don't join them. That's how it works. And so you got to tune in tomorrow. And so let's see. Stan's in the house. What's going on there, Stan? Ashfin, I thought it was 877 cash now. Yeah, that's pretty funny. Let's see. That's it, Samuel. That's it. Market reversal confirmed. If Dr. Jim notices your comment midstream, the algo gods are officially distracted. Yes, if you get surprised and delighted midstream, then I don't know what that means exactly, but we do maybe that's the blip in the matrix right there. Maybe that's a little something. Grumpy Mike is looking for SPX 6635. Where is the SPX right now? Let me see here. If I go to SPX. Okay, so you're right there. I mean, it basically, Grumpy Mike's looking for an unch day. He's looking for down 10, down 15, right? We're up 12 right now. And so, I mean, this is, in SPX, it's a $6,000 product, $7,000 product, right? So this is a massive product. And so that could certainly happen, in the blink of an eye. And so let's see, scrub everything, Ashfin, let's see. Here we go. Scramble everything. Dr. Jim, how correlated is your hair poof to volatility? Is it mean reverting and doesn't want to live up to those high ranges? It kind of is mean reverting now, especially now that we've got like all the stuff happening in the back. Like you can only hit it from the vertical side like so much, and then it just goes horizontal. It doesn't matter what I want to do with it. It's telling me we're going horizontal today, and so I'm like, all right, like that's the way we're gonna do it. And then we're getting closer and closer to the mullet stage, which is gonna be fun. Like it's gonna be super. I'll do it for at least a month, I think. And I'm talking like legitimate mullet. I'm talking like shave sides. I'm talking like, I'm not like pretending like it could be a mullet. Like you have to do a double take. Like, no. You're going to see it from 800 yards away. Like you're going to know without a question that guy's going for it. And by going for it, I mean, please get him back to the barber immediately. And we're going to do that for at least 4 weeks, maybe even a couple months. And so let's see. Ashfan, what is the fate of that hair staying long? Yeah, it's decaying. It's decaying quickly. We're really close to expiration. So you got that decay. It's picking up steam. I mean, you guys all know. You guys know the whole kit and caboodle, man. Like you guys do this every single day. It's the same thing with me. And so let's see. Let's see. 0703 said HD Home Depot said no storms. They make money when there are storms for home repairs. That's true. That's 100% true. Or they make money when you got a fence guy. Like if you got a fence guy, which he's almost done, by the way, he's doing the gates now. And so it should be done, 3 to 5 days, I think. And so, man, I'm pumped. It's almost done. This is good stuff. Scramble everything. That's what Generac said about their sales. There you go. 0703 Lowe's is less contractor visits, more homeowners. That might be true. That doesn't necessarily ring true for me personally, but it could be true at the macro level. Joe Kramer, Meta deep red to green here would be wild. Let's take a look at some Meta. Meta. Down $1. Wow, look at that. So what did they do earlier? Were they down a ton? Yeah, look at that. Okay. So Meta was down, to 583. Okay, so it wasn't that red. I mean, it was a little bit red, no question, but it wasn't like super crazy. The way that your comment read, I thought I was going to look down at like a Meta down like 50 on the day with the NASDAQ down 500, but Meta was only down to 583. That's only like a 3%, 4% drop from where it is now. And so Meta's doing okay. But let's see. Peter Leger in the house. I thought I saw a tumbleweed rolling down the deserted aisle at Home Depot. That's not good. If you're seeing tumbleweeds, like that's where you really do need boots on the ground. Like if you're in a store, any store, it could be a Home Depot, it could be a Dunkin' Donuts, it could be an eBay, it could be a whatever. If you're in any store and you see tumbleweeds, that's an immediate short. That's an immediate, like you're selling stock, you're buying puts, like you're loading up to the downside. And so let us know next time there, Peter Leger, if you see a tumbleweed in Home Depot or any company for that matter. Joe YQ in the house. What's going on there, Joe YQ? Let's see. 0703 says Meta won the lawsuit with the FTC. There you go. Good stuff. And so Joel James in the house. Dr. Jim, I assume that you only have on 4 to 5 put credit spreads at 31 DTE and all $10 wide and you're getting smacked. Do you add in assume. Okay, so you're giving me a hypothetical situation. I got it. Do you add in the call spreads to help blunt the beating? Okay, let me back up here. Assume you only have on 4 to 5 put credit spreads at 31 days to go, and they're all $10 wide, and you're getting smacked. Do you add in the call spreads to help blunt the beating? This is a great question. This is a terrific question. Generally speaking, no. So the caveats here, the things you have to consider, right? If you've got on a handful of credit spreads, they're all $10 wide. If your position size is in check, right? Which again, I mean, we don't know. I don't know that it is because it's all relative to account size, right? But if they're $10 wide and you've collected $3.50 to $4 on each one, and you should be around there, maybe a little bit less, maybe a little bit more, whatever. You're $3.50 to $4. You're risking $6, $6.50 on each trade. So $600 or $650. That means as long as you've got 20,000 minimum, if you've got 20,000 or more, then you're right at about 3% or less from a position sizing standpoint. That is small enough, in my opinion. That is definitely small enough. If you have more capital, you can get even smaller, which of course is super, super nice. But if you've got 20,000 or more, I much prefer to just let them ride. I much prefer to say, all right, you know what? We're getting beaten up. Now, it is a little bit trickier because of the correlation. Like, it is a little bit trickier because you have 4 or 5 put credit spreads. If they're all in, like, stocks, if they're all in, like, equities, especially, like, tech names or whatever, they're going to probably follow each other. And so that could be a little bit tricky from the standpoint of it's like, I got 3% here, 3% there, and then 3. It's like, that's 15% of my account. If they all don't work, that's going to be significantly painful. And so honestly, rather than adding the call spreads, which is not a terrible move, but it makes it really difficult to make money on those strategies. It really does. You know, you're kind of like manufacturing an iron condor, which there could be a time and a place for that. But I would actually much prefer to see you. I would just close one. I would just take one right now and just close it. So instead of having five, you've got 4. Instead of having 4, you've got 3. If you're concerned about the risk and you're concerned about the correlation across the assets, I would just close one. I would close one, especially at 31 days to go. Even if you're getting smacked, it's probably not that bad because there's so much time, right? You've got a $10 wide spread. If it's in the money, it's maybe marking at what, $7? $7.50 would probably be pretty bad. If it's like super deep in the money, maybe it's marking at $8, but it's not marking at $9.50. It's not marking at $9.75 unless it's like way far gone, super deep in the money, probably not coming back, like those kinds of things. But as long as you're not in that situation, I would take one of those trades off if you're concerned about the overall risk. I do think though, even if they are highly correlated, you're also probably okay leaving them all on. It all depends. It's, of course, difficult for me to give you a hard and fast answer because it all depends on account size. If you're smaller than 3%, so if you're only at like 2% per position, like I would almost definitely leave them all on. I probably wouldn't touch any of them and just let them ride out to the sunset. Like let them go all the way to the finish line and just kind of see what's what. And so hopefully that helps some a little bit. Let's see. TSC says Sosnoff bought the market dip. No, I don't know if he did that. 0703 Walmart Thursday. Walmart's Thursday. There you go. I like it. Brian Dowdy, will I be playing target to the upside or the downside? There you go, Brian. I hooked you up, my friend. You are playing it to the downside. But sometimes you and I kind of join forces, right? Like sometimes you and I kind of sync up on the directional move in a given position, and that's not good for you, my friend. Like that's not good. It's not good for me just because I'm me, but it's not but it's not good for you because you've been forewarned. Like, and I know that you know better. Like the new people in the show, they wander in, they misclick, and they're like, what's going on? Like, I'll check it out. Like, blah, 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 blah. And then they're like, maybe I should follow this guy. That's a mistake. That's a huge mistake. But they don't know better. Like they're rookies. Like they've got to be, trained up. They've got to be brought up through the minors. But then once they get to the pros, which you're in the pros, there's just no reason to follow, man. There's no reason to follow at all. But there you go. Let's see. Where are we at? Can we get one more? 1 or 2 more? Yeah, I think so. Let's see. 0703, maybe jobs are better in Walmart, good earnings. That's very possible. Emmett Morrison, Ash fan, I thought Jim only brought out the magenta on Mondays. It is Magenta Monday for a reason, but sometimes we mix it up and we keep you guys guessing. And then, Brian Dowdy says he's on the same side as Dr. J. Again, famous last words. You've been warned. I don't know what else I can do. But I do have to go. I got to run. We are out of time. Guys, I appreciate you. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match.
Love will love me, love will love you, love you. Put down my halo, put down my wings, realizing I can't fix everyone or everything. You are human and you have your own path, and if you need me, I'll just wait here until you ask. Forgiving me, forgiving you, we're all learning to live in truth. All I can do is what will love do?
Howdy, howdy, howdy. Well, Tim Knight here with charts, and tomorrow's the big day, tomorrow afternoon particularly, with, is it? Yeah, with Nvidia. And then Thursday morning, not only will we get to see the reaction the market has to Nvidia, but also the jobs report. It's kind of a mixed bag today. We start off kind of weak, and the market's been pushing back, and paradoxically, really what the bears could use most right now would be a bit of a rally, just to kind of build some complacency back in. I, over the course of the day, have dialed back to some degree, but actually a pretty strong degree. I'm at as I explained, my commitment level, as it were, which is anywhere from 0 to over 200% in terms of how much margin's being used and so forth. I've dialed that back from like 220 down to like 115. So pretty much cut exposure in half. And it's not because I'm just like running around covering things left and right willy-nilly. It's just that on a stock by stock basis, I either shrunk positions to take in some profits, in a handful of cases cover them completely. So as I stand here now, I'm at 39 short positions, I think. I should know, shouldn't I? Either 39 or 37. And I will be more at liberty to get active after Wednesday's over with. Kind of the dream scenario, I guess, would be if tomorrow and or Thursday we got that pop higher. Alternately, if we got a pop tomorrow and then Nvidia disappointed and then we started slumping again. Because I think we got lots more downside to go. But things have been beaten up real hard over a short amount of time. And so a lot of the just fervor, asset fervor has died down, like Bitcoin alone, which, mind you, is the most robust blue chip of the cryptos, lost 30% of its value, and even dipped briefly under 90,000 last night. So the froth has been kind of blown off the beer mug at this point. But I think more meaningful selling will be forthcoming soon enough. Definitely measured in days, not weeks. So let's thumb through some charts together. Here's the spider and our all-important wedge. And we might be executing right now something akin to what happened back here, in which a short-term bottom was hammered out and the bulls enjoyed a few days of rallying and then it kind of fell to pieces again. And that's fine. We just, we intend to do this in sort of a stair-step fashion. So here's like one big step and a rally, which does not muster enough strength to get above the prior high, and another step lower, and so forth. So just lower lows and lower highs would be the order of the day. The diamonds, which 6 days ago were at the highest point in human history right there, have fallen hard. They've unwound all that, and we're trading where we were trading a couple of months ago at this point. So it's been pretty quick diminishment in values. This doesn't seem like the most superbly laid trend line on the planet. Let's just adjust that a little bit. Zoom in a little bit more. Something along those lines. And the cubes, which of course will be probably most moved by whatever Nvidia results in, also I think have put in a short-term bottom. Early today, I covered some big positions, IWM as well as my SMH, the semiconductor position. This is a pretty impressive hammer pattern right there. And as I said, it could be akin to what we witnessed here. So we'll see if we get kind of a relief rally going. The problem is that, how far would it go? There's a huge range here of potential bounce. Ideally, it would poop out, well before it approached even this bar right here. So just, kind of get us back to where we were a day or two ago and then start the fall again. Funny enough, some of the weakest stocks out there have the most bullish sounding ticker symbols. It's sort of classic contrarian bad timing. Here is bull, which is a really good ticker symbol. And as you can see, there's precious little bullish about it. This thing went public and like the next day blasted a tremendous amount higher, and it's just been a grind down ever since. It's just hamburger at this point. And similarly, there's BLSH, bullish, which is not. And here too, this one didn't even get a chance to fly higher for a day. It actually came public here, opened up here, and simply stated, anybody who jumped into the open has just seen this diminishment almost nonstop. Got a little bit of a relief right here for a few days, but then it was down again. But let's return our attention to Bitcoin for a moment, because I think it's such an important weather vane with respect to risk on, risk off behavior, the disposition toward risk. And as we look at it, that line there, which is, it's nothing fancy, it's just at $100,000 and 0 cents, that simple line in the sand, I think is an important psychological barrier at this point. Before, as we approached it, obviously it was a very exciting goal for the crypto bros out there, and they conquered it, and it kind of fussed around a little bit, and then it couldn't sustain post-inauguration that excitement, because this was driven by really political positivity about how much the administration was going to do for crypto. And so it enjoyed that sojourn into six-figure territory for a while, and then sold off as things were kind of dying down and Elon got unpopular, the administration, et cetera, et cetera. And then it bottomed down around 75,000 and began a more meaningful rally. So it rallied again, crossed 100,000 again. And this time, instead of struggling, it found the six-figure to be pretty good support. It succeeded here, very briefly dipped below it here, almost inconsequentially. And then it really started to gain favor, and it peaked ultimately about 5 weeks ago or so. And since that time, it has, and it was just green day after day, and then it began its fall from around almost 130,000. It got to, and as I said briefly last night, we got down to 89 and change. This will probably rally, and that would be a good thing for the bears, believe it or not. And it will probably poop out sometime under that 6-figure mark again. So, if you see this up 2,000, 3,000, 4,000, 5,000 over the days, and our crypto friends are jumping up and down about, buy the dip. And it's 200,000 next, or if you're Kathy Wood, 1.2 million is the goal. Take that with a grain of salt, I would say, because it's a counter-trend rally, it's a relief rally, and it will be relatively short-lived. Strategy is taking this apparent bottoming as a very positive sign. It's having a good day for a change, up about 8.5%, kind of like here. But I think this general trend will certainly continue. Obliquely related to this is Trump Media, DJT, which hammered out another lifetime low today. As a business, clearly not doing well. But yeah, that is a really interesting graph. And there are other IPOs too. I mean, this has just not been a good market for IPOs. Like Klarna, for example, KLAR. This came public with a lot of fanfare and a lot of excitement. Looks kind of similar to BLSH, big first day and then bloop, down it goes. StubHub, you've probably used that yourself. Everybody knows StubHub. Same deal. The peak was, the old saying about IPO stands for it's probably overpriced. That seems to have come true with this because a lot of these, and we had a big gap down here, and it's just sinking to new lifetime lows. And at this rate, won't be long for us a single-digit stock. Very, very unhealthy stuff. So I'm going to depart from the gloom just for a moment and mention a couple of bullish items. I've always had kind of a soft spot in my heart for Rivian, and I missed the boat on this. I really missed the boat, and I was kicking myself mightily. Well, I've jumped in again. I see this as a rare second opportunity, and so earlier today, at a pretty good price, I went all in with one of my portfolios. I managed five of them. It's all in Rivian, with a stop right below this line here, this gap. So we've got a bullish engulfing pattern on it for the moment. Long term, I really like the look of this, and I got to tell you, I'm seeing Rivians everywhere. Every time I turn around, there's another Rivian driving by. So we'll see how that goes. But I am bullish on Rivian. I own Rivian. And in one of the least diversified portfolios ever, I put all my portfolio, one of them into our IVN. Another item that I wanted to mention, and I've certainly said good things about in the past, is our old friend Palladium. And I've had as I say, a complex relationship with Palladium because I'm always concerned about it breaking below this, which could still happen, I know. But I've put forward about 60% of the position I would like to have. So I'm long Palladium early today, already showing a nice little profit on this. The stop is at 124 on PALL. I will put forth the final 40% if we can cross this line. That's the real test. If we can cross above this level, I think we're solid on Palladium. So long Rivian, long Palladium. Fingers crossed. 3.5 minutes. We'll just bang through some real quick. As I said, I got a bunch of shorts right now. Just here's just odds and ends amongst them. Continue to be short AMD, which is having another nice down day. AST space mobile, ASTS up a little bit, but the downtrend longer term still nicely intact. And day to day, like for this and everything else, I examine the chart, tighten the stop as appropriate, or lighten the position as appropriate. It's all about managing potential loss. I always, the column I pay most attention to on the portfolio is if this gets stopped out, what is the dollar loss? And I like to keep that manageable. So if the profit gets real fat, so does the potential dollar loss from present price levels. And so I sometimes will ease back the position or tighten up the stop, whatever combination gets that dollar figure down to something I can live with. Carvana, CVNA, also down a couple of percent. Here's a new one, Rubric, RBRK. And in this instance, we've got a nice right triangle pattern. And I'll just rough it out real quick. Something like this, just real quick and sloppy. Something along those lines. That's not terrible. Something like that. So that's rubric. Axon, another good friend, falling again. Very consistent player, this one. Look at this. A little bit lower, a little bit higher. I mean, a little bit lower low, a little bit lower high, pretty much every day. So that's melting nicely. Another one, CoreWeave, CRWV. This one's stabilizing a bit. I took some profits on this, but the stop is right at that yellow line. GLW, Corning. This one's down about 1.4% today. And you can see at the top here, nice little distribution top like so. Couple more. Hims and Hers, I've mentioned this. This is up a little bit today, 2%, but once again, really good looking Head and Shoulders top on Hims. And SMTC, this is Simtech. This is down over 3%. And this one, this was a gap play like so. And so it pierced that gap a little bit, sealed it up, and it's been tumbling since then. And a couple more, I know there's a lot here. STX, this is Seagate, down a little more than 2.5% after this tremendous rally that has been going on. And of all things, WDC, very related to STX, also down nicely, almost 6%. These are these storage companies that have been enjoying the AI rally, but are starting to give back some of those gains as things get a little less frothy. So, yeah, one more day of waiting for this Nvidia business. NQ is nervous about it, down another couple of 100 points here. We peaked right there, and it's been a lot of red bars since then. And it's all up to this fella right there, which, as I said yesterday, is pretty much the same price it was back at the end of July, and doesn't quite know what to do with itself. But I've got a feeling it'll know exactly what to do with itself on Thursday morning. We'll just have to be at the mercy of that. And I don't intend to be too crazily aggressive in advance of that news. So I'll see you here tomorrow, and we can continue to wonder what's going to happen. And then on Thursday, we'll know. So see you tomorrow. Bye-bye.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
New from Tasty Trade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new Tasty Trade account. The Money Match event starts now, exclusive to new Tasty Trade customers.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Ring the alarm. Hey, ring the alarm. Boys, turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Hello, everybody, and welcome to the Last Call edition. It is a fabulous Tuesday, and I was giggling as we were coming in, Jenny Andrews. My name's Liz. This is Jenny Andrews. If you don't know us, I don't know why you're watching this. But I was laughing because I just glanced at the chat, and Ash Finn goes, "Too bad Jenny gets to keep her boat," because
wait, no, we had to, because we're not up on the day. We're not up on the day.
We're not up on the day. Yes, we're not up on the day. So she unfortunately has to keep her boat.
You know what? I was thinking about it. I'm going to get rid of it before there's a real accident. Before there's a real, like an accident where someone really gets hurt. Oh, I've had one broken shoulder.
You only want me to be in the accident?
You, Liz, you walked away without a scratch. My husband had a broken shoulder.
It's true.
Before there are too many casualties.
I still think my favorite was, it was us and Julie, girl that we've all known forever too. And Jenny hands us these buoys that were this big. And she tries to hand one to me and one to Julie. Julie's like, "I think I'd rather use my hands."
The buoys are that big. And I said, hang them over the side so we don't bump anything as we're getting into the dock.
No, you handed us as if it was protection for us because you knew.
Not for you. You're supposed to hold them over the side of the boat so it doesn't bump anything. But,
nonetheless, this is Last Call. My name is Liz Deerking. That beautiful brunette is Jenny Andrews, and we made it to Last Call. Barely.
We made it to Last Call. Spoo's never turned green, but it's not that bad. It's not that bad.
Hold on. Let's jump in. Can we jump into the platform? I can't see what we're seeing. I don't know if we're in the platform or not. Hold on.
Yeah, we are. We're in the platform now.
Oh, we're in the platform. Okay, take a look at
37. Not bad.
It wasn't. And when Dr. Jim was on, it was
down like 18.
Yeah.
Right. So we, rallied back a little bit. I don't know what to say. Is this the end of the crazy? Are we just going to level off and have normal trading, or are we going to continue crazy? VIX is still close to 24, which tells me we're going to continue crazy markets.
Yeah. It's up 7% right now. I mean, I guess, whatever.
24. Yeah. 24 is nothing to shake a stick at, Liz.
No, nothing to shake a stick at. Who shakes sticks? But yeah, nothing to shake a stick at. It's out of control. Okay, so you were saying this earlier. Too bad we got out of our target. We didn't.
We didn't get out of our target. And
no, that's why I knew that when you were saying that. I was like, got out of our target. We saved something for Last Call.
And you know what is so funny is that it's Target's no worse off. It's not like Target's lower than it was this morning, but Vol's getting more pumped in. You could see it because this position was down $50, $60 this morning. Now it's down 80. That's because Vol's getting so pumped into this because earnings are coming out tonight. I don't know, tonight or tomorrow morning. This is one of the earnings this week. Now I have been selling puts in Target. Right now I don't have anything on going into earnings. I'm a little bit like risk off right now with some positions rather than ride things out through earnings. I don't think I can take any more hits.
I don't think I can take any more hits either. And this is not the earnings trade I would put on.
That's true. We'd probably put on, like, fresh set of eyes, we'd put on a Jade Blizzard.
Yeah, that's what I'm saying. This is not the earnings trade that I would put on. So let's just
Maybe, why don't we do that? Why don't we close that and put on a Jade Lizard?
Do you want a Jade Lizard in? I don't know that I want a Jade Lizard in with the VIX at 24.
I mean, I don't mind a Jade Lizard but at 79 in Target. Has it? Look at the chart. When was the last time Target's hit 79?
Well, Jenny, it's not.
You're gonna have to scroll back and back and back and back and back.
You talked me into it. Okay, so I'm gonna do it. I'm gonna do it legitimately. I don't know if this is a good idea or a bad idea, but I'm putting.
Don't put it all in as one trade. Buy back our short put and then put on a Jade Lizard. So I'm gonna
give you the benefits. I'm gonna give you the benefits and the pros and the cons. I just want people to realize, like, it's easier for me to do it in two pieces as well. But look at this. We're actually getting back some buying power. So these are the benefits. We are collecting what we know will be about $1, and it's okay if we're taking a little bit of a loss. I just want people to realize, because the put is farther away, you are actually taking in a credit of buying power, and you're giving yourself better footing.
Yeah. So, like, if we close that put we sold, if you go to the position page, and we close that put we sold, we're closing that put and taking an $83 loss. If we sell a Jade Lizard and taking $1 and they have earnings tomorrow, we're going to hope to make about $50. So basically, we're just trying to make
on an earnings trade, you can make the full profit.
Not on a Tuesday.
Oh, it's a Tuesday.
Yeah, not on a Tuesday.
Darn it.
So, it's like we're just trying to make some of our money back. Like, when people, and the way this market's been, and a lot of people have been getting hurt in some positions, you're just trying to make some of your money back.
No, I agree with you. All right, I'm shipping it. I'm doing it as one package.
Well,
and we'll see if we can get filled. If not, I want to get out of that Target trade. This is the Target, the current one we have in it.
Or if all of them are bullish trades, you could throw. I don't know, but I do want to get out of that naked put. It's just too close.
It is too close. So I will cancel our working order and separate it. And then while we are talking amongst ourselves, do you want to talk about Josh? You want to pull up the art card for what's your assumption? And by the way, it's great to see Josh.
Oh my goodness, so good to see Josh.
This is the art card for Jumpstart Your Trading. I love it.
Yeah.
What's your assumption?
All right. So what's your assumption? Things come to people, right? You get ideas, you get trade ideas, you get assumptions on stocks. You might not know what kind of trade you want to put on. So what's your assumption? Go to tastylive.com/assumption. Send in your assumptions. Today, sometimes I get these visions, right? Today, Liz, long Microsoft came to me in a vision.
Okay, so what's a new trader to do? Microsoft, MSFT. Let's pop in the platform.
Mm-hmm. Yeah, so I thought, right now I want to put on a long Microsoft position. It just came to me. If something comes to you, send in your assumption into what's your assumption. You'll see the boys tomorrow. And
here's what I'm going to give you a gold star for. I'm going to give you a gold star, and then I'm going to give you a C- and some things, okay? You're going to get a gold star for the fact that it's liquid. 23.4 million shares have traded. You get a C- on the fact that it's very expensive. So you can't be selling premium in here because we can't afford it. And
if we did it, we'd have to do a spread.
In full disclosure, that's not really fair for what's your assumption to be like, hey, I want you to sell puts in Microsoft, because it's using $6,400 in a margin account, right?
Yeah, you could do just a put spread. You could do a diagonal. With the 29 rank, you can do a diagonal. You can do a put spread.
In the what's your assumption, you have to fill out your time frame. What is your time frame? You give me your assumption and I'll give you a trade. You're bullish Microsoft. What's your time frame?
Yeah, I'll say 30 to 45 days.
You're bullish 30 to 45 days. Okay. Yes. So then I would go to the 45-day and buy the at the money. Keep in mind, it's liquid, so I can do this. And then if I wanted to, I'm going to go 31, and I'm going to sell a diagonal. So I am going to do $15 on a
$30 wide. That's what you would expect to pay with that kind of duration, 30, 45, half of the width of the spread. It's kind of pricey. And then
not bad. So hold on one second, Jenny. We just took off a target position to the tune of $1,700, and it was a short put. So I'm just kind of calling it into perspective. $1,500 in a $500 product is a manageable amount.
Can we look shorter term? And see if we can make it cheaper? Like sell a 10-day. Go the expected move in the 10-day. sell that 512 and then go to the.
It's $12. So it's $1,300 versus $1,500.
Yeah, and if you look at this, and this is what we talk about diagonals, wanting to make sure you don't pay more than 50% the width of the spread. Here, the spread width is only $17.50, and we're paying $14. That's like really close to the width of the spread, which I don't like that.
I don't like that either.
You know,
hold on. New tasty incentive. Wait, I gotta look at this. Give me 2 seconds. And this is a joke, by the way. This is an absolute joke, by the way, but this was hysterical. New tasty incentive. Cocktails with Liz and Jenny and the boat she has to keep for the most referrals in a month.
I have said this to Mikey before. Like, I will happily take people out on the boat if someone knows how to dock it. Ask.
I think that's the key.
I mean, the worst time was when I had Lily's 16th birthday party. I had like 12 girls on the boat, all dancing, singing, playing music on the boat. Took them to this restaurant that we dock at. It took me about 20 attempts to dock at the restaurant. And then we're at the restaurant, me and all these girls, and I paid a guy $250 to take my boat. I was like, will anyone for $250 take my boat back to the harbor? And then I called an Uber for the girls.
Honestly, though, I think that was smart instead of crashing a boat with 12 girls.
I was like, I'm not putting these girls back in this boat. I am not.
That's awesome. I like it a lot. Okay, so back to this trade, because then I want to get to our next, the real promotion of like the 1%.
I don't like this. It's tough. I see what you're saying. Like $495. It's tough. Do you want to see my Microsoft trade, which breaks every rule?
Yeah, let's see it.
I went to the 10-day and I bought the $495 call.
So let me ask you this. So you paid almost $900, or you can pay $1,500 and have profit potential, and you're using extrinsic value.
Hey, I'm just telling you what I did. This is what I did. Hi, my name is Jenny Andrews. I work for tastylive. I know the rules, and sometimes I break them.
So this is what I'm going to say. Good thing I'm running it because I'm not pressing the button on a $900 lotto ticket. But so if you are bullish, I mean, you're still better off doing this because that gives you, so yours. Okay, let's talk through this. And Jenny, I actually appreciate what you're doing.
I'll let you know in 10 days how it works out.
I break the rules all the time too, but in 10 days. So in 10 days, if you buy the $495, your break even in 10 days is $505, but you're just looking for a little pop. I understand. I'm well aware of what you're doing. And you're using $885 to do it. Versus you could go and sell the $495 put and buy, here, let's do this. So I'm going to buy, what's my max loss? I'm going to bring it up a little bit so I'm getting around the same. Max loss 770. Now this brings your break even to 490 and you'll make $400. It's not bad.
No, it's not bad.
That's what I'm saying. Apples to apples. You got a 29 rank. You got liquid products. I think they're all versions of the same. Now in Jenny's scenario, you have unlimited profit potential.
Now, if we want to just follow taste mechanics, I'll walk you through. Consider me TP. Close this up, go to December, and sell a $10 right put spread for $3.
I don't like it.
Hey.
Fine.
You can move it down. You can move it to the 85.75.
Fine.
There you go, Liz. That is a tasty mechanic.
Fine. Okay.
$10 right for $3.
Fine.
Honestly, I have a handful of $10 rights for $3 in my account in various underlings, and boy, am I glad I have those instead of just the naked boots. Yeah, like when Microsoft trading 400, we'll say, "Geez, I'm glad I just did that spread."
Yeah, because that's a real possibility. We were there. Well, you know what? We were there right before the last earnings. Not last, but an earnings ago.
Yeah.
Okay, so Josh, will you please bring up the other art card?
I'm pretty sure Paul's bringing it up. Thanks, Paul.
Oh, it is Paul. But I saw Josh.
No, but Paul's in charge of pulling things up. So
well, thank you, Paul. Thank you, Paul. Thank you, Josh. Thank you, the powers that be. We're not sure who's doing this.
Hey, it takes a village to run this show.
They corral the two of us. So jumpstart your trading. This is a 1% cash match. And it's only available for till the end of the month.
You better jumpstart. Get a jumpstart on getting this deal. Jumpstart your trading. 1%.
So somebody in Twitter or the chat said that every time they saw this ad, they thought it was me. Now, whilst I appreciate that, Jenny, have you ever seen me run unless I'm being chased?
Okay, so Liz doesn't run.
No.
But you do work out. So
I work out a lot, but the one thing that I've avoided my entire life, almost 50 years on this planet, I've avoided running. So
I've never seen her run. No, I've never seen you run.
No, because I think I run like Phoebe from Friends.
Except remember that one time we were at 62 West Huron. This was probably like 15 years ago, and it was raining, and I had my hands full, and I tripped and fell.
With your oil painting of your dog?
And I tripped and fell, and I was like rolling in the air trying to save the painting I was carrying, and Liz ran to catch me.
Actually, this is how you know how much I love her and that we're actually traders. I was laughing so hard I fell on the floor with her. It was the funniest day of my life because you fell in a puddle with an oil painting of your dog. So you were in the puddle holding up the painting so the painting didn't get ruined.
And I don't even know that painting. I've never seen it again since I brought it into the studio. I don't have it anymore.
You don't?
It's gone. It's probably in 62 West Huron.
It's sitting in, well, no, it's sitting in someone's.
It's probably like hanging in Tom's house.
It probably is. It probably is.
Oh,
that's pretty funny. All right. Well, thank you very much, Paul and Josh and the village that is running Master Control. We appreciate all of you.
Anyway, run, don't walk. Open a new account, 1% cash back, free trades for 30 days.
Yeah. There you go. And we got another one. Refer friends, earn bonuses. I'm actually going to send this. How much do you earn up to? How much do you do?
Well, 24, not for one friend, earn up to 2,400. Like you get so much a friend and you can refer, you max out at 2,400 after you get so many friends.
I know, but this is a great do for my son, who's literally a finance major at a college where no one is trading accounts. This would be like him raking it in if he can get them all in.
He gets 100. The friend gets 100. Do you see that? You get 100. Your friend gets 100.
You get 100, and you get 100, and you get 100. Yes.
Yeah. So this, honestly, that is good. That is good. Although college kids don't have money.
I know, but you know who will get $100 when they refer their sister? My son will. I'll put him up as a referral for.
Yeah. But what I'm finding is the college kids don't have money because so my son called me and said, "Mom, I'm in charge of planning spring break. I'm going to book spring break. It's going to go on your credit card, like $6,000 on my credit card for their spring break." He's like, and everyone is going to Zelle you. Like I've got every kid is Zelling me $300 to add up to the tune of $6,000. Guess how many Zelles I've gotten? 0.
Oh.
0. So college kids, I don't know if you can get them to open these accounts. And $100. Maybe they would do it for $100, but they have to fund it.
You have to fund it. It's not like you can just get the $100 and start trading with that.
Yeah. Yeah.
So interesting. Okay. So is there any other, let me go, hold on. I'm going to go. Oh, I did post this because I love it. Number one, I love Chris Vecchio. And so I reposted this. It's almost time for Wall Street's favorite time of the year when Chris Vecchio breaks down the mystery of the Santa Claus rally and what's your go-to plan for the year end. So watch the show, watch Chris. He's great.
We love Chris Vecchio. We love Christmas. We love hearing about the Santa Claus rally. And we hope the Santa Claus rally is coming.
But you know what is funny is sometimes the Santa Claus rally, who was it that said the Santa Claus rally was like after and like through New Year's?
I don't know.
And look at that. They have Will Ferrell. Hold on, I'm going to start this over again. Wall Street's favorite holiday. You can do that. But there's Will Ferrell. There's my dog.
Oh, yeah.
I wanted to make sure we got to everybody. I'm pretty sure we're not going to do a lot of earnings trades today, but I'm going to go back to Bob. We did look at bullish the other day. And Home Depot had earnings and it went down. So Lowe's and Home Depot are pretty correlated.
And Home Depot went down quite a bit.
Yeah. Yeah.
Actually, I'm slacking on my job. I got to push out our trades. Did we get filled on that Netflix trade?
I will take a look. Netflix trade.
No, I mean Microsoft. Sorry, Microsoft.
Yeah, we got filled in Microsoft.
Okay, so activity, what I see is Target. Target, we bought back that put, but we didn't do anything else.
Correct. And then I will put on the Jade Lizard and Target right now while we're talking. We bought back the put. We're going to put on a Jade Lizard. So I'm going to sell the 97. We'll go 96. I'm sorry, 87.
I mean, you don't have to. If you don't want to, you don't have to.
I don't mind it. I mean, it's fine. It's gives us better footing. Target's 8 million shares, a 63 rank. I'm fine with this.
Yeah, I don't have anything in Target on right now. Maybe since I've got my account pulled up. Maybe I'll put something on in Target too, just so if we go down, I'm going down with everyone.
So and Target's not you. I feel like you're usually in Target. I'm not in Target that much. I feel like you usually are.
I am usually in Target. I have been selling puts in there because it is so like at the bottom of its range. But then I feel like every time they have earnings, there's always some kind of sob story about like they're losing so much to theft, or I don't know. They always have something going on over there.
Story.
and we're like by me, there's a Target on one side of the street, a Walmart on the other. The Walmart has been packed.
Okay, so fun fact, Jenny. So Target has earnings, and I saw this headline on my phone, that it could be a tale of two cities when Target and Walmart declare earnings, because the Walmart earnings are the day after Target's.
Yeah, so like if I go on one side of the street and the other side of the street, the parking lot at Walmart is very busy, and not Target, not as much from what I see. So I don't know.
Do you know what else too has been happening to me lately? Once again, I'm one consumer, so what do I know? But I do have a lot of like Amazon packages at my house. It's getting to the point where I can get things faster through Walmart than I can through Amazon.
Oh, really?
Yes. So sometimes I'll do that and be like, hey, how fast can I get it here with this? If it's something I need. Obviously, I'm not just like trying to race them against each other, but like, yeah.
No, but I think, and isn't Walmart also Sam's Club? Sam's Club, Walmart, they're together, one company.
Yeah.
And so that's all I just get everything like toilet paper, paper towels, laundry detergent, all those big items all come to me from Sam's Club.
Yeah, interesting.
And so that's Walmart. When are Walmart's earnings?
Walmart's earnings are the 20th. So the Target is 19th before the open, and then Walmart's are the following day.
Go to the chart. Let me take a look at Walmart. See, the crazy thing is Target's at the very bottom of its range, where Walmart's closer to the top. And just like the I don't want to say crazy lady, but we were at a show in Boston, and there was this woman, and she came up to us, and she was like, I'm telling you, girls, when Target's at its lows and Walmart's at its highs, the market's going to crash.
Yes. Well, actually, I believe she said when Target goes down and Walmart goes up, which where we are right now. She had a purple feather in her hat. Yeah, we've talked about her for years. Hopefully she's still watching. But the market hasn't crashed, and it's been like that for a while. Target's been down for a while.
And Walmart's been up for a while.
Yeah, so these are retailers. But once again, in these crazy of times when the VIX is 24, I will look elsewhere than look at individual products.
Then look at getting maybe we don't. Maybe we look elsewhere than getting a dollar, trying to make 50 cents on a Jade Lizard and Target.
Well, if we get filled, we get filled. I put the order in, and I wasn't about to cancel replace it, but I was going to let you think that I did. So there it is.
Who's down 41?
Yep, who's down 41? And like I said, VIX is keeping its wings up, so that's what's happening. I did want to look, and I'm not going to put the trade on, but this is a newer, and I did like your idea, Jenny, of maybe contacting the research team and seeing getting a list of 2025's IPOs.
Yeah, 2025.
And where they started, where they ended. I think that would be a fun kind of...
Right. Yeah. And most of them don't look too hot. I was in my son's account today because I thought, well, I better check on it. And he's got a lot of those like IPOs, just like futures this, futures that. And everything I was looking at didn't look great.
Did you get a text from JD, by the way?
Yes, I did.
Okay, good. I want to make sure because he told me he did. And I was like, did you?
No, he did. He did.
Okay, good.
He thanked me for the shares of Firefly.
Okay, good.
So I don't know. Pop out the overview on Bullish.
I do like the handle. I mean, it's a kind overview. Sorry. I do like the handle of it.
So we've got nothing there as far as like a 52, like as far as market cap 5 billion, but we haven't had any earnings. There's no earnings listed there from before. So I don't know what to think. I don't have any position in here.
I don't either. I don't have anything in there. But you know what? Only because we said we're going to kind of avoid earnings. How much is it to sell a put and fly?
Oh, it's not bad. You can sell a 17 put for maybe 900. It's like margin, pretty much.
It is like margin. But what if we...
I mean, like margin if you own the stock, not margin on a put. Normally, margin on a put would be, $400, $350.
How do you feel about that? 17 and a half. So it's kind of a little bit of not a bamboozle job, but this is $2.50 white strikes with a $20 product. So it's trading wrapped around 20. So 1750 is pretty far away.
No, that's not bad. I mean, when I went into Logan's account, he had like 22 puts or something in Firefly, and I rolled him out to December 20 puts. So this is better than what he's got.
Let's give it a shot. It's not an earnings trade, and we're filled. So we're in fly, so we can keep an eye on JD. It's got a 91 rank.
Down almost 50. I mean, we've seen this show before. Afternoon, we get that little rally.
When are there earnings with a 91 rank? Why is there a 91 rank with no earnings on the horizon? Look at the implied volatility here.
They were just in the news. Wait, go to the chart again. Didn't they have a pop up? Weren't they just recently? Yeah, see that little pop up? There was something in the news. Like they got some kind of deal.
But then it comes down with the rest of the market. When the market's falling, everything becomes more and more correlated in the falls.
But they had that, they had that little pop and in some kind of news, like a contract with someone.
So do you know what is crazy, Jenny? Take a look at this. Oh, you know what I'm going to do? Just because we have a second, I'm going to go to the minute, 1 day.
You're crazy. You're getting crazy.
Take a look at this SPX. So 1 day we opened.
Here, do like 3 minutes so we can see the day in one spot.
Fine. Don't fight me with logic, but here we go.
Yeah. And then there we have from like 8:30 to now.
So 8:30 till now. So you could see we opened at 8:30. We put on our SPX trade right around here. You and I closed it about here.
Yeah.
But it would have been, this is what I love about the 0DT SPX trades, and we're going to have another amazing study by Jacob. We're waiting to see what he is going to bring to us tomorrow. But this is a down day, right? I mean, we started down, we ended down. And somewhere in the middle, you can get out.
I mean, most of the time.
If you entered
that trade in study show, it's like 87% of the time, 85.
Yeah, but if you entered it at 9 o'clock or give or take 5 minutes, which would have been right here, you would have been out around right here, or even here if you took less of a percentage.
No, because I changed mine to 30% and I didn't get out till after. We had to be 20 spoo points higher for me to get out for 30%.
You were in the middle of the show. I remember because you got filled in the middle of the show. Yeah.
So I don't know. I don't like this like dropping down again. Now spoo's down 50.
I know. I don't like it either.
It doesn't look good. It doesn't look good. And it looks kind of ugly. But usually like when we get these sell-off periods, it's like at some point we're done.
And we're done for the day. Yeah. I mean, I don't think we need to wait until any of these come out. I'm going to make sure we did not.
No, I don't think so.
Can I ask you a question too? And I'm not trying to debunk. But here we go. SPX is closed. Correct?
That 66.17 is the last closing price.
Yeah. So we can't trade anything else past there. These are all zeroed out.
Yeah. Well, I don't know. What's your question?
No, because I thought I heard someone say that they look at SPX because you can trade it 15 minutes past the close. That is E-mini S&Ps. That's
I know
not
SPY. I know SPY you can.
And ES, I believe you can too. So I'm just going to take a look and see all this stuff. So we'll see if it's zeroed out.
You can keep trading for.
No, I mean options. Because SPX you can't trade. So SPX you cannot trade physically. Like there's nothing you can do in SPX.
I don't know. So if someone said it, try it. Go to like the 0 day and see if you could buy that one for a dime.
No, I don't think you can because it's all zeroed out. Do you see what I'm saying? There's no.
Yeah. I didn't. If you go to review and send, see what it says. Stopped symbols. Yeah.
Yes.
Stopped at 16 Eastern time.
I just wanted to clarify that. Okay. I think we are getting the hook from our producer.
We've got a meeting to get to. All right, everyone. Thanks for watching. Good luck on any earnings trades. We will see you all tomorrow. Live
on the trading floor.
Mm-hmm. Stay tuned for the boys. They've got a great show coming up.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
A rate cut's coming, but maybe for all the wrong reasons. It's Monday, November 17th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan for the next 30 minutes as we take you through this, end of trading session. It was a bad day for equities that if you were with us on Futures Power Hour earlier, that's when the selling really began. Stocks took a leg lower across the board. Volatility popped, VIX heading above 22. Only save at the end of the day was Governor Christopher Waller coming out saying that he would indeed back a 25 basis point rate cut in December, noting that inflation ex tariff inflation is still sitting there 2% annualized, that the labor market's at stall speed. He's seen enough to call it, and we do get a rebound in Fed cut odds, but not nearly enough to mask the pain because the S&P 500 is still down nearly 0.9%, the NASDAQ off by about 0.8%. The Russell is your big loser, down by 1.95% today, and it really looked weak earlier. Glad we were able to jump on that. Ilya and I find ourselves in the same boat for the first time in a little while. Yeah. Beyond there, though, we do have signs of the hyperscaler concerns spreading because now it's not just an equity speculative story. Amazon announcing another bond issuance today to go on top of the Meta and the Oracle and, the bond issuance that we've seen this year related to the AI hyperscalers. It's all part of a bucket of $1.8 trillion of issuance globally over the next year, potentially related to the build out. Does this mean that credit risk is starting to pop up if we don't get great Nvidia results tomorrow? Well, Wednesday. So that's really the week here. It's Nvidia earnings Wednesday. It's non-farm payrolls on Thursday. Dylan, you are ever the optimist, but for the non-thinking optimists among us, today was a rough session. Are traders just simply clearing the deck before Wednesday's Nvidia earnings?
So I have some bad news. I've been thinking.
Oh man, here we go.
Sorry. And the more I think we're setting up for a real face pounding around here. I think, if I was a betting man, which I sometimes am a betting man, I don't mind the idea of getting short a lot of things, or at least beginning to sort of test, like using the Spivak methodology of sort of, noodling my way into a little short position here and there and see what happens. I just feel like between the political situation, which I think is unstable in America, the price extreme, because I know the market's off whatever it is, 3/4 or 0.9% or whatever it is today. The weird reaction to the earnings that we saw a while back, the sort of weirdness with the Fed, like there's just kind of a weird mojo building up, both in terms of the price action. There's no shortage of news items. It just seems like a reasonable time. Gesundheit, by the way. It just seems like a reasonable time to get into some Ilya Spivak style short experimentation. Short, sort of call it like short curious.
Yes.
So I mean, look at these charts. I mean, it's just you're not going to get the rate cuts that you want. You have this sort of trapped house. The housing market is still kind of fugazi. It's been a few years like this, but it's really not much is happening. You're still priced for perfection, even if, again, the Russell got kicked around here, but there just seems like plenty of room, certainly to go back to, 5 or 10%, another 5 or 10% down. seems like it's very plausible.
Ilya, does this scare you that Dylan's short curious and I'm actually short as of this afternoon?
It doesn't scare me in the slightest. I mean, you look at these charts and you go, okay, now the price action is doing some real damage. It would be malpractice not to see it. It would be malpractice to say, you know what, we're just going to have blind hope that all will be well. So I'm not discouraged whatsoever. I think mine has been a difficult time this year because I am given to thought and blindly buying things at record highs, though that has been the best idea all year, starting from early April onward. It's just not my nature. And so because it isn't, and because macro is notoriously terrible at timing, what I do is I noodle on things that look like maybe are an opportunity for the macro turn, but in very small size with very, very risk-defined parameters, so that every time that were I just naked short, I would have my face pounded in, it's more like a gentle graze across the cheek. And so going back to, let's say, last week of October, I've been gently putting things on, and those things have rewarded me. And so I've put on some more, and so I've put on some more, and so I've put on some more. Probably my biggest actually risk-off exposure here isn't even in the stocks. It's in Bitcoin, because I've been building an IBIT short for a while, and that thing's been sinking.
Nicely done.
This thing has been sinking since, shockingly, Fed Day. October 29th was the day. That was the perfection that the markets didn't get. And so as we look at this now, some things are coming around. For now, I'm only exposed to S&P as far as the indexes on the short side. But as we've been talking, I got into a short in Russell through IWM puts. Again, not looking for anything crazy, just looking to start to layer things on. Because if this is really the sort of thing that I've been waiting for, which, by the way, who knows? One can wait for one of these things for a long time.
You know, Ilya, it's funny that you say you're waiting for these things, because the one thing that's been in my head, and I mentioned this on Futures Power Hour, but I've had some time to collect my thoughts on it. You can almost see the ghost of 2018 looking over our shoulder.
Yeah.
Because the fourth quarter of 2018 was really bad. The markets fell dramatically. The plunge protection team had to step in. Some folks may have not have been trading back then. So I think it's worth asking the question, are we living through a 2018 fourth quarter redux? And I think the parallels are hard to ignore. Back then in the fourth quarter, the entire market was choking on the US-China trade war headlines. Mm-hmm. Every tariff threat in Trump's first term was still hitting equities. Every escalation made global growth look a little bit softer. So here we are in late 2025. We're walking down this same road again, it seems. The names are a little bit different. The politics maybe changed, but the mechanism is identical. Spring tariffs, winter pain in the equity markets. So tariffs are on, global demand is down. The markets are obviously getting nervous here. You're seeing, just like in late 2018, growth outside the U.S. is stalling. We've seen economic data in recent days from Japan, from Switzerland, that they're in contraction. You're getting this sense that people are trying to raise capital right now because if it's Bitcoin getting punched in the face repeatedly, or even a safe haven like gold down here today, losing another 1.21% and, slipping below 40.55, which has been one of our key levels.
And for a while there, it looked even hairier than that.
Well, and back in 2018, the whole consternation was that Powell was still tightening and the market hated it because the Fed is going to overdo things as we're facing, a potential slowdown in the global economy. And it's similar enough today where it's not that the Fed is tightening, it's that they're not going to give us a potential rate cut while we're watching demand fall apart again. And the administration right now seems to think that it doesn't need to change shape. So 2018, multiples are stretched, valuations are through the roof. Today, you can look to tech and see that some corners of this market are still equally overvalued. And when growth slows with high valuations, the downside tends to bite and hurts even more. We've heard this from a number of people in the industry, like a Jeff Gunlack, who've pointed out that we're facing some situations of potentially private credit, but risk is building now because people have obviously more or less stopped looking for it. I think the lesson from 2018 is, and as someone who is trying to buy the dip on the way down throughout 2018, particularly in equities, while the plunge protection team ultimately saved the day and made life a little bit easier, it was really tough to bear that pain. And using things like simple technical filters in hindsight have helped me become a better trader and avoid that pain once more again. So I would point out that I feel like myself, I haven't had a problem like I did since the fourth quarter of 2018, where I had to grin and bear it for a long time. But I want to go back to that chart there, Ilya, because if we go back to 2018, and let's just zoom over there too far. Here you are. This is 2018, right? You get through October and the markets have this intense period of volatility before finally selling off all through December. And then finally, Treasury Secretary Mnuchin and co step in. But it feels like the loop is the same. And we now have this sprinkling, this additional layer of the hype of AI on top of it with potentially disappointing results, depending upon how Nvidia turns out on Wednesday. Am I nuts in thinking that there's enough similarity there where if we're going to try to take shots, we have to keep it real small if you're operating on the long side, because this is a market that increasingly looks like it's losing its tact?
I mean, it's certainly a reasonable analogy. Obviously, to once again paraphrase something that Mark Twain may or may not have really said, history doesn't repeat itself, it rhymes. So can you expect exactly the same types of dynamics? No, but do tops look similar, and do exhaustive rallies into tops look similar? Yes. They're kind of quiet, they're kind of meandering, relentless until they're not. And then they snap. And a lot of the ingredients, I think, as you rightly point out, are very similar. Probably the biggest thing, I mean, if we remember in 2018, that's when the Fed abandoned its hawkish bias and started to go the other way in earnest. I mean, let's remember, before COVID struck, the U.S. economy was at its weakest growth-wise in 6 years. And that's before COVID struck. We lose that a lot because, of course, then it did strike. And everything else kind of got subsumed on, whoa, Trump's economy was great in the first term, but for COVID. Yeah, not so much. Not so much, because what we ended up with was a tax cut to juice the economy in 2017, which then beckoned the Fed into aggressive hiking because inflation started to perk up just as the trade war got started, which of course crushed the economy at a time of high rates. So if that is going to bring you into analogs to today, I don't think that's unreasonable at all. It's a very similar type of situation, minus the tax cut, maybe, because at this point, all we've done is made that tax cut longer lasting. We haven't actually introduced any further fiscal largesse, though, of course, if we do with these $2,000 stimmy checks that the administration's talking about, then what have we actually solved? We've only taken away more scope for the Fed to cut, or at least put the brakes on them. And what the markets want here is for the Fed to cut. So is that going to help sentiment or hurt it?
It was Morgan Stanley over the weekend, I think, worked out the math on how much the checks would cost. The U.S. would have to issue more debt in order to provide the funding for these $2,000
This is the way.
checks. And then, like, to the point that you just raised, if you get this additional stimulus going through the economy, does the Fed feel compelled to cut rates? So if you want a Fed rate cut, you do not want the stimmy checks. Dylan, I have a number of charts that are bothering me here as I think about the market potentially looking a little bit more cautious now and certainly definitely more defensive. What's making you do your thinking these days?
I mean, on more than anything, honestly, it's been the price action. Like the fact that the price action, I sound like one of you guys now. I've obviously been hanging around with both of you far too long. But it's been the thing that changed the thing that triggered thinking is the price action. The reason not to think was because the market was saying it doesn't care perpetually about anything Trump does, whatever the earnings might be. I mean, obviously, the one exception of that is that the market has been responsive to rate cut expectations and adjustments therein. But otherwise, it's been pretty indifferent. And I just feel like the activity is more vulnerable, more fragile, more out of whack feeling on the price action vibes. And I also don't think that it's nothing. I think it's not. I think it may. These sort of big liquidations in Nvidia, even if SoftBank has a track record of catastrophes. They're not all catastrophes. I just think you're seeing some sort of individual anecdotes of liquidation in some of the Mag 7 names, or at least reduction, combined with some price instability that I think forces you to then acknowledge the underlying instability in all the dynamics that we all know about. I mean, with all of that said, odds are, if you're, buy the dip has still been the best way to deal with this market. But at some point, it doesn't mean that there can't be a bigger dip before you buy it,
Yeah. I don't know if it's the data or the charts, but when you have the banks behaving the way that they are, can't help notice, but XLF is at multi-month lows. This is the lowest close that we've seen since July. And Ilya, it doesn't take much of someone to, from a technical perspective, to say, hey, is this like a left shoulder ahead, a right shoulder up here that's forming? Which in the banks, you're talking about a loss down to potentially 48 from where we stand right now. That is in the neighborhood of a 6.5% loss further in the banks if that were to occur, right? I go over to the home construction today because today was a good day for the treasury market for what it's worth, right? Long end of the curve, yields are down. Yields are down at the long end of the curve. Fed rate cut odds rebound. What's going on with the banks? What's going on with the home builders? Nothing good. The rate sensitive things are not liking the idea that we could be getting lower rates because rates could be coming down for the wrong reason, which is that old question of ours: are these maintenance cuts or recession cuts? And given the price action,
and look at Fed funds futures too. The long end is not necessarily echoing what those are showing. We're under 50% still for this December meeting. In fact, if anything, we actually went down a little bit today.
Are we in that weird stretch where a rate cut would be hawkish, would be bearish for treasuries, and no cut is actually bullish for treasuries? Because if there's no cut, then there's no help to help resuscitate growth and inflation expectations. And no cut means growth and inflation expectations come down, and that premium gets sucked out of the long end of the curve. So declining Fed cut odds should go in hand with elevated or buoyed treasuries over the next few weeks. Yields,
especially at the long end,
right? Like that's kind of my.
It's starting to kind of. You're absolutely right. It's starting to kind of come together that way, where you look at it and you go, okay, the market wants cuts. The market is sure it needs cuts. The market still is looking at 60-odd basis points in cuts next year, whereas the Fed has only said a single cut of 25 basis points. So if you start to tell the markets you're not getting December, that's it, we're done for the year, and they want the cuts, they're just going to start to put the cuts later along the curve. And they'll show up in the long end. And so although the front end might essentially idle, the long end starts rallying, not because you're cutting now, but because the market goes, yeah, this is cute and all, but all this delay is going to mean you're going to have to cut later and more.
cut later, and more. That could be where this is ultimately heading. Gentlemen, thinking about some of the top stories of what's going on in the market today, we're seeing, as I mentioned earlier, there's this growth concern out of Japan and Switzerland that's making its way to the forefront here. I know that we're concerned about our own U.S. labor market, in particular, what's going to happen this Thursday with non-farm payrolls. Dylan, I'm of the mindset that Nvidia matters way more than whatever's going to come with the jobs data this week, because as long as the AI story is intact, then we still have the upswing potentially for at least the tech stocks as you get this jobless growth in the economy. The worst mix for me this week would be bad jobs, bad Nvidia. But if we could at least get a good Nvidia, maybe the market can handle the bad jobs, because you know what? We're going to get cheaper money to keep the AI party going.
Yeah, I totally agree with that. I mean, I believe the fundamental pillar of the not thinking hypothesis is perpetual excess performance in the AI supernova. And I think, number two to that is some version of rate cuts, and that pillar's already has cracks in it in terms of not as low and not as soon, or lower for the wrong reasons, or all the sort of lousy interpretations of what the rate cut picture is. The AI supernova still is the foundation of this entire market, as far as I'm concerned. Mm-hmm. And we already saw lousy reactions to both Meta and Microsoft and their earnings reports, even though the earnings reports, but at least from where I was sitting, didn't strike me as to be as particularly disappointing. But for whatever it was too disappointing for. It wasn't a big enough beat, or whatever, whatever the sort of superlative needs to be. And so I think it's actually critical. I think that a bad Nvidia number could in fact be the trigger for those of us who are short curious to, that could be a payday for those who are on the short side. I think a lousy Nvidia number could be a big problem.
I don't want to sound obtuse about this, but if we get a bad Nvidia number and a bad jobs report, -3% by the end of the week, -5% by the end of the week. I mean, is actually the worst mix than a bad Nvidia report plus a good jobs report, because then it further disincentivizes the Fed to give the rate cut that the market needs. Like, what's the most toxic outcome for us this week? If we want to be real bears here, what are we rooting for?
I think if you want to be a real bear here, really, you're not so much rooting for this or that outcome. You're rooting for the price action to fade positivity. So what we've seen since October the 29th, again, Fed Day, across every risk asset you can imagine. Look at Russell, look at S&P, NASDAQ, look at Bitcoin. It's all the same. It's all the same top. It's all the same letdown. So when you look at all of this, you go, okay, what's the worst here? Well, when that topping happens, most of the Mag 6, so the big names, sans Nvidia, they're just starting to report at that stage. And none of their reporting, I mean, Meta obviously had a big miss and got shellacked for it, but Meta aside, everything else was good. Tech earnings grew at an annualized rate of 27% in the third quarter, against 13% for the S&P 500 overall. The tech sector did not report bad earnings. The S&P did not report bad earnings. And the market could not use that as a springboard. Mm-hmm. So you get Nvidia this week. Possibly the most bearish thing would be Nvidia comes in within the realm of acceptable upside surprise, which is, let's say, between 4 and 9%-ish. That's been the cadence. So if you look at what Nvidia surprises have looked at or have looked like recently, let's say over the past year and a half or so, 9%, 5%, 8%, 5%, almost 10%, 9.9, 4%. So let's say we get something in the 4 to 9% range-ish. And the market goes, yeah, not good enough, and sells off. if that's how this works, that would be the most bearish of all signals. I mean, this data, this NFP data is terribly delayed. This is September. We were supposed to have seen October by now. So unless the number is so god-awful as to tell the Fed, well, October could have only been an utter disaster, we need to cut, and we need to signal that we're on and we're going to go hard next year. Because again, this is going to be a big meeting in December. Not only are we going to get the move, we're going to get a new summary of economic projections. So the Fed could really tell some things if it wanted to. It could show up in December and go, here's a cut. Also, we only said one cut next year. Here's 3 in the forecast. We're going big, baby. Everybody calm down. They could do that. And things would calm down, ostensibly, at least for some amount of time, because that seems to be everybody's concern. So does the NFP number really matter in this case? If it's not some remarkable deviation from forecasts. I mean, it's still 50K expected since the last time these numbers were supposed to come out. Nobody's updated their forecasts. I didn't even have to update my own charts. Like, let's see what they're expecting for NFP so that I can do macro money today. Oh, wait, my charts are still good. And it's been weeks. So does that really change the narrative? Not unless the number is something like 150K or 0. Otherwise, who cares? Nvidia is much more important as the sentiment signal.
Well, the data that we've seen throughout September, at least the private sector gauges, the weekly ADP numbers, those have not been good. It's a problem we're going to have to tackle tomorrow because overtime's out of time for this Monday, November 17th. We'll be back, same time, same place, 4 p.m. Eastern, 3 Central, right after last call. We'll get it right one of these days. For Ilya Spivak, Dylan Radigan, I've been Chris Vecchio. Stick around, though. Tasty Live continues after a brief break. Ilya's back. He's here with Macro Money. See you there.
See you there, everybody.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
And we fade into the close again. A difficult start for the markets here as the week gets underway. And we have quite a bit more pitfalls lining up here, with the key question, not surprisingly, are we finally looking at some sort of a lasting break? Are we finally looking at a dial that has really and truly turned from risk on to risk off? And is this now a trend in these markets that has really and truly turned to favor the downside? That's what we are going to see if we can't figure out here. This is Macro Money. I'm Ilya Spivak, head of global macro here at tastylive. And as ever, we are going to be looking here first and foremost at the price action that has given us some sort of a lead here, if we can discern it from last week, and then see if we can't make some sense out of what is likely to come next. So let's begin here with a look at last week's performance. Not surprisingly, it is a hodgepodge of all kinds of influences. The S&P ends up flat last week, at least when we look at any kind of meaningful reflection. It's very narrowly up or down, whether you look at this futures contract or that, very narrowly up or down if you look at the cash index or a CFD. But the upshot is we didn't really go anywhere. And that's, of course, after we barnstormed higher at the start of the week around the news that the government shutdown was finally going to be ended because we reached some sort of a deal. Not surprisingly, that ultimately left the markets wanting. NASDAQ actually a little bit worse off, down 0.3%. Yields up across the board, 10-year and the 2-year up by an almost equivalent amount here. So the whole curve kind of shifted slightly by just under 1.5%. Crude oil, a modest rebound, 0.6% after the 2% sell-off in the prior week. Gold manages a rise of 2.1% despite a somewhat soggy showing. It rallied on the deal getting done for the government shutdown, then came back quite a ways. And so as we looked at sort of the net result, we ended up with a 2% gain, but that was ultimately the weaker version of the outcome. We were up earlier by a larger margin before sentiment kind of came unraveled midweek. A little bit stronger for the euro. It's up for a second consecutive week, this time 0.5%. But the yen actually takes a bit of a drubbing here, down 0.7%. That seems to echo what we saw in yields. And really the most obvious, glaring anti-risk signal here, the place with the most ready conviction on the risk-off side, was Bitcoin, which fell 9.3%. And obviously after a week where it was down 5.7%, accelerated down with significant conviction. Now, with this in front of us, we begin this week, and the results are anything but encouraging. Now stocks really do start to build some downward momentum. S&P down 0.8%, NASDAQ down 0.7. This time, yields actually coming in. And interestingly, they're coming in at the long end, whereas at the front end, they're relatively steady, which gives you this sort of dynamic that starts to become familiar around the idea that the market wants its rate cuts, it thinks it's going to get them, but it's coming to terms with the idea that the main reason for this indigestion is indeed that the Fed is not going to go soon enough. So the front end, where near-term policy expectations live, it doesn't really go anywhere. But at the long end, risk aversion is starting to be the more potent force. and expectations for future cuts, as well as just a general appeal for anti-risk assets, that starts to create some demand for long-term U.S. government paper. Crude oil off 0.6%. Gold once again moving with sentiment, off 1.2%, and again painting this picture of a gold that, forget a safe haven, and it was never really that, but at the very least, not even a counter of alternative store of value, not even a counter to multipolarity risk, not even the beneficiary of a seeming sort of accumulation by global central banks amid all of this uncertainty, something that has been occurring regardless of other kind of more traditional gold factors like the direction of U.S. yields and of the dollar. Gold just becomes another speculative narrative here. Maybe not exactly the same speculative narrative as stocks. This doesn't seem like the kind of market where there's one speculative narrative. There's perhaps 3 or 4 main ones. But nevertheless, a speculative asset and a risk sentiment linked asset. That's what gold seems to be telegraphing here once again, as it did last week. So here we're off 1.2%. The dollar is up once again. Yen continues to suffer. It falls almost 0.5%. The euro off 0.25%, just about. Looking a little bit soggy, but ultimately not quite giving up its attempt at a break higher last week. So a little bit tenuous here for the euro, but we don't have it on the chart here. But the Aussie dollar lower, as if to say that those things immediately anchored to risk sentiment, they are showing the dollar to be a haven. So the Canadian dollar sees some outsized losses, as does the Aussie. And that seems to be a pattern that continues. Whereas European currencies, although they are down a little bit here, they hold up a little bit better. Bitcoin, of course, down almost 3%, and once again doing its risk sentiment on steroids thing. That's its comfortable pocket, and clearly we can see any kind of pretension to it being some sort of digital gold or digital something that isn't traditional risky assets. That's obviously not what it seems to be doing here. It clearly has been the most deliberately potent, the most convincing reflection of risk-off sentiment really over recent weeks. Going all the way back to October 29th, the day the Fed told everybody that their expectations for a December rate cut were wrong. And that, of course, is really the essence of what we're watching here. And if we look at the likelihood for what comes next, not surprisingly, the market still has this architecture that we discussed last week, where we seem to have confusion as the order of the day. So it'd be one thing if what this market said was we are 70-30 not going to get a rate cut. We are 80-20 not going to get a rate cut. At least the market would have some semblance of conviction. But that is clearly not what's going on here. At almost 50-50, we are looking at a situation here where the market is confused about what the Fed is going to do next. And that is certainly not terribly helpful here to give the markets some confidence about what they ought to be doing next. Now, as far as event risk is concerned to drive this narrative in the week ahead and sort of to propel what might be going on here, the first thing immediately on the docket is a very busy economic calendar. of Fed speakers. And of course, on Wednesday, the main event is going to be minutes from October's meeting where, not surprisingly, we got our cut. But that was, of course, the fateful day that Powell came out after the sit-down and scared everybody half to death. Incidentally, that's the state we've been in. What did Powell do? He came out and said, look, I know I come out here every single time and I tell you all that policy is data dependent. It's not on a predetermined course. But let me just say, I'm saying more than that here. A December rate cut is not a foregone conclusion, far from it. And when he said all these things, the likelihood of a cut was in the upper 90s. And obviously, if we look at it here, it has come a good long way from that level of conviction. So, of course, these minutes are going to be a critically important sort of a thing to see what was it that so spooked the Fed. Was it just the government shutdown and the lack of data? Why the loss of conviction? After all, the Fed did begrudgingly signal there would be 3 cuts in September. Now, I say begrudgingly because this was really a forecast arrived at by a hair. This was the first meeting in September that Governor Stephen Miran took part in. And of course, he is sort of famously on loan to the Fed, to put it generously, from the White House, where he is still chairman of the Council of Economic Advisors. And so it's not as if his perspective isn't something that is relatively predictable. He, of course, was going to be very dovish because that is the administration's perspective, and not in small part because he is part of the brain trust at the administration that is telling the president what is the course of action to be looking for. So, not surprising, but that 3-cut forecast that we see there for 2025 from 4.4 down to 3.6 on the median trajectory, that's really skewed by the Stephen Miran dot on the dot plot. The overwhelming majority of policymakers were of the view that 50 basis points is enough cutting for this year. And that's perhaps where we might end up. So maybe Fed policymakers are not so terribly different in their thinking. Obviously, all the comments that we've had from Fed officials have generally fallen within familiar bounds. Governor Miran has been dovish, as is his argument for months now, and other policymakers have been less dovish. And what seems to be the key insight here that we need to arrive at is just how concerned were these Fed officials, just how much fog are they prepared to tolerate, and how much won't they tolerate. And so how likely is a move in December absent the depth of data that they want versus how likely is it that they pause? And that's why these minutes are going to be very critical. But of course, going into it, and I've highlighted the voters here in yellow, those are the people actually voting on policy this year, we are going to have some incremental signals here. We got one from a whole host of policymakers today. We started with Governor Jefferson here. He came out and basically took the more hawkish view today, saying it's still not clear how much data will be ready ahead of the December 10th meeting. Current policy is still somewhat restrictive. The balance of risks has shifted in recent months. We know all of this so far. But what we still see here is that, according to him, we need to proceed slowly. In other words, he might be on the side of a a pause here. Then, of course, we got comments from Governor Chris Waller. He's sort of famously wanted a rate cut earlier in the year and was dissenting as recently as July. Today, he again starts to talk up rate cuts. That's not really surprising. And so far, so good. Not really anything here that necessarily changes the landscape, but we have plenty to look at for the remainder of the week to see what all of this might evolve to look like. So there's still plenty to look for as far as these comments, even around the FOMC minutes. Then, of course, we got the special dispensation of an NFP report. That's going to come out on Thursday. This will be a backfill of September's data. Expectation is for a 50K rise, with the unemployment rate stuck at 4.3%. We'll see if we even get the unemployment rate number. The president has intimated maybe we won't get that, as has White House Press Secretary Caroline Leavitt. So unclear what this changes now, because this is relatively stale data, but we will get it, and we'll see if the markets see something that's relatively in line with expectations as making any kind of a difference in the near-term Fed calculus, because the data is so stale, or not. Then on Friday, we are going to get a timely look at global growth dynamics with the latest update of S&P global PMI numbers. And not surprisingly, because the global economy essentially rests on a pillar that is the Eurozone, China, and the U.S., taken together, they account for well over half of global growth. And so as we look at this then, we might see greatest interest in what the Eurozone has to say, and as well as, of course, the U.S. The expectation for the U.S. is we're going to get a little bit of a move back in the pace of growth, but ultimately that things are going to be relatively even-keeled. Manufacturing only a little cooler, services only a little cooler, and so the overall composite only a little bit cooler. So we'll see to what extent this makes a dent. This, of course, has been continuous data, not subject to the government shutdown. So maybe we'll get a decent lead on Fed policy expectations there. So we can see the U.S. economy has been relatively well anchored here in recent months, looking at this data. Then finally, on the earnings front, of course, the main story is Nvidia. The expectation is that we're going to get a result that is $1.25 per share, and we can see the range for surprises has been kind of roughly between almost 10 and 4%. So that's sort of what we're looking for here, is will Nvidia, at the very sort of least, give us something like a surprise on the upside. And what that would mean relative to how it's been is an EPS of greater than, let's say, $1.38. So a 10% surprise relative to expectations would be $1.37, $1.38 or so. If we can do better than that, then Nvidia looks like an upside surprise, and maybe we get a little bit of a reload on AI optimism that gives this market a little bit of a leg to stand on. But nevertheless, it's important to remember here, since October 29th and onward, what we've seen is the market shrugging off positive earnings results from the tech sector, which on the whole have looked quite good. Here's a summary from FactSet. We can see tech earnings have been growing at 27.3% year on year in the third quarter, relative to about a 13% earnings growth rate for the overall S&P. Now, first of all, that's impressive for the S&P. And second of all, that's doubly impressive for tech. So it's not as though we're getting bad results here on the earnings front. It's not as though upside surprises aren't occurring. It's not as though these are numbers suggesting that something awful is afoot. So the real question with Nvidia is, what do they need to do for anyone to care? Because so far, the market has been shrugging off this kind of data. Moreover, if we get a soft S&P result, S&P PMI result, or we get a soft NFP number on September's backdated release, what does that mean for Fed policy expectations when we are already looking at 66 basis points on the menu for next year against just 25 basis points that the Fed itself has forecasted? We're already looking at something much more dovish here. So what would we need to see for the market to give this some positive credence? Probably we would need to see something either so god-awful on the data that December would be forced back onto the books by default, or something so incredibly robust that skipping December wouldn't look like a bad thing. It would look like the only plausible thing one might do for an economy that's heating up. But of course, as it stands, both of those are inherently unlikely outcomes. Both of those are on the tails of the distribution. So far, the story has been the market doesn't care about relatively chipper tech earnings. The market doesn't care that the U.S. and China have found a way to at least somewhat cool their trade war. The market doesn't care that the government has been reopened. The market wants December's rate cut. And not only is it that it's not sure it's going to get it, it's much more sinister. They don't know what they're going to get. And that's an environment that's fueling risk aversion. And so if we look at what's been happening here, here's been these rate cuts. And we can see that since the last one, this is October the 29th, when the Fed makes its stand and Powell comes out and says all those things that he said to beat back December rate cut expectations, stocks have stopped rallying since then and have been basically stuck. The dollar has attempted to rally since then. It's been a little bit soggier lately as that sort of resilience in the euro and the pound have suddenly emerged over the past week, but the general trajectory really since the lows in mid-September has been higher. And so perhaps the dollar is just early and has been more so willing to digest in recent days, and maybe this rebound is just getting going. With that in mind, the exposure that I have on here is kind of two minds now. I'm still a little bit long gold. I don't think it finally crossed any Rubicons today, though it really tried. And so I'm still holding out for maybe we bottom right around here. I'm not really risking a terrible amount here because I'm long from levels that are only a touch higher than where we settle today. So I'm standing aside and letting this have some air to figure its way. I am now short the Aussie, even though I am long still from last week, the pound and the euro, which aren't really making much upside progress since I got long. So my leash on these things is very short, and I'm going to be watching very closely, and I'm going to stand ready to flip them the other way. But I still have exposure short the yen on the spot side of things, and I still have, now I have this short Aussie exposure, all of them kind of reflections of a dollar that isn't one-sided and isn't uniformly weak. Still short Bitcoin. That's been working, and I've added a little bit more duration here. I've layered into this position a bit. I am now short not just the S&P through these put verticals, but as of today, I've also put on a put vertical in the Russell through IWM. 60 days on this, so giving myself lots and lots of time for this thing and diluting exposure to Delta as much as is reasonable to see this develop lower, hopefully without too much upfront exposure to Delta and too much upfront exposure to a bounce in the event that things get a little bit feisty here before Wednesday's big event risk with the FOMC minutes and Nvidia. And still long the bonds. I've added a little bit of duration here. I had one that was expiring within just 7 days as of the end of last week. I extended duration on that out to 60 days. Took a little bit of a loss there of less than 1% of equity. And still short oil, which is begrudgingly trying to grind downward, so I still have my put verticals there. And that is macro money for today. As ever, we are here Monday through Thursday, right after overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things might go therefrom. Also writing for the news and insights portion of tastylive.com, commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.